Dear friends, welcome back to Shaza's virtual classroom. So today we'll discuss practice questions from chapter 1, Catherine Gogo. So these are the questions. So what I advise you, so before starting to look at the answers, please try working out the questions on your own so that you can cross check with the answers later on. So it will be like your concept will be clear. So first question. Which statements about bookkeeping and accounting are correct? Okay, so which statements about bookkeeping and accounting are correct? So first you try on your own, then you can cross check. Okay, accounting is dependent on the accuracy of bookkeeping records. As we already discussed, accounting is dependent on the accuracy of bookkeeping records. Correct, because bookkeeping is primary aspect. Bookkeeping is bookkeeping is primary aspect. So after bookkeeping is done, if the bookkeeping is correct, then accounting is based on this. So this is correct. So accounting takes place periodically rather than each day. Normally it will take place like after every 6 months, or 9 months, or 1 year. So this is also correct. So bookkeeping includes recording financial transactions. Obviously, it includes only financial recording financial transactions, not other than financial transactions. They are not recorded at all. So bookkeeping includes the preparation of statement of financial position. No, that is the job of accountant. So it is not the job of bookkeeper. So one, two, and three. This is the correct answer. So next, which of the following best describes a statement of financial position? A calculation of the total amount owed to the owner of the business. Okay, this is also correct. The calculation of total amount owed to the owner of the business is correct. A list of assets, liabilities, and capital of a business on a certain date. This is also correct. A list of everything owned and owed to a business. This is also correct. A summary of money paid to and received by a business. This is wrong. So which one of the following? Which one of the following? So any one. So it is a list of assets, liabilities, and capital of a business on a certain date. So this is the best answer. List of everything owned by and owed to a business. Owed to a business. Not only owed to a business, it includes owed to a business also. This is correct. See, very carefully you have to be very careful. Okay. So a calculation of total amount owed to the owner of the business. So it does not show any calculation, just it shows so a list of assets, liabilities, and capital of a business on a certain. This is more appropriate. A list of everything owned by and owed to a business. No, no, no. Everything owed also is given. No? So owed. It is owed by, not to. So be careful here. Owed to. Okay. It is owed by a business also. If that was there, then it was correct. A summary of money paid to and received. No, 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 no. This is wrong. So this is the most appropriate answer. Okay. So next. A business has 6,250 in its bank account. The following transactions took place. Obtain a 3-year loan which was paid directly into the bank. Okay. So purchased office equipment and paid by check 2,000. Sold goods on credit 1,050. How much was there in the bank after these transactions? So basically, you need to calculate the bank balance. Bank balance. So it had 6,250 in its bank account. It already has 6,250. 6,250 is already there. So obtain a loan which was paid directly into the bank. So it will add up 5,000. It will increase. Bank balance will increase. Purchased office equipment and paid by check. So you are making the payment. Money is going out. So sold goods on credit. This has nothing to do with you are neither receiving cash nor paying cash, or nor you receiving check nor you are paying check. So that's all. So this net amount. So what is the net amount? 6 plus 3 is 9,250. So 9,250. So 9,250. This is the correct answer. So this is how you have to carefully. Okay. So this is the calculation of bank balance. What is required? How much was there in bank after this transaction? 9,250. This is the answer. Next. A trader provided the following information: property 88,000, inventory 19,300, trade payables 25,250, trade receivables 27,420, fixtures and fittings 31,300, loan from bank 60,000, cash at bank 3,170, motor vehicle 18,360. Calculate the value of the assets. So what are the assets? So this is an asset, this is an asset, trade receivables also is an asset, furniture and fixtures is also asset. Cash at bank is also an asset. Motor vehicle also is So property is something we have, inventory is also something we have, trade receivable is something which is owed to us, which is owed to us. That is business. So always you have to see from business point of view. Okay. So owed to us. So fixtures and fittings 31,300, cash at bank 3,170, motor vehicle. So you have to add all this. So 88,000 plus 19,300. Let us just check 88,000 plus 19,300 plus 27,420 plus 31,300 plus 3,170 plus 18,360 187,550 187,550 187,550. This is the answer. Calculate the value of the liabilities. Liability is something which we pay to the outsiders, which we have to pay to the outsiders. Okay. So this is one, this is the other. So only two things are left. So 25,250 plus 60,000. So 85,250. 85,250. So this is liability. This is liability. This is something we have to pay back. Loan from bank is something we have to pay back. This is what we are owing to the outsiders. We have to pay back this. Calculate the trader's capital using the accounting equation. So this manner is simple. Assets is equal to assets. So we have to subtract this from this. So we get accounting equation. So how do we calculate assets is equal to liabilities assets. So capital is equal to assets minus liabilities. So this is the accounting equation, right? So what is the other way we write? Assets is equal to liabilities plus capital. Assets is equal to liabilities plus capital. So how do we calculate? So 187,550 minus 85,250. So 102,300. 102,300. This is the trader's capital. So this is the end of question 4. Okay, so practice question 4. So now let us see question 5. So what does it say? Copy the following table and complete it. Show the effect of each of the following transactions. The first one has been completed as an example. So motor bought a motor vehicle and paid by check. So what is happening? Effect on liabilities, you have to write effect on assets and effect on liabilities. Okay, so bought a motor vehicle and paid by check. What is happening? Motor vehicle is coming in, so motor vehicle is increasing, and the bank balance is decreasing because money is going out. So next one, paid a credit supplier from the business bank account. So what is happening here? So supplier is a liability. Liability is coming down, and bank account is also coming down. So there is decrease in bank balance, and there is decrease in creditor also supplier. So what is happening? Bank bank is bank balance is decreasing. So what is happening to affect credit supplier? Credit supplier is decreasing. So asset is also decreasing, liability is also decreasing. So next, C, received a check from a credit customer. So what is happening here? Money is coming from a credit customer. So there was money that was receivable from a person and the money is coming in. So what is happening? Bank balance is increasing. Obviously money is coming in, bank balance is increasing. So but credit customer what he is doing? He is giving us. Credit customer is paying us. So this will decrease. Credit customer will decrease because he has paid the money. So it will decrease. No more. The money has to is no more receivable from this guy to that extent. Receive a check from credit customer. Sold goods at cost price and received a check. Okay, so what is happening here? What is happening here? Bank balance is increasing. Bank is increasing. Bank balance is increasing. Why? Because we are selling. Okay, received a check from sold goods at cost price and received a check. So effect on liabilities. There is no effect on liabilities because it is sold at cost price and received a check. So inventory is also an asset. So inventory is also coming down. Inventory is decreasing. Why? Because when we sell, the goods go out. The merchandise will go out of the business. Paid off a loan by check. Okay, so what is happening here? Paid off a loan by check. Money is going out. So bank is decreasing. Bank balance is decreasing. Bank is decreasing. So loan by check. Loan is a liability. Loan is decreasing. Loan is also decreasing because we have received the money to that extent. The liability has come down. Simple. Okay, very simple. So it's very easy. So done. So this is the end of question 5. So one more question is there. So which is question number 6. Sam provided the following list of assets and liabilities on 31st October 24. Machinery 30,000, furniture 50, 8,500, inventory 6,100, trade receivables 4,950, cash at bank 9,860, trade payables 5,110, capital is how much? So we need to find out what is capital. Calculate Sam's capital on 31st October 24. Prepare Sam's statement of financial position after the following transactions take place on first number 20-4. So we have to find out Sam's statement of financial position. So we have to prepare statement of financial position after the following transactions has taken place. So now, so these are the transactions: paid 2,150 to a credit card supplier from a business line account, received a check for 450 from a credit customer. So a loan of 9,500 was paid directly into the bank account. Paid 8,700 by check for an additional machine. So what you can do, you can try working out this problem on your own. So as an assignment, so we will discuss this problem in the next class. So you try on your own. See what most of the students they do. They try to see the question and they see, immediately they see the answer and they will try to find out. That way you will not learn anything. Okay. So what you have to do is you have to put it on the pen and paper. You have to try working out on your own. That is the effective study. That is the way you learn actually. So if you try to see the answer and then if you try to do nothing, you will not get anything. You will not get the logics. You will not understand the concept. So you will finally get stuck in the examination. So when in the examination you will get stuck. Don't do that. So that is a very bad habit. Okay, so never do that. So you have to try. Now this is the question I am giving. So try. So this question is there in your textbook also, right? So you try working out this question on your own. Try to see whether you can do it or not. So where you see where you are getting stuck, where what is your problem, what you could not do. So all these things you have to analyze. Then you have to improvise yourself. You have to correct yourself. You must be knowing most of it, but you will get stuck at one or the other place. So what you have to do, you have to try working out the entire problem A to Z. Even if one step you have not understood, you leave that. So next step, you go to the next step, you do it. So afterwards, again you cross check, once again you check. Then you look at the solution, then look at the answer. If you do, even if you don't get, then you think. So this is the way you have to learn. If you just copy, if you are not going to get anything. So be careful, okay? So we'll catch up in the next class with question number 6. So the same question will be just continue in the next class. Okay. So till then, have a good day. Good night. कौन हो? हाँ, क्यों? क्या हुआ? क्या? नहीं, फिर क्या होगा? इसका ही बोलते हैं। हाँ?
क्या के बाद ना डॉक्टर बोले अभी महीना देखो एक बार मन होता नहीं
वैसा कैसा करते जी?
क्या है
क्या तब हेल्थ को क्या तब इफेक्ट है कि
सब
अंदर क्या तब इन्फेक्शन क्या तब ये और फिर तुम्हारा भानिश ना जन करे समय बोला सच ना एक महीने बाद जाओ जी
क्या लाइफ दलनी
हाँ
लाइफ दलनी
क्या बोले
लाइफ दलनी
हाँ जी लाइफ डालता सच में
ये करता है ना तो नहीं चाहिए करता है कितना बार बोलते
नहीं क्या तब इफेक्ट रहेगा ना कुछ भी
करता है बस पहले दो बार करते थे नहीं वैसा करना
देखो आपा क्या बोलती है आपा क्या
बोलते हैं तुम्हें क्या करती हूँ
सुबह को क्या चिल्ला ना चिल्ला घटा है क्या
हम सबको नहीं है एक दो चिल्ले होती है टच में नहीं कर रही हो फिर मंजे में तो जो
गेहूं के चिल्ले डालो कर बोला
गेहूं के
आपा भी खाती है पसंद से कुछ आपा गेहूं के चिल्ले डालना की रोटी डालना क्या बोलती है रोटी करते रोटी डालना चिल्ले
सुबह मेथी कटे बनाने लगी मेथी बची चुके भी हो जाती है और चिल्ला लाओ खाना बनाने
हाँ कौन सी बारिश में भिक्चर तुमको बुलाया सो
क्या क्या कराने क्या ये कौन जाएगा कराने
करे तो भी क्या किसका भी चलता नहीं जाओ किसका भी कैप चलता नहीं जाओ कौन क्या करता है लेडी डॉक्टर हत्या पर्पस काय केना काय सर मतलब लेडी डॉक्टर का नहीं देखेंगे ना
नहीं वो पर्सन चेक कर रहा है
वो खैर जाओ क्लास में बारिश आ रहा है टुवाल और लग जाओ टुवाल और लग जाओ जी मैं है क्या आप ले लगा तुम टुवाल और लग जाओ नहीं मैं इसे ये क्या है वो लगा तो जाओ Dear friends, welcome back to Shasha's virtual classroom. So today we will discuss chapter 1 practical question 6. Okay. So Sam provided the following list of assets and liabilities on 31st October 24. So machinery 30,000, all these things are there. So calculate Sam's capital on 31st October 24. So, to calculate the assets, to calculate the capital, we need to find out assets. What are the assets? This is an asset, this is an asset, this is an asset. This is also asset. This is a liability. So all these are assets, right? So all these are assets. All these are assets. So this is a liability. So we add. So 30,000 less 8,500 less 6,100 plus 4950 plus 9860 59,400. So here, so this is 500. So what is the capital? Obviously 59,410 minus 5110. So capital is 54,300. Okay. So capital we have found out the capital. Now we need to prepare Sam's statement of financial position after the following transactions took place on 1st November. See, all the transactions have taken on 1st November. So on a single day, all these transactions have taken place. So we can just calculate this very easily. We can calculate. So what do we do? So we write down all the items here. Assets. So we write down all the assets here. So what are the assets? Machinery, furniture, and things. So machinery, all these things are there. So let us see what are the transactions that have taken place. So on 1st November, so this is on 31st October, right? So this is on 31st October. 31st October. On 1st November, what is happening? On 1st November, what is happening? Pay 2,150 to a credit supplier. 2,150 has been paid. 2,150 has been paid to credit supplier liabilities. How much was the amount due to credit supplier? 5110. 5110. So from this, 2150 is gone. Okay, so this is come down, this is come down. Okay, next. So you can calculate the net amount afterwards. Received a check for 450 from a credit customer. Received a check from credit customer 450 plus 450. So credit customer will come down. So credit customer will come down by 450. Next. A loan of 9500 was paid directly into the bank account. 9500 loan. So loan has arisen. So there is an increase in loan 9500 and bank balance has also increased by 9500. Next, paid 8700 by check for an additional machine. So machine check also, machine also 8700. Check also is coming in. We have paid the check, so money has gone out and machine is coming in. So machine is coming in. So where is machine there? How much? So 8700. 8700. So 8700 worth of machine is coming in. But what is happening to bank balance? Bank balance is going down. So 8700 money is going out. So what is the net amount? Net increase or decrease? Net increase or decrease? So 30,000 plus 8700 is 38,700. 38,700. So furniture and fixture is same, there is no disturbance. 85. So inventory is same 6100. So trade receivables 4950 minus 450 is 4500. 45. So what has happened here? Let us check. 9860 9860 minus 2150 plus 450 plus 9500 minus 8700 8960 8960. So what are the total assets now? 38,700, 8,500, 6,100, 45, 66, 760. This is next. So here liabilities is, so this credit supplier is 5110 minus 5110 minus 2150 2960 960. This is 9500. 9500. So total liabilities is, so total assets is this double under 9. Total liabilities is this. So that is 2960 plus 9500. 12,460. 12,460. So what is the capital? Capital will be this minus this. So capital will be 66,760 minus 12,460 is 54,300. 54,300. There is no change in capital account. So total assets plus liabilities, assets liabilities plus capital is again. So if you add 66,720. So total liabilities is, the total assets is, total liabilities plus capital. Total assets is this. So that's all. So how do you write the statement of financial position? So first you need to calculate all this. So statement of financial position is just the same thing. You have to rewrite the entire answer, these figures, these. So statement heading, statement of financial position. So then we have to write down all this. So how is it? So okay, so first you finish this, then we can do statement. I will show you how to do finance statement of financial position. First you have to finish all these workings, so everything should be clear. So first you do this, so this is done. So then statement of financial position. Statement of financial position on 1st November 20. So this is how statement of financial position should appear. So we have read the assets here, the same thing, the entire list. So all these assets one by one, then whatever liabilities, then capital. The same way, the same thing, you have to rewrite again. So statement of financial position on first number 24. So assets, machinery, 38,700, furniture 8,500, inventory 6,100. So trade receivables 4,500, cash at bank 8,960, total assets is 66,760. So then liabilities is credit supplier 2,960, bank loan is 9,500. So capital is 54,300, total liabilities plus capital is 66,760. So assets is equal to liabilities plus capital 66,760, 66,760. So this is the end of this lesson. So next lesson we will continue in the next class. Till then, have a good day, good night, take care, bye bye. Right? So cash discount of 2% is nothing but
So what is the gross profit? Minus 42,000. So this is the gross profit. So to this we have to add other income. So let us see if there is any other income here. So okay, so there is no other income. So other income will not come. So if you want, you can just write and leave blank. Add other income. So when you are learning, you can just write so that you don't forget in the exams. So you can miss out and again you have to scan and then you have to do a lot of research. So on that side, it's better if you make a practice of writing this and you write it as zero because there is no other income. So now overhead. What are the overhead expenses? So let us see. Wages, rent, heating and lighting, advertising. Wages, rent, heating and lighting. Wages, so wages is given under 4,000. Other operating expenses 2010. Loan interest. click up. Okay, 100 plus 4,000 plus 5,020 plus 400 plus 4,000 plus 50 will be equal to 16,000. 16,000. So these are all overhead expenses. So minus 42,804. So 25,900. 25,900. So what is this? This is nothing but profit for the. Okay. So this is how you. So very simple. This was very simple question, very simple topic. But going forward, you will have a lot of adjustments. You have to. This problem will not be simple. But if you remember the steps, you can just increase the learning speed. So incremental learning. So you can learn, add more concepts into them. So prepare at least income statement for there. Keep your answer. It will be needed again in chapter 8. So the answer you need. So answer whatever you have got is required to us. Next lesson is statement of financial position. So in statement of financial position, we need to add the profit whatever we have. So profit whatever we have got, we need to add. So that's why that's very much important. So the balance sheet we have to represent. So that's why it is. The next let us see. This is finished. We have completed one question. So let us see the again question. So the trial balance extracted from the total at 31st March 2016 is as follows. Sales 24,000. Sales returns 3,600. Purchases 1,20,000. 120,000. Purchase returns 4,400. Purchase returns 4,400. Inventory 18,000. Carriage invoice 5,000. Carriage outwards 3,724. Discount received. This is other income 3,060. Discount allowed 5,050. Wages 36,800. Rent 8,000. Heating and lighting 6,450. Other operating expenses 1,450. Fixture and fittings 9,000. Market furniture 2,000. Limited vehicles 1,900. 2,030. Land balance 2,496. Bonds 7,000. Capital 30,000. So during the declared taken goods costing 2,000 for his own use. So this will come as a deduction from cost of goods sold. These are not recorded in the books of the books. Inventory at 10th December 2016 cost 20,000. Prepare Nicholas income statement for the year 31st March 2016. Keep your answer. It will be I needed again in chapter 8. So hopefully I think you can do this problem on your own. So if possible, take the screenshot of this question. Take the screenshot of this question and put efforts. Try to do it on your own. And if you don't get this, please let me know. I will do it. We will do it in the class. So otherwise, it will be assumed that you have understood. Then we have got. We have completed. So then we proceed to the next part. So I will give some time. Just take a screenshot of this question. So next class we will do exam practice questions. So please let me know if you have any doubt in this question as a comment. So we will have separate class or I will just explain to you whatever doubts you have. So till then, bye bye. I good day. Good night. So dear friends, welcome back. Welcome back to Shasha's virtual class. So today we will discuss exam practice questions from income statement. So this is income statement. These are the questions from income statement. So we will discuss similar questions might have come or expected to come in AS level question papers. So let's discuss this question paper. So what you can do is you can take the screenshot of this, take a picture or try to answer yourself. So then you can continue and just check whether everything has been done correctly or not. So which of the following does not appear in an income statement? So which does not appear? Carriage account expense will appear, carriage allowed, discount allowed will appear, discount given will appear. So motor vehicles will not appear. So motor vehicles is an asset. So this will not appear. So the following information has been expected from the trial balance of business. Sales 1 lakh, purchases sales 100,000, purchases 60,000, wages 21,000. Closing inventory was 3,000, more than opening. Okay. Closing inventory was 3,000 more than opening. So 1/3 of the wages was charged to cost of sale. 1/3 of this 21,000. Nothing but this answer 7. So cost of sales in the trading section of income statement. What was the gross profit? So they are given sales. So let us do sales 900,000 plus. So this is just working. So we can do here. We don't have to follow the rules like cost of sales or anything. So this is just to calculate. So if you want, we can just write cost of sales. So opening inventory minus closing inventory is 3,000. It is more, right? So first is opening inventory. We don't know. So we'll keep it in pending. So purchases 60,000. Wages 7,000 to go in trading account. So that is the cost of sale. So wages. So then what to do here? Opening stock is not given, closing stock is not given, but difference is given. So if you recollect, opening stock, opening inventory will be added, and closing inventory will be subtracted. So since the closing inventory is more, so we have to subtract the closing inventory. So closing inventory. So 3,000. So please don't get confused. The concept is not clear. So just know this cost of sales, whatever opening inventory, purchases, less purchase returns, less wages, minus closing. Okay. So purchases is given, purchase returns are not there. So wages is given. So then opening inventory they are not given. Closing inventory was 3,000 more. So that's why we are saying. Okay. So since we have to subtract, since it is more, So this is positive, this is negative. So plus minus. So whichever is better, this is better. So that's why we are taking this. So it is 67,000 minus 3,000 is 64. 64,000 is cost of sales. So therefore the gross profit will be 36. Okay. So next. The carriage incomes of business amounted to 6,000 and the carriage outward was 7,000. The carriage outward was charged in trading account. So this is a mistake. So it cannot come in trading account. Not come in trading account. Of the income statement in error and the carriage outward was debited in the income statement. Or carriage outward was debited in the income statement. Okay. So what is the carriage? Carriage outward is 6,000. Carriage outward is 7,000. The carriage outward was charged to trading section in the income statement and the error. So what has happened? Cost of sales. Dear friends, the third one, the carriage inward of a business amounted to $6,000 and the carriage output was 12,000. The carriage output was charged in trading section of the income statement in error and the carriage inwards was debited in the income statement. What has been the effect of these errors? So the carriage inwards. Okay, see here. The carriage inward 6,000. Carriage output is 7. So what is the rule? The rule is carriage inward should be considered as part of trading section. So that is called part of cost of sales. But here what has happened? The carriage output was charged in trading section. They should not come. Carriage output was charged in trading section. So carriage output was how much? Carriage output is 7,000. So this is 1,000 more. So what has happened? So if it is 1,000 more, then gross profit will be understated or overstated. So I want you to be clear in this. So see whether it is carriage inward or outward, there won't be any effect. So for the profit for there won't be any effect. So this is correct and this is correct. But we have to see among this which one is correct. So don't try to answer the question with the trial and error method. So try to understand the question. So work out. Take some minutes. So it's small time, a bit of time. So just to understand the question. So third one. So let's assume sales. Let's assume revenue as 90,000. Let's assume this is just assumption. Okay. So less cost of sales. So assume purchases as 40,000. So now what you have to do? Carriage inward is 6,000. Okay. Carriage inward is 6,000. So this is the actual treatment. So what should be the profit? So 90 minus 46 is, so 90 minus 40 is 50, 50 minus 6 is 44, 44. The gross profit should be 44,000 if the actual treatment is done. Now, this is the correct one. The correct. So now the wrong. So what has happened? So revenue is 90,000 itself. Cost of sales purchases is also 40,000. What they have done? Carriage inward. Instead of taking carriage inward, they have taken carriage out. Carriage outward they have taken the 7,000. So what has happened? So this is carriage out. So 90 minus 40 is 50, 50 minus 7 is 40. The gross profit is showing more or less because of the wrong error. Gross profit is showing less because of the wrong treatment. The gross profit is understated. Gross profit is understated by 1,000. See, this is how you have to confirm yourself. See what happens, most of the students, because of hurry in the examination, they hurry, and because of this they commit mistakes. So they try to answer it in a trial and error way, and easily they will lose. So never do that. So hardly it will take 1 minute to confirm yourself. So it is understated. So the correct answer is understated the one. So now we are double sure. So we have checked the figures and we are double sure. So this is the. So this is how we have to do this type of problems when there is a bit of confusion. So you have to confirm yourself whatever you are doing is right or wrong. So next one. So what I suggest you is, always when you are doing the MCQs and whenever exercises are given, always you have to try solving on your own. Just see the question. Try stop the class. I mean stop the video. Pause the video. Just try to work out the answer on your own, and then you compare with the actual solution, so that you are then only the learning will be more effective. Otherwise, the learning will not be effective, and ultimate result will not. You will not get the ultimate result. Okay, so never do that. So please follow my instruction, so that the purpose should be served. Don't waste time unnecessarily by trial and error methods. Okay. So now come to the next one. So let us see this one. Discount received amount to 10,500. Okay, discount received 10,500. Discount allowed 13,000. So the discount received has been debited. Discount received has been debited. So what we have to do? Discount received should be credited, right? But they have been debited. Okay, and the discounts allowed have been credited. Discounts allowed here should be debited because it's in loss, it's an expense. So it should be debited. So this is wrong. This treatment is wrong. This treatment is wrong. Okay, in the income statement, what has been the effect of errors on the profit for the year? So was understated, overstated, understated, overstated. So don't try to answer this the hanky-panky way. So let us see. Let us review, and we will do the problem. So then the concept will be clear. So 4,000. So 4,000. So profit before discount. Okay. This is the correct profit before discount. So let's assume it is 40,000. 40,000, 40,000 in both the cases. Then we will do the actual treatment. Okay, so we will do the actual treatment. So we will deduct discount allowed. Because discount allowed should be deducted right from the profit, because it is an expense, so it should deduct. So what is discount allowed? Discount discount allowed is 13,000. Discount allowed is 13,000. So what we have to do with the discount received? Discount received we have to add because it is an income. Discount received we have to add because it is an income. What is the discount received? The discount received is 10,500. So this should be subtracted and this should be added. So what will be the net profit? So what should be the net profit? 37,500. See, this is just assumption. Okay, so we are assuming that this is the profit before discount. So this type of columns we have to do this way so that the understanding is clear, so that we are sure what has happened and what is the effect net effect. Otherwise, don't try to do some wrong methods, wrong calculations, and try to ultimately. So whatever method you do, ultimately you have to get the correct answer. So that is what it is. So what has been done? Actually this is the right one. So this is the right one, and this is the wrong one. So what has happened? Wrong one what they have done? They have deducted 10,500 and they have added 13,000. So then what will be the profit in this case because of the wrong profit? 40,000 minus 10,500 plus 13,000. The profit will be 42,500. 42,500. So it is more. The profit is more. Okay. So it is overstated. It is overstated. Overstated by how much? 42,500 minus 37,500 is 5,000. It is overstated by 5,000. See the concept. You are double sure now. It is double sure. It is certain. There is no hinky tanky. Like you are not trying to guess and write the answer. Never do that. Never do that. Okay. So never do that. So the answer is overstated by 5,000. Overstated by 5,000. Okay, so this is how you have to do. What a lot of the students they do because of hurry, because of the exam stress, they will just try to guess and they will ultimately put either of this one and ultimately they will lose marks. What is the purpose? The entire year you have put efforts and because of some small mistake you will lose marks. So please don't do that. So please be careful. So please learn the ways and methods how to actually get the answer. Now, carriage inwards in a trial balance is 2300. Carriage inward in a trial balance is 2300. It has been entered in trading section of the income statement. Again, trading section has 34. In addition, motor expenses of 600 has been posted to the motor van account. What effect has this on the income statement? So again, we'll not just do it. We'll not just try to do blindly. We'll just try to analyze by understanding the question carefully. So we'll just do it again here. So again, income statement. So let's assume profit before these frequencies again 90,000. This is right. This is wrong. Okay. So what has been done? Carriage inward in a trial balance is 2300. Carriage inward is 23. it has entered including section of income statement and 32. Wrong statement. What we have done? We have taken this. Yeah, next one. Motor expenses of 600 has been posted to the motor van account. So motor expense is a expense. So it should go to reduce the profit. So motor expenses 600. But what they have done? Motor expenses have been posted to the motor van account. It has gone to motor van account, means it has not been shown in income statement. So it has not been shown in income statement. So now let us see. So what is the right thing? After if you do the right one, so it will be 90,000 minus 2,900. 87,100. So 90,000 minus 3,200. 86,800. So the profit is understated. So what has happened? The profit is understated. It is understated. It is less, no? So it should be more. The profit should be more. But the profit is less. The profit is understated. So what is the profit? It is understated. Understated by how much? 87,100 minus this one is 3. Understated by 3. Understated by gross profit. So the profit, okay, so this one, this is overstated by 3, or understated by 3, understated by 3, and even gross profit also will be understated by 900. See, gross profit is also understated by, here gross profit is, okay, so we need to find even gross profit also. So my mistake. So we'll just do it again, once again. So please bear with me. So this is just to find out the gross profit. Okay. So let's marriage amount is 23. And this has been shown as 32. So this is just to find gross profit. Okay. So what is the profit? Let us see. So 90,000 minus 2,300 is 87,700. So then 90,000 minus 86,800. So gross profit. So actually gross profit will be more. Here it is showing less. So it is understated again. Understated by how much? Minus 87. Understated by 9. So this one is understated by 900. This one is correct. This one. So please repeat double sure. So don't try to guess problem without understanding, have a clear cut understanding of the concept, and please do it. So that each and every mark is very, very important. So please use my classes very carefully. So please share and subscribe. Let others also grow. So let others also get help from this. So be generous. So we'll catch up in the next class. Basically, I will be starting the next one, that is statement of financial position, in the next class. Till then, have a good day, good night, goodbye. Hello, dear students, welcome to class of virtual classroom. So today we will do a recap of whatever we have learned till now. So basically, this is a recap session. So in this lesson, we will discuss what all we have done till now. So the first lesson was cash transactions. So in this lesson, we learned how to record cash transactions when payments are made and amounts are received. When amounts are received in so that is what is cash transaction. Cash transaction means money is paid to someone and money is received from someone. So how to pass those entries? So that's what we have done. So here in this we have learned all about personal transactions, like when we receive money from accounts, personal accounts, how to record them. So when someone gives money and someone receives money, how to record it. And we have even learned how to record expenses, how to record when payment is being made or received. So all these things we have learned in cash transaction. In lesson number 2, we learned credit transactions. So what are credit transactions? Credit transactions are those where amounts are not paid, where amounts are not paid or not paid. So or not. So that is why it's called credit transaction. The payment is not made instantly, or amount is also not received instantly. So again, how to record when amount is not received, and again when there is a transaction with personal account, when there is a transaction with expense account, income account, and all other stuff. So we have learned in credit transactions. How to record credit transactions? We have learned in second day. So we have done couple of questions. So here also we have done couple of questions. In this also we have done couple of questions. We have discussed a couple of questions. Please go through that. And then again, third, we have learned books of payment. We have learned about books of payment. So what are the books of payment? Sales journal, sales journal, purchase journal, sales return journal, purchase return journal, cash book, general journal, or entered in sales journal. Purchase journal, all pre-purchases are recorded. Sales return journal returns when customer returns the goods, then whatever entries make, so that is made in sales return journal. Purchase return journal, we record the purchases, we reject the material and then it is given back. So that is what is purchase return journal. So that is written in purchase return journal. So in cash book we record amounts received and paid, whether cash or check. Okay. So cash or check. And even discount column also we have done. Discount column, authorized discount column. So we have learned how to record entries in sales journal, purchase journal, sales return journal, purchase sales return journal, purchase return journal, scrap book, general journal or journal. So what will be entered in general journal? Adjustment entries like outstanding expenses, prepaid expenses. So if I have a purchase of non-current assets, like purchase of machinery, purchase of how to rectify entries. So for the non-current assets, entries related to non-current assets, rectification entries. So basically, what are the present time, what doesn't come in sales journal, purchase journal, sales return journal, purchase return journal, cash book. So that will be reflected in general journal or journal. So that is how it is. So we have learned how to write these things and all. So then how to post it to the ledger also we have learned. How to post to ledger. And again we have learned division of classification of accounts. Division or classification of ledger accounts. Ledgers also we have learned. And so in that time we have learned how to post, how to prepare. All these things we have learned in ledger accounts. So the division or classification of ledgers. So what is the how many different classifications there? So all these things we have learned. And we have learned balancing of ledger accounts. Balancing of ledger accounts. So that is how to do the balancing of ledger accounts. And we have done comprehensive column also. Comprehensive column to cover up all these aspects, and we have prepared, ultimately we have prepared trial balance. So how to prepare trial balance? Prepare trial balance. What is trial balance? How to prepare trial balance? The format of trial balance, the procedure, the structure of the design of trial balance. All these things we have learned. All this, whatever is there, whatever we have learned, all this is known as bookkeeping. So all this is known as bookkeeping. So till the preparation of trial balance, the work is done by bookkeeper. Or clerk. So after this, the next step starts. So the next step is known as financial accounting. So the accountant does the financial accounting job. So he starts with financial accounting. So next lesson. So here onwards we will be doing financial accounting lessons, like how to prepare income statement, how to prepare balance sheet, what are the different the main accounts. Here till here was all basic, but very important for you to get understanding of accountancy. So now
to Shasha's virtual classroom. So today we will be discussing books of prime entry. Prime means first initially. So as soon as a transaction happens, we record in some place. So what are the different types of transactions we have? So we sell goods, so they are known as sales. And when goods are returned, when sold goods are returned, they are known as sales return. We purchase goods, which is known as purchases. If the goods are not of good quality, we return the goods, purchase return. Business even receives and pays cash, even that is recorded. So apart from that, there are a lot of other things which are there. So when they happen initially, as soon as they happen, we record at one place one books, certain books, okay, certain books, certain books. So we don't write in haphazard way, we write in certain books. All sales, we record in sales daybook or sales register. Or sales is also known as sales. Similarly, some customers may return the goods, so we record them in sales return register. So when purchases are made, all the purchases are recorded in purchase register. Similarly, if the goods are not of good quality, we will return the goods, so they are recorded in purchase return register. So when amounts are received and paid, receives and pays, when business receives and pays, so it is recorded. So they are recorded in cash. So summary of receipts and payments, whether cash and bank is received by check. So all those will be recorded in cash. So a lot of other entries like purchase of non-current assets, because purchase of non-current assets are not purchases, right? So purchase of non-current assets. Just this. All these entries are recorded in a book called General Journal. So we have to write the specific transactions in specific book itself. We cannot mess up. So the entries cannot be messed up. Okay, so this is the fundamental. So in this lesson, we will learn how to record the entries, the books of prime. So how will be the books of prime entry? So you can see the books of prime entry will be like this. So the dates will be there, particulars. So date means date, particulars means parties name will be there to whom we have sold. So obviously customers, name, date will be there, customers name will be there. So everything will be entered in sales return. So sales return journal again, customers name will be recorded. So again date, particulars, so particulars, customers name and amount also. Similarly, purchases journal, we record suppliers name. Suppliers
what is the amount of transaction. So again, purchase return journal also very much surprise. So obviously we will be there all those things. So this is how the entries we have to enter. So in this specific format, specific how we say order itself. So we have read specific. So this is a list. Actually, these are the list: sales journal, sales return journal, purchase return journal, and purchase journal. These are all lists. Okay, so these are all lists. Lists of list of sales return, list of sales purchases, list of purchase return. So everything will be there. So from here, once we write here, so what happens next? So sales. What happens? There are two things. One is sales, and one is customers ledger. So sales, what we have to do is we have to add on this whatever the numbers we have to enter in sales count. We have to enter in sales. Sales account. So sales journal is different. Sales account is very similarly. Sales return journal, whatever the total amount we have to enter in sales returns account. Total is two. Sales account. Total amount. Total amount in sales returns. So then. So purchases. So purchases, total purchases will be entered in purchases. So purchases. So again here is total amount. We entered in purchase returns. So this total will be. So the supplier's names. So the details now, suppose this is Mr. A, Mr. B, Mr. C. It will be posted to the respective ledger accounts. Because customer say yes. So suppose these are the customers. So we have to transfer, we have to make the entries, corresponding entries in Z's ledger account, Y's ledger account, X ledger account, B's ledger account, respectively. So separately we have to record. But total of sales, we have to record the sales account. Only one. So aggregate. So aggregate will be recorded in. So no individual. Okay.
is again in sales account. The total of sales journal will be recorded in sales account, whereas customers accounts will be independently recorded in the customers respective customers. The same rule applies for even for sales invoices also. So remember, sales journal is different, sales account is different, and total amount of sales or sales return, purchases return, only total is recorded in either sales account or sales returns account or purchases account or purchase returns account. Aggregate will be recorded and individual entries will be posted to individual accounts. So then sales register, sales. So remember this is very important point. So often asked in MCQs, so you have to be very clear. So then similarly, sales register, sales return register versus sales return. So both are so then cash. So we have discussed the sales register, sales return register, purchase return register, purchase return register. So when we receive and pay, we record in cash book. Cash and bank columns. So cash book. So the format is easy. Cash book we have to record easy. So cash book will be divided is easily divided into two parts. So debit part and credit part. So debit part date particulars from whom the cash is received. Folio, folio number discount. So there is a column for discount also. So when we receive money, we may allow some discount. So that discount is recorded here. When we receive cash, we record here. When we receive checks, we record it. Similarly, date, particulars, folio, discount. So when we make the payment, we receive some discount. So we record the discount here. When we pay by cash, if we pay by cash, we record here. If we pay by check, we write it in bank column. So very important this particular format. So very important question. So often asked in AS level exams. IGCSE also this question is often asked. So cash the very easy marks. So just you have to remember the format and just plug in the figures. So very simple, very easy, but format is very important. You have to write this in this particular way. So it's very important. So it's format oriented. So format is very strictly on the follow the format. Then last, general or general problem adjustment. So journal. So the format of journal is like this: date, particulars, and so whatever is limited to it, whatever is so this is also from here we just write it as a for reference. From here we are recording for respective ledger accounts and cash book also we record the entries and from here we post it to respective ledger. So remember this. So it's very simple chapter. It's a simple lesson and but basically to understand accounts you have to do all this. You have to understand all this, otherwise understanding will be incomplete. So we'll wind up. Next class we'll work out one problem based on this. So we'll work out one practice exercise based on this. So one or two questions more than sufficient because we just need to know how to record it and how to post it. So until then,
So rules to remember. So a business company deals with persons, whether natural, artificial, or representative. So when we deal with any person, then there are multiple personal amounts. So either we receive from them or we pay, or the business will either receive or pay or give to the other business. So the rule is debit the account that receives or debit the receiver, debit the receiver. So some authors they write this way. So debit the account that receives or debit the receiver, like David Hopkins, they use the first rule, that is debit the account that receives. They write it that way. So some other authors they write debit the receiver. Similarly, for credit items, they write credit the account that gives or credit the give. So some authors write one way or the other. So the rule is ultimately the same. The concept is ultimately the same. Real amount, debit what is being received. So in case of real amount, when we receive or pay something, when the business receives or pays something, so then debit what is being received or debit what comes in. So credit what is being given away or credit what goes out. So this is the rule for real amounts. So you know what is real amounts. So when we deal with cash or finance. So nominal account. The rule is debit all expenses and losses, credit all revenues and gains. So nominal accounts and expenses and so accounting equation. So when we are recording accounting equation from the accounting point of view, we see from accounting equation point of view, assets normally have debit balances, liabilities and capital normally have debit balances. So remember, assets and expenses normally are debit balances. Okay, so liabilities and incomes are normally credit balances. So even it is noteworthy that capital is also a liability. So it means capital, liabilities, and incomes are normally credit balances. Okay, remember, I'm a trainer, not a tutor. I train you to pass, to succeed, to clear your exams, to get better marks, to excel in your studies, so that you understand and do better, better, and better, and best, the best. It's 2K. I've been taking on classes. I'm aware of difficulties faced by various students, below average, above average. I analyze and understand what they don't really understand and how the students suffer. I feel their pulse and try to understand their difficulties, making the student understand the subject and making interesting for them to learn so that they excel in their studies is my core perspective. These days, a lot of students have various difficulties. They won't understand anything in the class. A lot of students who are pursuing online classes. A lot of students who are taken up distance learning classes face various difficulties in understanding the core concepts. So they try to understand, but most of the teachers uh, have different methodologies to explain, and few students are unable to understand. It's a hard time for the students. Myself, not being just learned, but having understood the subject as a common sense, I'm a professional tutor, professional trainer, and educator, having on-job experience and theoretical knowledge in various subjects, such as direct taxes, indirect taxes, accounting, be it financial accounting, advanced financial accounting, cost accounting, advanced cost accounting, managerial accounting, advanced managerial accounting, management accounting, advanced management accounting, financial management, operations research, quantitative techniques, business mathematics, business statistics, business economics, business studies, and various other business management subjects. I even have on-hand experience in ERP, SAP, Tally, QuickBooks, and all. So I'm in a better position to explain the real
logistical issues, the logistical problems, the core concepts in a better way. So a lot of students approach me near the exams for exam oriented crash courses and exam oriented coaching so that they pass their exams. I have a record 100% of my students clear my exams, clear their exams with ease. 100% they succeed. So I explain them as if they are novice, ignorant novice. Even the ignorant novice understands the subject easily. So I teach them as a common sense because any subject is more a common sense than a subject. So understand a student should be capable of understanding the concepts so as to make their life easier. So learning becomes pleasure and enjoy. So anyone who is interested, who wants to clear their exams with ease, without any difficulties, please get in touch with me. I am available anytime for that. 24/7, I am available for that. Thank you. Caring is caring. So please subscribe, share to my channel because spreading knowledge only increases your knowledge. So dear friends, welcome back. Let us continue with activity 7.2. So Vikram is a sole trader who buys and sells goods, the trial balance. So this is a question from statement of profit or loss. So we need to prepare a statement of profit or loss. This is David Hopkins' latest book, so applicable for 2025-26. So we'll continue. Okay. So let us just so check out the items whatever are there. So before starting this, so let's have a recap of how the statement of profit or loss is prepared. So first, what are the line items? So statement heading, always we are trying the heading. So always, but sometimes it is given in the question paper itself. So anyways, we will just write down statement of profit or loss, whatever the trader's name and the period amount or whatever. So what are the line items? So first one it is revenue. So revenue is nothing but sales minus sales returns. So minus cost of sales. So cost of sales. Do you know what is cost of sales? So opening inventory plus purchases minus purchase returns plus carriage inwards minus closing inventory. So that will give cost of sales. So when we subtract revenue, cost of sales from revenue, we get gross profit. To that gross profit, we add other income. So other income is like discount received, interest received, so rent receivable. So all other income which is not other than operating income will come here. So from that we subtract expenses. What are the expenses? Like expenses incurred, which are like salaries, wages, rent, postage and telephone, all those expenses are taken out. So that will give profit or loss. So in just 5 steps, so very important. So learn this because often the question questions are asked in AS level. A lot of questions are asked on income statements. So that's why we have been repeating this concept again and again, like what are the steps and what are the contents. So it's very important. Okay. So now let us just have a look at the question. So carriage inwards. So this is forming cost of sales. This is forming part of cost of sales. So carriage outwards is expenses. So discount allowed is also expense. Discount received is other income. Heat and light expenses. Insurance expenses. Inventory at 1st April 2019. So this is cost of sales. Motor expenses. Purchases cost of sales. Purchase returns cost of sales. We have to subtract. So rent and rates expenses. Sales revenue. Sales returns revenue. Wages and salaries expenses. So inventory at 31st March was valued at 29,143. So this is also cost of sales. So this is how we have to do. Okay. So first, as soon as you see the question, you should visualize where these items will come. So you should visualize where these items will come, so that when you're doing the problem, you should be doing it like a bullet train. So very fast. You should be very fast, because the questions will be very tricky sometimes. They will be very somewhat lengthy. If not one question, some other questions will be very tricky. So that's why you have to be very active. Okay, hyperactive. Otherwise, getting very good grades is not at all possible. Okay, so that is remember this. It's very very important. So now let us continue to just so what is there? First, revenue. There are two items. So sales and sales returns. So that is what is in revenue. Revenue, it is sales and sales returns. So how much it is? Sales and sales returns is 354,987. 3985. So you need to write this. What is so it is sales. So this is sales returns. So that will give you 354. A51002. Okay. So okay. So let us do it in a proper way, so that I don't want you to follow the same thing when you are writing. So let me just write it again in a proper format. So see, accounting as a subject is a presentation, more concerned about presentation. So all the steps should be as it is. All the steps should be very formal, very neat and clean, so that each and every concept is explained to the examiner. So first of all, we have to write the heading statement of profit or loss. So in the exams they would have given this actually. So it is not so important. Even then, if they are not given, so I am just writing here for your convenience. So if it is written, you don't have to write it. So first, we have to start with revenue. So revenue, under revenue, we'll have sales minus sales returns. always write the dollars currency in always you have to write. Don't forget to write this the revenue. So on the top, if you write, it is applicable for all. So you don't have to write everywhere again. So minus cost of sales. What all is coming in cost of sales? Purchases. So below that, you need to write opening inventory. Okay, don't forget to write opening inventory. Follow, understand, remember, by heart, whatever. So always you have to write it in a proper sequence. Okay, so always. So inventory, what they have given here, inventory at 1st April 2019. Inventory at 1st April 2019. Write the same line item, whatever they have written. See, what I advise you is as soon as you see the question, you can try answering the question on your own, and then you can cross check with the solution here, so that you can answer. You can be sure that whatever you have done is right, so that it will increase your confidence. It will boost your confidence, and will help you prepare for examination with lot of comforts. Okay, so first you try on your own, then only you check this. Don't see this as a movie or as a video or something like that. So please try to work out the question on your own, and then you have to have a look at this. This will be more effective. So learning should be more effective. So it should be with fun also, but it should be more effective as well. So try to answer the question on your own, and then you cross check with this solution whether you understood every concept, everything is clear or not. Okay, so inventory at 1st April 2019, 34096. 34096. Okay, then purchases. To that we need to add purchases. What are the purchases? Purchases 245110. So from this we need to subtract purchase returns. What is the purchase returns? Purchase returns are exactly reverse of purchases. So 5620. To this we need to add carriage inwards, because when we purchase we get the goods inside. So by default carriage inwards to 305. So normally these are the line items normally. Okay, purchases minus purchase returns, carriage inwards. So from that we need to subtract inventory on 31st March. Inventory on 31st March 2020. It's given in adjustments. Always closing inventory is given in adjustments. 2914. Always. So put it in bracket so that you don't mess up again. Lot of students they mess up doing calculations. If they don't, if you don't put the numbers minus or something like this, you will just make wrong calculations, and ultimately the figure will go wrong. So you lose marks. So very important, 34096, 34096 plus 249 plus 5620 plus 2305 minus 09143 246748. So the expenses total amount is 246,748. cost of sales are subtracted, so you put it in bracket again. This minus is for these items. Okay, so don't get confused again. So 104254, 10454. So this is, what do we call this? This is gross profit. So gross profit. So this is gross profit. Okay. So this is gross profit. So this is how it is. So to this we need to add other income. So this is a comprehensive question. So all items have begin with. This is a very good question for practice. Okay. So this is very good question for practice. Try to practice this to learn the line items. So that all the line items are included in this. So it will be easier for you. So you kindly mark it as important and practice these questions. Often you practice this at least 3 to 4 times you practice, so that the concept is clear and so that you don't miss out any line item. So yes, obviously there will be adjustments, lot of adjustments also will be there. So that is another part, but this is the starting point. So always you have to start with this, then you have to incorporate the adjustments, whatever. So the format will be the same. So only you have to incorporate the adjustments. Okay. So practice this question. This is very good question because lot of line items are there. Discount allowed. So exhaustive line items are there. So discount received. So this is other income. So this is other income. Discount received 2067. So you add this. So this will give you one amount. So we don't know the name of that amount. 106321. So from this we need to take out expenses. So what are the expenses? Carriage outward 1, 2, 3, 4. Discount allowed 1888. D10 light 3765. Insurance 4760. Motor expenses 5269. Rent and rates 14,400. So that's all. So these are the expenses. Okay. So these are the only expenses, nothing else. So how many line items are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 15. Let us just check. taken everything. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 line items. Is it correct? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So what we have left? Carriage amount, carriage report, discount allowed, discount received, and light. Expenses as well. Utility light. Energies, motor expenses. So let us cross check. So let us check line by line item. So how to cross check? Sales, sales, sales return, sales return. So you need to learn even how to cross check sometimes. Okay. So we have to cross check. Otherwise, simply just for a matter of 1 minute, you will lose a lot of marks. Even 1 mark is very is of high importance. So don't be in a hurry. Don't try to mess up. So wages and salaries we have taken 67109. Let us just wages and salaries. See, we have not taken wages and salaries. Okay. So like this, we may get it. So we don't have to, now we don't have to, okay? So now we don't have to verify because we already done it. So we found out wages and salary, there are 15 line items, right? So we have got all the 15 line items, 67109. 67109. So we have taken all the 15 items. So that is how we have to check, okay? So when we have to cross check, we have to put the ticks like that and then we have to cross check. So be careful. 1, 2, 3, 4 less 1, 3, 4, 8 less 3, 7, 6, 5 less 4, 7, 6, 5 less subtract this from this. 7, 8, 9, 11, 8, 9, 6. Profit. Okay, this is the answer, 7896. This is how it is. So we have finished activity 7.2. So you can just have a recap like statement of profit was I always write the heading. So revenue, sales minus sales returns. So write the items for this cost of sales, inventory, purchases, purchase returns, carriage inwards, inventory at the end. So write down everything, then you get one figure. So this minus this will get gross profit. To that you add other income, you will get the value. So from that you subtract all the other expenses, all the expenses. So you take out all the expenses, you add all this, you put it here. So because it is minus, you have put it in bracket. This minus this will give profit. It's done. Okay. So this is how it is. So now we can. So this is the end of activity question 7.2. Activities 7.2. We will catch up in the next class. Till then, have a good day. Goodbye. Dear friends, welcome back to Shasha's virtual classroom. So activity 7.3. Produce a statement of profit loss for Samara that shows the gross profit and profit and loss for the Samara. Who is this Samara? Just let us have a look. Let us be sunlight here. So a trial balance has been prepared for Samara. So see, okay. So this is the one. So a seller of women's clothing at 30th April 2020. Okay. So rent and rates is given. So here in the question they have given everything like this is an expense, this is asset. Asset will go to statement of financial position. Revenue is given. This is other revenue, discount received. Okay. So this is other income. So this will go to other income. So then carriage outwards expense, sales revenue, inventory. First April 2019, first May 2019. So no much unique items. So I think you can try this question on your own. So even then, let me be just quick. Let me just finish it fast so that cross check with the solution. Very important topic. That's why I'm doing this. So let us continue. So we start income statement of profit and loss. Yes. Carriage inwards. Inventory also we have taken. Let's check if carriage inventory is there. Carriage inventory it was. Carefully you have to see, don't miss out any item. Inventory of 30th April, closing inventory we have to subtract. So 3760. This will give you, this is gross profit. What you get is gross profit. This is gross profit. This we add other income. What is other income? Commission received. Discount received. Discount received. Commission received. How much is discount received? 50. Commission received, discount received, commission received. 50 to 50 more 0. Commission received 2340. Commission received 2340. Okay, correct. So this plus this is 2390. So you have to add So this will give this plus this. Equal to 22 to 20. So this is profit plus gross profit plus other income. So there is no name for this particular line item. So forget it. Then expenses. Take out expenses. What are the expenses? So let us write all the expenses one by one from the beginning. Rent and rates 480. Carriage about 310. Three ten. Electricity 1180. 1180 electricity. Discount allowed 60. Wages 9700. Motor expenses 660. So now you add all these expenses. 480 plus 310 plus 1 plus plus 90 plus 12390. 1239. So 20 to 20 to 20 minus 12390 will give 9830. So this is profit. This is profit. So remember, so this is that's all. So very simple question. So let us take a picture of the profit because we need it in the next activity. They asked for the same activity. They asked you to prepare presentation. So take down the number 9830. You keep it securely. Safely means just remember it. And anyways, if you are doing it in a notebook, then it will always be there. So you can have just check and you can use it. So, okay, so this is how it is. So just let's once again you can just cross check with the solution. So before attempting any of the questions, so my request is that you try answering the question on your own, then you cross check with the solution. So the same way we will be even doing the question papers also, like you will have to try on your own and then you have to cross check. So possibly we will discuss a lot of concepts. We will, if you have a look at all of my if you attend all my virtual classrooms, obviously it will be full-fledged discussion on various topics, including question papers, whether it is A levels, AS levels, even IGCSE also. So please refer my channel to your friends and relatives whoever are studying in A levels, IGCSE, so that it will be helpful for you, and vis-a-vis it will be motivation for me as well. So thank you. So you can just finish this, just have a look. So let me know if you have any concerns, if you have any doubts or anything like that in the comment section of this video, so that if there are any errors also, please let me know, because even I am a human, and there are chances that you human beings only commit mistakes, so that I can rectify my mistakes, and it will help other your fellow students also. So this is my humble request to you, all of my friends, my students. So this is the end of activity 7.3. So activity 7.3. So see you in the next class. Till then, have a good day, good night, all the best. Dear friends, welcome back to Shasha's virtual classroom. So this is a statement of profit or loss. This is David Hopkins' latest book. So today we'll discuss exam style questions. So similar questions are asked in AS level MCQ paper. So exam style questions. Which of the following should not be recorded? So just let us just have a look. So which of the following should not be recorded as an expense? Not be recorded as an expense in the statement of profit or loss. Yeah, delivery cost is an expense. Discount allowed is an expense. Insurance is an expense. Drawings is not an expense. So which of the following is included in the calculation of cost of sales? Carriage in notes is included, yes. Carriage of note is not included. Discount allowed is not included. Discount received is not included. So the initial profit for the year in the statement of profit or loss was 17,500. However, a number of items have been omitted. So these all items have been omitted. So 1800 is this carriage inward. So discount received is 6200. Sales return is 4100. So which are the minus items? So carriage inward will, so loss, the initial profit. Okay, so initial profit. So there is a profit. So profit is 17,500. 17,500 is the profit. So carriage inward is 1800. So it is an expense. Whether it is a forming cost of sales or expenses, it is always an expense. So that will go to reduce the profit. So it will reduce the profit 1800. So discount received. Discount received is other income. So which increases. So increases the profit. Sales return. Sales return is reverse of revenue, that is minus sales. So this will decrease the profit. So just let us just calculate 17,500 minus 1800 plus 6200 minus 41. So 17,800. 17,800 is the answer. So then after this, you have a trial balance. I mean, the trial balance extracted from week's 31st March. So just discuss this. So I'm not going to work out this. I think you can work on this on your own. What is it asked here? So during the moment taken goods costing 2775 for his own use. So this one you have to subtract from purchases minus this. This has not been recorded in the books. The inventory at 31st March was 19,834. Okay. So this you have to subtract. Then let us see what are the other items. Bank, this will go to statement of financial position. Bank loan will go to statement of financial position. Capital will go to statement of financial position. Carriage awards, that is cost of sales. Carriage awards expenses. Discount allowed expenses. Discount received other income. So drawings, statement of financial position. Fixtures and fittings, statement of financial position. Heating and lighting expenses. Inventory, so this is cost of sales. The land and building, statement of financial position, expenses, office expenses, expenses. Office furniture will go to statement of financial position. Trade payables will go to statement of financial position. Trade purchases will go to cost of sales. Purchase returns, cost of sales. So trade receivables. Trade receivables will go to statement of financial position. Revenue, sales is nothing but sales minus sales returns. So this is nothing but revenue. So this should be subtracted from revenue. Wages is expenses. So again, closing inventory will go to cost of sales. So that's all. So now you can try this question on your own. So if you have any doubts, you can please let me know in the comment section. So it's very simple, you can do, because we have to do a lot of other stuff. So I'm not wasting time on doing this because it is a very simple question. I think you can do this on your own. Okay, so this is the end of lesson statement of profit or loss. So we will be continuing the statement of financial position in the next class. Till then, have a good day. Good night. Take care.
For international curriculum like IGCSE, O levels, AS levels, and A levels, clear understanding of the concepts, remember, correlate, application skills is a must. Proper practice and training is very prerequisite for scoring a plus.
Dear friends, welcome back. So today we'll be discussing accounting concepts. So this is lesson number 9 in David Hopkins. Lesson number 9 in David Hopkins. Okay. So you can read the book and you can understand most of it. But let me just explain to you in layman terms, like how you need to understand the concepts. So you need to understand the concepts. You can just read the book and you can understand, but let me have a brief overview. That's all. So the need for rules. What are the need for rules? So rules must be followed because accounts are used everywhere in the world. So different people should be able to understand what one person is telling about their financial position, financial results. So everyone in the world should be able to understand the statements prepared by any part of the country or any part of the world. So that is why we have to follow certain rules. So the rules are followed uniformly. So accounting concepts. So accounting concepts are again the same thing. Like some criteria is mandatory to be followed in preparation of books of accounts. So that is what is accounting concepts. What is duality? Duality means duality says according to duality, every debit has a credit. So the it acts like a check. It acts like a check on the arithmetical accuracy and try to be more authentic and real. Okay. So business entity concept. What is business entity concept? According to business entity concept, even though the owner of the business is the person who is running the business, he is considered as an outsider. So that is why the concept of capital and drawings come. Capital and drawings. That is where the concept of capital and drawings come. So similarly, all the transactions from the recorded from the business point of view. So that is what business entity concept says. Money measurement concepts. What is money measurement concept? According to money measurement concept, everything should be measurable in terms of money. All the business transactions should be measurable in terms of money. It cannot be recorded in kind. It cannot be recorded. No transaction can be recorded in quantitative or qualitative terms. It should be always measured in terms of money. So money means either in dollars or pounds or whatever. So historic cost. So normally the transactions are recorded at historic cost. So suppose one item has been purchased some 10 years back, it will be recorded at that price itself and that will be carried over. So we cannot assume and presume, we should not apply the current cost, the realizable value or whatever. So normally everything should be recorded at historic cost and that should be shown in the books of accounts. What is realization concept? Say realization concept is as soon as a sale is made and when once invoice is raised, it should be recorded as revenue. It should be recorded as revenue. But in case of goods sold on approval, goods on sale or approval. So what happens is it should be recorded as the goods must be recorded as sale only when. So what is goods on sale or approval? What is goods on sale or approval? So what happens is a person sends goods to another person on the condition that if the person, the customer agrees, yes, the goods are of proper value, I have accepted, then it becomes a sale. So what happens in case of goods on sale or approval? So the goods are sent to the customer, the goods go out, and he will receive the goods. Entries are made in stock book, but it will not be recorded as sale. So it should be recorded as sale only when the customer gives his consent, approval. Customer gives his consent or approval. So then only it will be considered as sale. Otherwise, it will not be considered as sale. It will be considered as goods in transit. Okay. So it should not be considered as sale itself. Goods on sale or approval. Consistency. What is consistency? See, there are certain rules, certain principles which the accountant follows. Suppose, let us say there are two methods of providing depreciation. One is straight line method and in one is written down value method. So what does the rule say? If one person follows, if the company follows straight line method, you should be following straight line method several years, throughout the years. You cannot shift from straight line method to return down value method, or from return down value method to straight line method. Or if you, when you come to management and cost and management, there you will come to something across FIFO, AVCO, method of valuation of material. So if one person is, one company is following FIFO method, he should be following FIFO method. He cannot interchange to AVCO or vice versa. So they should be consistent in following the accounting principles. If they are following FIFO method in valuing inventory, they should follow FIFO method in valuing inventory. Suppose if they are following AVCO method, they will be following AVCO method of valuation of inventory. So that it should be consistent, consistently followed. The rules must be consistently followed. Rules or methods. Methods must be consistently followed. So what is materiality? Materiality is dependent from person to person and from business to business. Suppose if it is a large company, small items may be written off as an expense. Small items may be written off. But if it is a small company, then small items are also can be recorded as assets. So based on what type of business it is and what is the magnitude of the importance of that particular item, the items are recorded. So that is why it's called materiality, how material the particular item is. Based on that, the transactions should be recorded. Matching principle. So this is also known as an accrual principle. So matching principle means all the assets and liabilities, all incomes and expenses must be belonging to one specific period. So you cannot postpone or prepone any expenses or incomes or assets or liabilities from one period to another period. In recording anyone from one period to another period, they should match specific period. Specific period is very important. So periodicity. So a specific period, they should match all assets, liabilities, expenses, and incomes should match for the specific period. If they are not belonging to that period, they should be taken out as well. So that is what is matching principle. What does prudence principle say? Prudence principle says that all probable losses should be accounted. All probable or prospective losses should be accounted, whereas all probable or prospective income should never be accounted unless if they are realized. So prudence concept. So it is also known as conservatism concept. So it is also known, it is known as prudential concept. So according to that, all probable or prospective items, if there are expenses or losses, they should be accounted. They should be considered and recorded in the books of accounts. Whereas if the items are incomes or probable incomes, they should never be recorded unless otherwise they are realized. Going concern. What does going concern concept say? According to going concern concept, it is normally assumed that business will be continued forever. Business will be considered as running forever. Suppose if you say you are running the business for only 1 year, who will come and buy goods from you? Who will sell goods to you? No one will trade with you. So they will hesitate. What if you run away the other day? So that is why it is always assumed that all businesses are going concern. Means they run, they are intended, they have been started with an intention to continue forever. Okay, very important concept. So often asked in the exams. So all these concepts are theory based concepts, but they are often asked. So you have to understand in layman terms, because when they ask in strict case studies or MCQs, you should be able to tell the answer. substance over form. So what is substance over form? Like where you can say hire purchase. What happens in hire purchase? Unless you pay the last installment, the buyer will not become the owner. But in our accounts, what we do is from the day one we consider them as assets and we record and we even charge the depreciation. So here the legal form is that legal substance is that the asset has not been transferred from the buyer to the seller. But in the form, it is actually it has become an asset to the of the seller. So the seller record them and they even charge depreciation and they show it as an asset in their books of accounts. But substance is that, but form is actually something else. So that is what it is. So then objectivity. What is objectivity? All all transactions must be evidences. There should not be any bias. There should not be any bias. So there should be proof for every business transaction. There should be evidence, proof or evidence for every business transaction. So it's very important. So that is how it is. So understand. So you can read the book. You can read the text based on this. So try to understand in layman terms how it is, what it is. So lot of questions are often asked regularly on these concepts, so that particularly MCQs, case studies. So they are asked. So you should be aware of these basic concepts. They are very important. Theory, but very important. Please go through. So in the next class, we'll discuss exam style questions from this lesson. So the concept will be more clearer. So till then, have a good day. Dear friends, exam style questions from counting concepts. Okay, so let's discuss exam sales to questions from accounting concept. The owner of a business paid for some repairs made on his wife's car out of the business bank account. The amount was debited to his drawings account. Which concept was applied? Obviously, business entity concept. So according to business entity concept, the owner is considered as an outsider. That's why whatever money is taken out from the business is considered as his drawings. It is recorded from there. So not matching, not present, not this. So this is the right answer. So business entity concept. It repaid $700 for business insurance, but 100 out of this related to first 2 months of next year. Which accounting concept has been applied? So obviously matching concept. Why matching concept? Because we have to, the expenses and incomes of that period should match. It should be related to that specific period. So next year, 2 months of the next year should never be accounted. So you should account only the expenses of that particular period. So this is correct. So matching principle has been applied. Matching concept. Matching concept has been applied. So next. The balances in sales ledger total 24,000. A customer who owes $1,500 is known to be in severe financial difficulties and may go out of business. The figure of trade receivables shown in the statement of financial position is 22,500. So you have recorded probable loss, prospective loss. So you have applied prudence concept. because you are prudential, so you are conservative, so you are prudential. You have accepted, you have followed prudence concept. Okay. So a trader sends goods on sale or return to a customer. When the trader prepares her statement of financial position, the customer has still not indicated that she has accepted the goods. Which concept should be a trader when she prepares her account? So realization concept. So realization concept is applicable because realization concept says that when the goods are sent on return on approval, it should not be recorded as sales unless the person to whom the goods have been sent indicates his assent to buy. So assent. To buy. So that is why it is called realization concept. So realization concept is applied. So this is the end of see it's how so simple, so easy concept, but very important. The questions are often asked in AS level, so very important topic. So very easy also. So easily it's scoring. So please get a hold of this. Try to answer more and more questions and get a hold of this. Okay. So let's catch up in the next class. Till then, have a good day. Good night. So dear friends, welcome back to Shasha's virtual classroom. So today we'll be discussing exam style questions from Statement of Financial Position, David Hopkins' latest book. So you can just answer yourself and then cross check with the solutions here. So the owner of a business has taken goods for her own use. She has withdrawn, but no entry has been made in the books to record this. Which row will show the effect of this? Which row will show effect of this on the statement of financial position? So she has taken drawings, she has taken goods, but it has not been entered. So what will happen? So inventory will be showing more. So it is not possible. This cannot be, this cannot be, this cannot be, this can be, and this can be. So because you have taken out the inventory and you have not shown, so it will be showing more. So what will happen on the credit side? I mean the other effect, the capital you should have credited the capital. You should have taken out from the capital. So it is impossible that it cannot have any effect on capital. It will be too large. So obviously yes, capital will be too large because it would not have been debited. So this is the option. D is the answer. The following information has been extracted from a statement of financial position at 31st March 2020. So what was the balance on the capital account at 31st March 2020? So they are given non-current assets, current assets. So what is the total assets? Add up this. So any other assets are there? Current liability is a liability, long-term loan is a liability, profit. So will come in the capital. So drawings also will come in the capital. Profit will obviously credit itself. Drawings will be obviously minus figure, right? So it would have been subtracted. So this you add both 1275 plus 54,275 plus 54. So the total assets is 3,29,000. So the total liability should be equal to this. So this should be the so assets will be equal to liability. So you know in accounting equation, assets is equal to liabilities plus capital. So you know assets. So assets are 329,000. So 329,000 is equal to liabilities plus capital. Liabilities is what? This and this are liabilities. 28,000 plus 67,000. 28,000 plus 67,000. So 95,000. So 95,000. So plus capital. Capital is not given. So it is balancing figure. But they have given other items. So they have given, this is eliminated, only these two are given. So 31,000 minus 42,000. So it is minus 11,000. So here it is minus 11,000. So minus 11,000 plus x, some amount. Okay, so there is some amount which is x. So you need to simplify. So what you will do? You take this side. So 3,29,000 minus 95,000 is 3,29,000 minus 95 is 234,000. 234,000. So this you can take out this also. This side minus 11,000. This is already minus, so it will become plus. This is already minus, no? Minus 11,000, right? Because it is drawings. Minus 11,000. You put it in bracket, right? So this will become plus when this comes this side. So basic maths, if you are bad in basic maths, so I can just show you here. Assets is equal to liabilities plus capital. So assets is 3,329,000. 329,000 is equal to liabilities. Liabilities is this plus this 95,000. 95,000 plus capital. We don't know, so we can keep it as it is capital. We write it as capital. So now 3,329,000 minus 95,000 is equal to capital. So 329,000 minus 95,000 is 234,000. 234,000 is equal to capital. But in capital, this includes one figure. This is what all is here. This side 31,000 minus 42,000. See, opening capital plus profit minus drawings. Correct. So this is what is capital, right? So capital is profit drawings. Opening capital plus profit minus drawings. So now you do one thing. So you keep opening capital this side. You just take out profit also this side. You take drawings also this side. So what will happen? 334,000. So plus profit will become minus profit. So you know this is basic maths. So when plus comes this side, it becomes minus. So minus becomes plus. So minus drawings become plus drawings is equal to opening capital. Opening capital, you keep as opening capital here itself as it is. So now opening your 234,000 minus what is profit? Profit is 31,000. What is drawings? 44,000, 42,000. Drawings is 42,000. Is equal to opening capital.
Okay, so purchase goods from car, which cost 300 less trade discount.
So now
We are purchasing from car. So Gerard is purchasing from car. So purchase is about.
So now subtract all this. Let us see. Calculate 234 minus 31 plus 42 is 245
So why car from rated? Because car
is equal to opening this is what we want, right? So this is what we want. So 245,000 is the answer. So the answer is 245,000. So it is simple. If you know basic maths, then it's very simple. Otherwise, it's a bit complicated. But by understanding this, by doing this in these particular steps, you can do it easily. Okay. So this is done. Then the next one, let us see what is there in the next question. Which of the following is not correct? Assets is equal to liabilities plus capital. This is correct. Capital is equal to assets minus liabilities. Capital you keep here. Assets minus liabilities. This is also correct. Capital minus liabilities is equal to assets. This is wrong. So this have to be both the sides. This is wrong. So liabilities is equal to liabilities you keep here. Assets will come here, or you keep this side. Assets minus capital. This is correct. So this is wrong. So this is the answer. Which of the following is not correct? So C is not correct. Okay. Next. Fourth one. The following trial balance have been extracted from exam books at 31st December 2019. So advertising, bank, capital, all these things they are given. So expenses is given. So inventory at 31st December, profit for the year was 50,756. Okay. So prepare X and SS statement of financial position for the year ended December 31st December 2019. So very simple question. I think you should be able to do it in a quicker time. So let's have a competition. Let's check who can do it faster. So whether you or me. So and we will see who will be right. Okay. So you can just start working out, and you can just visit this solution once again after you have finished it. So let's start. Non-current assets. What are non-current assets? Equipment. Sure. How much is equipment? Equipment is 42,190. Exterior is 29,234. So that's all. Non-current. Motor vehicles is here 17,459. That's all. So no other. Correct. So this is non-current assets. Now come to current assets. Just total this and put it. 42,190 less 29,234 and 9,184 less 17459 187,459 8. So when Gerard is paying car, he is not paying certain amount. So which is cash discount. So it is discount received. So it's an income. Current assets. So let us see what are the current assets. So bank balance is there. So first let us make a list. So what is required? Bank is required. This is required. This is required. This is required. This is So in this, what all we have taken? Now come to current assets. What are the current assets? Inventory. Inventory is given here. The question 35331 inventory. Remember ITC? Inventory. Always write it. Remember it. ITC. Remember ITC. Inventory should come first. Inventories. 35331. 35331. T trade receivables. Trade receivables. How much is trade receivables? 26043. Trade receivables. Then ITC. Cash. Cash in hand is there? No cash. Bank balance is there. Bank balance is there. 8802. Add and write. 35331. 35331. S 4604 plus 70176. 70176. Add yes 88 159059 159059 total assets. Okay, so now capital the liability side capital. So opening capital. What is opening capital? Opening capital is given here 71,400 less drawings 51,500 less profit. What is the profit? Five 0746. So just calculate 71,400 plus 50796 minus 51,500 22715 229 housing was not different. There is some mistake. 71,400 minus 51,500 plus 50,756, right? Yes, 50,756. 70656. 70656. 70656. this is capital. So now comes current, non-current liabilities. Non-current liabilities. So bank loan. So repayable by 2023. So how much? 46006. 46006. Current liabilities. Current liabilities. What all is included in current liabilities? Current liabilities. Trade payables 42397. Now we add plus 46006 plus 159059. 159059. So this is total liabilities. 159059. So total assets 159059. So this is statement of financial position, non-current assets. This one, non-current liability, non-current assets, current assets, total assets, capital, non-current liabilities, current liabilities, total 159059. So done. So this is the end of statement of financial position lesson. So practice more and more questions, because questions are often asked from statement of financial position, and you have to be very fast. And along with this, you will have to do a lot of adjustment questions also. So which we will be continuing from the next class. So the next class is based on theory, so but very important. So I have observed a lot of students, they ignore theory, they focus only on practical question, thinking they are more important, and theory is less important. So they don't do that. So everything is important, everything is scoring. So please try to learn everything. Okay, so don't skip anything at all. So have a good day, good night, take care, bye. Dear friends, welcome back to Shasha's virtual classroom. So today we'll be discussing statement of financial statements, statement of financial position. Okay. So today, so this is David Hopkins' latest book. We'll discuss activity 8.1. So before having looking into this class, I would request you to try answering the question on your own. So from whatever you have learned in school, from your teacher, from wherever, so then you can cross check with the solution, so that you can confirm your understanding. Okay. So activity 8.1. Chennai, a sole trader, had a capital account balance of 89,350 on 1st April 2019. During the year, Jana made drawings of 22,720. Prepare the capital account. Okay, so capital account. If the profit for their of $26,390 had been made. So close the closing capital. Next one, B. This is part A. This is part B. Calculate the closing capital using the listing approach. If a profit for the year of 26,390 has been made. So you can try on your own based on your understanding. So there are two ways. So what is one way you have to learn how an account is prepared, what will come on the credit side, what will come on the debit side, and list of items, what will be added, what will be subtracted in listing approach. So that way you can do, or you can understand and you can try. So now let us discuss the solution. So first, prepare the capital account. Prepare the capital account. So capital account. So capital account is usually in a T format. So this side is always debit. This side is always credit by default. So dollar currency will come here. Then first one. Add a capital balance. Add a capital balance of 89,350. 89,350. So capital balance. Capital is a liability, right? So always it will have credit balance. So remember, capital is a liability, and always it will have credit balance. Credit balance means it will always come on the right side. 89,350 by default. Okay. 89,350. This is on what date? This is on 1st April 2019. So balance brought out 89,350. So then during their Jana made drawings of 22,720. So drawings are exactly reverse of capital. So where they come, drawings will always come here. So drawings. How much? 22,720. 22,720. Now profit of 26,390 has been made. Profit. So profit of 26,390. So profit means normally it is credit balance, right? Profit is always credit because credit all incomes and gains, no? So like incomes always show credit balance. So profit means it's a credit balance, so it will always come on the credit side. So 26,390. 26,390. So that is profit for the year. Prepare the capital account. So that's all. So capital account. Done. So those are the items that have been given. So now what you have to do? You have to add this side and this side. So which side is heavier? Obviously this side, right side is heavier. So if the right side is heavier, it's called excess credit. So excess credit means balance will come here, balance carried on will come here. So this plus this minus this. So you add both and subtract this item. So 89,350. 89,350 plus 26,390, 26,390 minus 22,720. 93,020. So 93,020. So this is the amount. So 22,720 plus 11,740. So this is activity. simple. So you can just check once again. Activity 1.1a, 8.1a, debit this side drawings and balance, and credit side balance brought down and profit. That's all. Okay. So then we have to add. This is the balancing figure. So this is balancing figure. So that's all. This is given. This is given. This is given. Everything is given. So we need to write simple. We have to just plug in the figures. So it's very simple. Capital account is very simple. So now prepare it in the form of a statement. So when you are preparing in the form of a statement, you have to add these two items and you have to subtract these items. That's all. So to start with the opening balance. So calculate closing capital using the listing numbers. So part B, section B. So answer B. Okay. 8.1. Activity 8.1. So capital, opening capital at the beginning. So this is capital by listing approach. This is the capital at the beginning. What is the capital at the beginning? Same by default, 89,350. So to that we need to add profit, 26,390. And when we add this and this, how much do we get? 89,350 less 115,740. Yes, same. It is the same question again, but you are doing it in a separate way, different method. That's all. Yeah. So drawings. Drawings is 22,720 less drawings 92,720. So subtract 93,000. Same answer you get 93,000. 93,020. So it's very simple. So you have to add whatever is there this side you have to add, and whatever is there this side you have to subtract. You will get the answer. The listing method. Dear friends, welcome back to Shasha's virtual classroom. So today we will discuss activity 8.2. This is from Statement of Financial Position. This is the latest book of David Hopkins. So we'll discuss activity 8.2 here. So let's start. So Raza is a sole trader. The items the items taken from his trial balance 31st May 2020 that relate to the statement of financial position are as follows: bank balance 3245, bank loan repayable 2024, bank loan repayable 2020 28,330. So cash balance 510, capital opening balance opening of 1st June 2019, 1st June okay opening. So 169945, drawings 33,450, fixtures and fittings for 44,125, premises 33,000, premises trade payables is 33,075, premises 1,27,600, 127,600. So trade receivables 36,085. The loss for the year was 9,145. Inventory at 31st March was valued at 51,340. Prepare a statement of financial position for Raza at 31st March. Statement of financial position at 31st March 2020. Okay. So just before starting this, let's understand a few things which are very important. So statement of financial. Position of Raza at audit 31st May. So before doing this, let us understand a few very important concepts. So what are the, so there are 5 line items. Okay, so there are 5 line items, 5 steps or 5 line items in statement of financial position of a sole trader. What is the first one? First one is non-current assets. So non-current assets are fixed assets. So we need to write this in an order. So particularly item amount wise, whichever is heavier, we can write that. Or the asset which has got longer period of life, we can write that first. So we have to follow a specific order. So though it is advisable. Okay. So then the next one is current assets. Current assets. Here also order is important. Like whichever are realizable on the basis of realization. So first inventories, because inventories cannot be easily realized. Then comes trade receivables. Then cash and bank balances. So like this, okay. So then we have to total of this. So this is asset side. These are total assets. Then comes liability side. Coming to liability side now. So these 2 line items are over. The third line item is capital. So capital account we already learned. So first we need to start with opening capital, opening balance. So that from that we need to subtract drawings. So to that we need to add net profit for the year. So So that will give closing balance. So you need to write the capital here. Then fourth line item, non-current liabilities. Non-current liabilities. So liabilities which are payable for more than after 12 months. After 12 months. So they are known as non-current liabilities. So the outstanding date is important. So on the date of balance sheet, from the date of balance sheet, after that 12 months from there. For example, if any, this is 31st May 2020. So if any liability is payable after 31st May 2021, after that. So this is 31st May, after 1 year, lapse of 1 year, then it is non-current, it should be recorded as non-current liabilities. So you know what are liabilities, right? So liabilities are something we owe. So non-current liabilities. What is current liabilities? Current liabilities are the liabilities that are payable within a period of before 12 months. So if there is any amount outstanding on 31st May 2020, so between this period and this period and this period, between this period, if any liability is payable between this period and this period, it is current liability. So basically it is equal, less than or equal to 12 months. So less than or equal to 12 months. If any liability is there which is payable within a period of 12 months, it's called current. Current means we have to pay immediately. If not immediately, within 12 months. Non-current after 12 months. After 12 months, okay. So very important. So again, these things. So statement of financial position is somewhat easy. So this you have to understand. Just understand what are the line items and where to plug in the figures. And following the particular format is also very important. You have to follow the specific format. It's very, very important. So now, statement of financial position. Okay. So first we need to write fixed assets. So premises is very heavy. So premises, does write premises. So first we have to write non-current assets heading. In the non-current assets, we need to write building premises. What is the value of premises? Value of premises is 127,600. Which is the next item which is a bit higher, furnitures and fixtures. Furnitures and fixtures and fittings. Fixtures and fittings. Now what is the amount? Fixtures and fittings, it is 44,125. 44,125. Any other assets are there? Any other fixed assets are there? No, only two fixed assets. So very good. So first you write this. So both you add the 127,625 is 127,600 plus 44. 171. 171. So current assets. Now coming to current assets. assets. First, we need to write inventories. Inventory means inventory at the beginning, at the end of the year, not at the beginning. Inventory 31st May 2020. What is the inventory on this date? 51,340, 51,340. 51,340. So then trade receivables. So remember this as ITR, okay? So remember this as ITR. ITR is inventory trade receivables. ITC, not IT, ITC. So C is cash and cash equivalent. C, cash and cash equivalents, trade receivables. So trade receivables is 36085. So then next one, cash balance. Cash balance is there, bank balance is there. Yes, cash and bank balance. So bank, cash. So what is the bank balance? Bank balance 3245. What is cash balance? Cash balance is 510. So we have finished. We have written this, we have written this, and we have taken this, we have taken this, we have taken this. So we have taken so many line items. 2 fixed assets, 1, 2, 3, 3 current assets, 4 current assets, trade receivables. Yeah, even this is included. That's why. Okay. So now we add together and write. That's all. 51340, 51340. Yes. 36083. Yes. 3245. 3245. Yes. 500. 91,180. 91,180. Add this together. 262,905. 262,905. This is total assets. So total assets 262,905. Now we have to find out total liabilities. So before this itself, we have to write in an order. So this is the presentation, remember, always. So first you write capital. The capital first at the beginning. Capital at the beginning is 169,945. 169,945. So less drawings. There are drawings. What are the drawings? The drawings are here 33,450. 450. So it said there is a loss 9145. Loss 9145. So put it in bracket. So yeah, you just calculate 169,945. 169,945 minus 33,450 minus 9,145. So 1 into 7,350. 1 into 7,350. Okay, so capital. So this is also considered. Everything is done. What is remaining? Bank loan repayable, bank loan repayable, and trade payables. So, so now we have to write non-current liabilities. Non-current liabilities. So bank loan, which is repayable after 2024. Loan repayable 2024 144,150. 144 1 So straight away you can write. Yes. Bank loan repayable 2020. So that is current liability. This is non-current liability. Now you write current liabilities. Bank loan 2020 28,330 28,330. So then bills payable or accounts payable. Trade payables 33075. Trade payables. Trade payables. How much? 33075. Add this. Yes. 61405. 61405. So now you add 127350. 144. 332,905. Your total liabilities is 332,905. Yes. Total assets is 262,905. So where is the difference? Minus 70,000 difference is there. So is it any error here? Correct. Let us cross check. What are the assets? Premises is 19760. Correct. Let us check 144,150. Yes. 80. Yes. 169. 69945. Yes. 3307. 377. 375,500. So total is 375,500 this side. So these are the credit balances. So inventory and this are by default debit balances. Let us check. So these are credit balances. 8245 less 510 less 3450 less 44,125 less 197,600. Premises have taken 197,600. So this is the here it is the error. So So it is 197600. This is 197600. So this is 197600. So that is what 70,000. So 197600. This is not one. So it is 197600 plus 44125. So 241725. So this is two four one seven two five. 241725. So this side it will be correct, the same value. So we got 70,000 difference. So it is 332905. Three 332905. So okay. So now it is matching. See, what do I advise to you is in the exams, whenever you get a difference, don't try to find out the mistakes. Try to finish the paper first. So in fact, what I used to do is I never used to calculate the totals. I used to do everything and leave out this part. I used to leave out this part. I would not total it. I would not total this. I would not total this. Why? Because if in anxiety, what we try to do is we'll try to figure out the mistake. Figure out the mistake, we'll try to look at the entire problem once again. Just trying to check where the difference is. So because of that, we'll be losing almost, we'll be wasting almost 30 minutes, 30 to 40 minutes. Ultimately, whatever we get is just 1 mark. So it is not worthwhile. In the meantime, you would have got around 6 to 8 marks in other problem. So it is not worth. The opportunity cost is very high. So never try to find out the mistake. Even if you do the total, if you get any mistake, leave it as it is and try to finish the paper first. Please try and finish the paper first. Once you finish the paper, you come back again and you can cross check, because at that time you will not be losing any marks, because you would have finished all the paper. And then obviously if you discover the mistake, it is great that you will get whatever 1 mark or whatever. So just because for 1 mark, don't try to so it is a very important advice, it is very important practice that you have to adopt, you have to follow, that never try to figure out the difference, never try to tally. No, that is the usual, that is the problem in most of the students. What they do is they try to tally the balance sheet, so they tally the statement of financial position, so thinking that they will lose marks, otherwise they may lose out marks. No, no, nothing like that. So finish the paper first, finish the paper. So even if there is any difference, you finish the paper first, then you come back. So maybe there are some easier questions which you can do, which you do easily without any mistake. So ultimately, you would have got more marks. You would have realized that also. So never do that. Please don't do that. So take this advice as very important, and you have to follow from now on. So all the best. So we'll continue in the next class. Till then, have a good day. Good luck. Dear friends, welcome back to Shasha's virtual classroom. So today we will discuss activity 8.3. So produce a statement of financial position for Samara using the information involved. Example 4. So Samara, this is work example 4. Okay. So this is Samara. So we need to prepare statement of financial position. Statement of financial position. So let us have a look at the items that have been mentioned in this question. So as at 30th April 2020. So statement of financial position at 30th April 2020. Okay. So rent and rate motor vehicle. So motor vehicle is an asset. So furniture and fixtures. So we need this item. We need this item. We need this item in the statement of financial position. We don't need this. We don't need this. We don't need this. We don't need this. We need this bank loan. We don't need this bank capital is required. We don't need this. So commission received not required, not required, not required, not required. Rate is civil cess, drawing cess. No motor expenses, no bank balances. So these are the items and inventory. Okay. So these are the items which we need. So other than this, we don't need any of the items. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. So let us be fast. So what you can do, please try working out the solution on your own, and you can cross check after having a look at this, whatever we are doing now discussing. Okay. So try working out on your own. So the pace should increase. Actually, your speed should increase automatically. So by doing this way only, you are going to get a hold of the subject. Okay. So obviously, first we have to write non-current assets, motor vehicle and furniture, fixtures and fittings is non-current asset. So first item is non-current assets. So here dollar. Don't forget to write the currency. Non-current asset. What is it? Motor vehicle fixtures. Okay, vehicle fixtures. How much is motor vehicle? 7400, 25, 30. 7400, 25, 30. So it is 9930. Non-current assets. Now current assets. So current assets, remember, I told you, please remember the concept, just remember it as ITC. So ITC is nothing but inventory. Inventory, what is the inventory? Given at the end. Always you have to take inventory will be given here, 3760. Trade, receivables, trade receivables is given here, 3400. So it will be 1110. So let us mark the items whatever we have taken. line item. So we have taken this, we have taken this, we have taken this. We have taken this, we have taken this also. 4 line items we have taken. Next, current assets is over. So this is the on the asset side. 17,090 the total assets. Oh, so one more thing is this. One more thing is left. Bank balance. Cash and cash equivalent. See, cash and cash equivalent. So that is known as bank balance. So bank balance is 620. Let us check if there is cash balance. Let us check if there is cash balance. Okay, it's not there. So no cash balance, only bank balance. This will change. This will increase. This will become 0, 8, 7, and 7, 8, 7. This will go off. This will change again. And then 3, 4. This 17710. Okay. So this is done. Now liability side first we have to write capital. Opening capital. Capital is given here 7980. Less drawings. Capital has been taken. We have taken this. We have taken bank balance also. Drawings is 4,000. Add profit. So where do we get the profit? We had done in the previous class. So that is in statement of profit and loss. See here. From activity 7.3 in chapter 7, we know that the statement of profit or loss produced a profit for the year of 9,830. 9,830. Now we add all this. We get the capital. So 7980. 7980 plus 983 minus 13810. 13810. So now non-current liabilities. What are non-current liabilities? So bank loan repayment on 2022. 2022. Okay. So long term. 2022. How much? 2000. Bank loan 2022. Next, non-current liability, current liability. So what are the current liabilities? Where are what are the various current liabilities? So we just have to trade payables 1900.
So we are loading this one. So we have to remove that. And we have to
1900. What else? What else is there? Let us check. So trade payables also taken.
and we have this one. And we have received the balance. So that's so
Nothing else. That's all.
other account. We didn't
1900. Current liabilities are so much. So now you just add 13810 plus 3900. 17710. 17710. So you can cross check. So here asset side also 17710. Liability side also 17710. Total liabilities 17710. Okay. So done. So this is excess activity 8.3. So we have finished activity 8.3. So we can continue in the next class. Till then, have a good day. Good night. See you. Dear friends, welcome back to Shasa's virtual classroom. So activity 7.1. Today we will be discussing activity 7.1 from statement of profit or loss. Statement of profit or loss. So remember it's a statement, okay? So it's a statement. It's not account. So statement means there is no debit side and credit side. So it's not in T column. Statement we can write it in any form, but specifically statement of profit or loss and statement of financial position, we have to write in a specified format as per the international accounting standards. Since accounting is concerned about presentation, you have to follow the format, strict format to write. You have to write it in a specific way, specific steps. You have to follow certain rules. Not the rules, not just the rules of debit and credit. You will be using the rules of debit and credit, but here since it is a statement, there are no sections like debit and credit, but we have to follow the rules. We have to present it in such a way that anyone in the world can understand it. So that is why we are following the particular format. Okay. So produce a statement of profit or loss. So it is profit or loss. Okay. Remember, see, each and every word is important. Each and every word is important. That shows the gross profit. Okay. Gross profit and profit. Okay, not net profit. Okay. So gross profit and profit or loss for the year. So each and every word is important. So how they write. So when we let us start. So when we write, you remember first we have to write the heading statement of profit or loss. Who is the trader? Statement of profit or loss for Shola.
So then this is done. So what I do is
Statement
I will give this
of
so this
profit or loss
so you can just try this problem on your own.
for Shola
If you have any
for the year. For Shola for the year. For the year, which one? For the year. So 31st March 2020. Okay. For the year 31st March 2020. Okay. So what we have to write? The heading is very important. Always. What the students do, a lot of I have observed. A lot of students they just write everything and they will not write the heading. Obviously, yes. The answer sheet, the question paper itself will have so many things. So headings will be there, so many things will be there. So sometimes if it is not there, then we have to write it. Otherwise, if it's already there, then there is no need. So if it's not there, then you have to write it. So statement of profit or loss. So before starting this question, before starting answering this, let us discuss certain points. I will ask you, okay, so remember it in 5 steps. Okay, remember in 5 steps. 5 steps. Number one. Number two. Number three. Number 3O. Three. Number 4 and number. So first we have to start with number 1. Then we have to subtract number 2. That will give number 3. To that we have to add 3O. From that again you have to subtract 4. That will give you 5. So what is 1? 1 is revenue. 2 is cost of sales. 3 is gross profit. 3O is other income. So this plus this plus this has no name. So I will discuss what is this. So then minus 1 is expenses. This will give profit or. So now let us discuss each and every point. So I will ask you certain questions also in the meantime. So that let me just check if you know the answers. You can answer those questions if you already know. So what is revenue? Revenue is nothing but net sales. So what is net sales? Net sales is nothing but sales minus sales returns. Isn't this sometimes instead of sales they will give revenue. They will give sales return also. So there is no revenue returns. Okay, so there is always sales returns. So don't get confused. Sales, if they give sales or revenue, it is one and the same. But always by default you have to subtract sales returns, and that minus that is called a revenue. Revenue is always revenue only. It is not. There is nothing like net revenue. Remember, there is nothing like net revenue. Like net revenue. Okay, so there is nothing like net revenue. So net sales is nothing but sales minus sales returns. Sometimes sales and revenue are interchangeably used. and they give sales returns also. So revenue minus sales minus sales return, always it is equal to revenue. So always when the revenue is the only thing, there is no concept like net revenue. Never. Net revenue is never used. Okay. So always revenue should be used. Very important. Very important. Okay. So basic things, but lot of students they don't focus on small things, but when they are attempting the question papers, they get confused with small things. So they may get confused when sales is given, revenue is given, they may get confused. They may take one or the other, they may leave out. So they may think that your sales return is already included there. So all those things may be, there may be a lot of confusion. So always the concept should be very clear. That is why you have to learn the subject in depth. In A levels, you have to learn the subject in depth to crack, to get the best score. To get the best score, you have to understand each and everything, each and every word, each and every term, whatever it is, you have to understand. Unless the concepts are very clear, you cannot excel in A levels. You cannot excel. So remember, forget it. So don't even think about it. Lot of students, what they do near the exams, they try to work out, they try to do a lot of things, but because of excitement, because of the anxiety, because of the stress, they forget most of it. So unnecessarily, they lag behind and the performance comes down very bad. So never do that. So you start preparing from the day one. From the day one, understand each and everything. Try to work out more and more problems. That will give you best idea. That is the best idea to get very good marks. Okay. So this is what is first step. First thing you should know. First step number one, revenue. Revenue is net sales. That is nothing but sales minus sales returns. So sales and revenue are interchangeably used. So say they make you sales also and sales return also. They make you revenue also, sales return also. There is no word like net revenue. Always it is revenue. So remember this. This is the first step we should know. So in this also, a lot of students they get confused and they commit lot of errors here. I have observed students. So second point. Second point is cost of sales. So what is cost of sales? To get this, to make this revenue, you incur some expenses. You incur some expenses to make this revenue. So that is known as cost of sales. So what all is included here? Purchases. So you have purchased merchandise, purchases, that is goods only, okay? So only goods. You have purchased, okay, goods. To get the goods inside the company or godown or factory or whatever, you might have incurred carriage inward. So remember carriage, there are two types. One is carriage inward and one is carriage outward. Carriage inward means to get when we purchase, we get the materials inside our premises. So we incur carriage inward. So purchases plus carriage inward. So what other things can be included in this? When we purchase, there may be some items that we might not have sold, that may be still lying. We might have purchased some items in the previous year, previous month or whatever, and there may be some items that will still lying with us. So that is known as inventory. That is known as inventory. So to this, we need to add opening inventory. What is opening inventory? Opening inventory means inventory at the beginning. Inventory at the beginning. So before the purchases, before we have sold all those things, before that, there might be some, okay? So there might be some opening inventory. So at the beginning, whatever we have, that one. So that need to be added. So again, in the end, at the end of the accounting period, some inventory might be remaining. So that is known as closing inventory. So in the instant case, for the year, so this is 31st March 2020. So in this case, opening inventory is on 1st April 2019. There may be some items lying 1st April 2019. So closing inventory will be on 31st March 2020. So maybe this is, we can call it 31st March 2019 also we can call. So normally the year will, this opening will become, so normally we take 1st April. So there is no much difference between 31st March 2019 and 1st April 2019 because there is a difference of only one night. Okay, so remember cost of sales is nothing but purchases plus carriage inward plus opening inventory minus closing inventory. So, or you can write opening inventory at the beginning of the year, inventory at the end of the year. So cost of sales, very important. So you can remember this. So like opening inventory plus purchases less purchase returns. So similar to sales return, there may be purchase returns also, right? So if the goods, whatever you have purchased, if they are of not of good quality, you might return them. So it is known as purchase minus purchase returns. Okay. So these are called net purchases. Net purchases. So you can use the word purchases minus purchase returns as net purchases. So purchases, normally you use purchases only, even if there is purchase returns. We normally don't use the word net purchases. We use purchase minus purchase returns. So opening inventory plus purchase minus purchase returns plus carriage inward minus closing inventory. So cost of sales is equal to this. So this will give you cost of sales. This will give you cost of sales. So what next? So revenue minus cost of sales will give gross profit. So to this, we need to add other income. So this minus this will give gross profit. To that we need to add other income. So what is other income? What is other income is nothing but discount received. So this is not the income of the main operations. So revenue means sales. Okay, revenue means sales. This is other income. Other means other than sales, whatever the income, like discount received. So maybe rent receivable. So there may be interest receivable or interest received. So all these are known as other income. So all these are known as other income. So why did I call this as nameless? Why did I call it as nameless? Because there is no name for gross profit plus other income. You have to just calculate and leave it and write and leave it out. So there is no name. No name. So why did I write 3 plus 3O? So that you don't forget this. What happens, a lot of students, they reach here, they forget these items. Again they recollect, again they come back. Because of that, lot of mistakes would have happened. and because of that, lot of time would have wasted. Again, they have to rectify all the numbers. Unnecessarily, they will be wasting time. They will not get time to answer the other questions. So that is why you have to be very careful. You have to plan accordingly. You have to calculate in your mind. You should know all the steps in your mind. So there should be logical flow, logical, smooth flow of numbers and whatever the words, whatever. So they should logical. There should be logical flow. So you get something. So that is nameless. The question mark. Then to that, from that, what we need to do is we take out expenses. Expenses. What are those expenses? Maybe we would have paid salaries. So these are all the other expenses which are incurred for the purpose of after the sale. Okay. So see, what is cost of sales? Cost of sales is to make the goods saleable. But after the goods become saleable, there are so many other expenses. Like you may have to pay salaries to the staff. So you may have to pay rent. You may have to pay rent. So you may have to pay wages. You may have to pay wages to the workers. So you might have to spend on postage and stationery. Similarly, carriage outwards. Carriage outwards also. Carriage outward means when we sell, at that time we incur expenses. It is related to sales, but it is after the finished goods have been produced. So that's why carriage outwards. After the sale has been made. So that is why carriage outward. So carriage outward also. Discount allowed. So discount received is part of other income. Discount allowed is coming here. So remember, this is very important. A lot of students again they commit mistake. Discount allowed should come here. So then whatever they get after you deduct, what you get is profit or loss. So what are the steps? Let us revise once again. Revenue. So that is net revenue minus cost of sales. That will give you gross profit. For that we need to add other income. So that will give one figure. From that we need to subtract expenses. So what we get is profit or loss. That's all. So remember 5 line items. This is 1, this is 2, this is 3, this plus this. Because why 3O? Because lot of students they normally forget this 3O. 4, that will give 5. 5 steps, simple, that's all. So 5th step is not a step at all. So ultimate answer is profit or loss. So this is how you have to do it. So now let us go and work out. Suppose, so if you remember this particular aspect is very important. So if you remember this, these questions on income statement, profit or loss are often asked in A level, CS level, both in AS level and A level. Often they are asked with lot of adjustments. So first, these are the steps you should know. Suppose if one of the other item is not there, for example, if opening inventory is not there, you can just leave it. Opening inventory is not there, you can leave it. So if there is no other income, you can leave it. So opening inventory is not there, you can leave it. You can write 0 or you can just leave it. You don't have to take. So the answer depends on whatever the details given. So the line items, the items are as per the question. Okay. Items are as per the question. Or info. So there is no specific. There is. It is a big ocean. Too many expenses are there. Too many incomes are there. Too many things are there. But normally these are the mostly used, mostly commonly, almost 80 to 90% of the line items. So that is why this is just illustrative. So the items you have to write as per the question or info provided. But the steps are almost same. So you have to always follow these 5 steps. 1, 2, 3, 3O, 4. That's okay. 4 steps, 4 to 5 steps. That's all okay. So you need to remember this. So now come to the question. Having learned all this, then now you can attempt the question. So now delivery cost. When is this incurred? This is incurred to deliver the goods. So their expenses. Office expenses. Purchases, cost of sales. Purchase returns, cost of sales. Rent and rates, expenses. Sales, revenue. Sales returns, revenue. You have to deduct from revenue. Wages and salaries expenses. So hardly how so simple, such a simple question. The question is very simple. So now having understood this, you can solve any number of questions. If the steps are clear, if you know everything, the steps are clear. So first you have to write the heading, statement of profit or loss. So first you write statement of profit or loss, etc. Okay, write on. Then what is the thing first you have to do? You have to write revenue. So what is revenue? Sales. Sales is how much? 134520. 134520 less sales returns. Returns how much? 3040. 3040. What is revenue? So this minus this. 13450 minus 131480. So 131480. Remember this is revenue, okay? So you have to write the details like this in a column, and the amount whatever you get is revenue. Whether if only revenue is there, you can just write like this. If there is sales return, you can write that. If it is not there, you can just leave it. So revenue and sales is one and the same. They are interchangeable. I explained to you all of this. Now from this you need to subtract cost of sales. So what are cost of sales? Cost of sales are related to purchases, less purchase returns, what are purchases? Purchases are 57210. Purchase returns are 1605. So when you subtract this from this, 57210 minus 55605. 55605. So this minus this will give you, so 75875. 75875. So this is known as gross profit. So gross profit. So then to that you have to add other income. So by default you just write this and leave it. So it doesn't you will lose no, you don't lose any marks for writing this. So because normally you forget to write this. So when you are practicing, at least at the time you write. In the exam if you don't write also it's okay. But when you are practicing you just write and leave it, so that in the exam you don't forget. A lot of students commit this mistake. So I am telling you this seriously again and again. So a lot of students they forget this, then again they try to insert, because of that a lot of time will be wasted. So gross profit is the same amount, 75875. So from that you need to take out expenses, like expenses. So what are the expenses? Delivery costs.
Net cash sales and goods and revenue of this business cash flow. Net cash sales and cash
Cost. Office expenses. What is delivery? How many are delivery costs? 8645.
return quality goods to Joe. Return
Office expenses. 23180.
Joe.
Rent and rates 12870.
Joe paid vehicle for service effort after deducting any
12870.
So Joe has paid
Wages and salaries 53985. Wages and salaries 539.
and we issue it as this one.
So now you add all this 8645 plus 2318
Let's check completed.
plus
Then paid for postage, right?
1287 plus 539.
So now
That will give you
we have to
98680.
prepare all these amounts. Bank account,
98660.
capital account, service
So that will give you how much?
ledger account,
So this
ledger account,
minus this.
green column cash.
This minus this. So
We got that back.
loss.
So most of the
Because expenses are more.
so
So loss
completion comes.
7580 minus
So then balance the account at this particular March and September. Balance.
2280.
So we have to
2
balance
280. That's all. So that is the end. So you have to write this in a specific way in this particular format. It's very important. Okay. So you have to use follow these rules. You have to practice this. Often you have to practice. You have to remember. You have to use it. So income statement, statement of profit or loss is very important question. Often asked in the exam. Often asked in the exam. So a lot of questions are often again in the A levels also, AS levels also. They are very very important. So now, so we'll just wind up this session. We'll just continue in the next class. Till then, have a good day. Good night. Bye bye.
What is the first entry? Paid in savings in bank account. So there is one March 1st. So March 1st, bank account debited to bank. Then first entry.
Dear friends,
Bought goods for
welcome to Cashiers Virtual Classroom. Today we will be discussing activity 4.1, a comprehensive problem
so there is one
on
March
posting the ledger,
paper.
preparing cash book, and balancing the accounts. Okay. So Jana's business has opening balances and first October dollar 1000 cash and 2500 in the bank account. There are no balances on any other accounts. Okay, there are no balances on any other. She has the following transactions for the first week of October. bottles for resale on credit from there. Paid rent by debit card 1,000. Sales on credit to Yash. Cash sales 700. Paid cash into bank account 500. Paid their money owed by check after deducting a 5% cash discount. Paid stationery by cash 30 bucks. So prepare the necessary accounts and cash book to record the transactions. Balance the accounts at 7th October and bring down the balances. So first let us make out list of ledger accounts. Okay. So first let us prepare a list of ledger accounts. So Jana put also cash account. So obviously opening balance cash account. Bank account or cash book we can say. So this will come in cash book. Okay. So this is cash book. So even discount will come in this. But discount account also we have to prepare. Okay, then now put a money into the business bank account capital. Bought goods for resale on credit from their purchases and their paid rent by debit card rent account. Sales on credit to Yash, sales and Yash. Sales and Yash. Put cash in the bank account contra so that go to cash book itself. Paid their money owed by check after deducting 5% cash discount. So you have paid, so you have received cash. So cash discount received. So take discount. Received. Account. So they went bank. That is already paid for stationery by cash. Stationery. So how many accounts we need to prepare? 1, 2, 3, 4, 5, 6, 7, 8, 9, and 1 cash book. So cash book, this is ledger account as well as book of prime entry. So this is 1. So first we'll prepare cash and bank account. So then we'll prepare all these accounts. Simultaneously we'll prepare everything. Okay. So this is a comprehensive problem. So if you are not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all those things. So you can focus on this and you can get a clear picture of what has been done till now. So let us start. First October cash 1,000, 2,500. Bank 2,500. First October. October 1. Cash 1,000 cash. 2,500 in the bank. 1,000 cash. 2,500 in the bank. So it is balance product. Balance product. Then Jana put her own money into the business bank account. Own money. Okay. Own money is nothing but capital. Own money is nothing but capital. So Jana has put her own money into the bank account. So money is coming in bank. So money is coming in bank. So and what date? This is first.
is coming in bank, debit bank account, and who is giving it, so it is capital. So complete the entry. We have right here October 1, 8,000. So it is bank. By bank. We have received through bank. Next. Bought goods for resale on credit for 35,000. Purchases on 5,000. Purchases 5,000. So what date? Date is on 2nd, October 2nd. October 2nd. So purchases account debit. Their account credit. Their account credit. October 2nd. So again this you have to write here. Again this you have to write purchases. So the entry is complete. Next. Paid trade by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as bank payments. Rent 1,000. Debit card bank. Rent and bank 1,000. What date it is? 2nd. Second. Rent 1,000. Money has gone out from bank. Okay, so rent account, money has gone out from bank. So it will come here. So next, so we have to record in the opposite side in rent. So rent account. So 1,000. So October 2nd. So through bank we have paid. So rent account is an expense. Nominal account always debited. Next. Sales on credit to Yash. Sales and Yash. Sales on credit to Yash. Sales. What date? 4th. Sales on credit to Yash. Sales on credit to Yash. What is the amount? 3,000. Credit. Sales is always credited. So Yash. So opposite side. Yash account will be debited. Why are we debiting him? Because we have sold the goods to him. Because Yash is the receiver, account that receives. Yash account receives. So debit the account that receives. Next. So cash sales 700. So what is happening? Sales is happening and cash is coming. What date? 4th. Cash sales 700. 4th. Cash sales. Cash sales means money will come in cash account. Sales. So we are receiving money in cash through sales. So sales account will be deleted on the opposite side. Sales account.
cash. How much? 700. So what did? 4,000. Paid cash into bank account. Paid cash into bank account. Bank what date? 5th. Paid cash into bank. So cash into bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. What date? 5th. Cash is coming. Paid cash into bank means money is coming in bank, but going out from cash. So here, so it is cash payment and bank receipt. So same date, same line. So against this, so money is going out from cash and coming in bank. So against this, your rate bank. So against this, your rate cash. Next, paid the money owed by check after deducting 5% cash receipt. So whatever money you have to pay to the. So we have bought 5,000 goods worth 5,000, and we have to pay after deducting a discount of 5% on 6th. We have to pay. So how much we have to pay? 5,000, 5% is 250. 4,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. On 6th, we have paid there 250. Discount received is 250, and money is going from bank 4,007. So to whom we have paid? We have paid to them. So to them, when we have paid on October 6th. How we have paid? We have paid bank 4,750 and discount received 250. And this we have to transfer to discount received account. Yeah, it is discount received 250. What date? Only amount on 6th. October 6th. Cash. So we are writing it. So next, paid for stationery by cash. 30. Paid for stationery by cash. 30 is what? It is on 6th. Paid for stationery by cash. On 6th. On 6th, we have paid stationery by cash. So money will go out to 30. Stationery. stationery, money will go out. So what you have to do? You have to write in stationery here, October 6th. So through cash, we have paid stationery. Cash stationery account is always debit, and we have to credit cash. So because cash is going out, debit stationery with 30, cash. So now we have to balance. How do we balance? So what is the most important account here is the cash. So basically what you have to do, you add all this. So 2500 plus 8000 plus 500 is 9.5 plus 10,000, and this side it is 1000 plus 4750. It is 5750. 10,000 minus 5750. So what you have to do? You have to write down in pencil here. Write down what you do. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5750. Here you will get 10,000. So 10,000 minus 5750. You have to subtract one from the other. So 10,000 minus 5750 is 10,000 minus 5750 is 4,250. So what you have to do? 4,250 you have to write here. 4,250 you have to write here. So that total on both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried out. So balance carried out. So this side also it is 1,700. Here it is 530. So 1,700. This side is heavier. You write down here 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 530. 1,170. So you write down 1,170. You write down 1,170. So that the total on both the sides become equal. 1,700. So this side is also same. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and real accounts, because they will be carried forward for the next accounting period. So cash capital account is 8,000. Balance carried down is 8,000. So this will be carried down to balance carried down. So will become by balance brought down. By balance brought down 8,000. So only the date instructions, here it will be October 7th, here it will be October 8th or October 17th. So balance total. So then, so purchases account 5,000. So there is no need to balance. This is 5,000 itself. You have to just, this will directly go to the trial balance. So they were out. Here also 5,000. Here also 5,000. So there is no question of balancing here, because the total on both the sides are same. Rent account. This will straight away go to trial balance. You have to write this as it is. Sales 3,700. This will go to sales account directly to trial balance. So if you want, you can just write that too.
this will go to trial balance. Yes, account. So balance carried on.
So that both the
Balance carried on is 3000.
this is 10,000.
So this will be brought down again. Balance
So something was there on the
brought down
debit
with
same value will come. So here it's amount is
so discount received is 250. This will straight away go to trial
balance
balance.
got down when it is
Stationery is 330.
March
30 is straight away go to trial balance. So this is the end. This is over.
total.
What else we need to do in this? So balance the accounts at first and bring down the balances. Okay.
So balance got
Bring
down
down the balances.
again.
This is how you have to do this balancing. Yes. So okay. So we'll catch up in the next class.
So normally nominal accounts like purchase account and sales account, they are not balanced. Why they are not balanced? They are directly taken into trial balance. They are just total and taken into trial balance. So rent account is not balanced. So you have to just total it up and take it directly to trial balance. So news account. So if you see, both the sides are matched. So both the sides are same. So there is no question of balancing at all. So they are already balanced. There is no balance got down or carried on. So there is no difference. So that's why it is not going to. Then rent account is a nominal account, expense account, so it is not balanced. So just we have to total and take it to the trial balance. Okay. Barney account. Barney is a customer. So accounts received. So we have to balance it. So it should be balanced on so March 7 should be written as balance carried down. So that will be same amount. So again, the total is same 2000. Total should be same on both the sides. Remember, total is to be same. So these are the total. So what happens is 8th March, March 8th, they become opening balance. March 8th, they become opening balances. They become balance brought down. We have to bring down the balance. So that is so postage account is not balanced. It is a nominal account directly transferred to this one trial balance. Sales account directly taken into sales account directly to trial balance. There is no question of balance. Purchasing account is capitalized directly taken to trial balance. This is new account directly taken to trial balance. So what should be balanced is only the personal and real accounts and the assets and liabilities. So all these assets and liabilities should be balanced. So whether they are non-current assets, current assets, non-current liabilities, current liabilities, only they should be called balance sheet items. So they are called the items of balance sheet. So these are assets. Cash is an asset. Bank is an asset. It is something which we always keep. So it will always be furnished. So that is why. So see here, balance carried on will become balance brought down in the next. So it was balanced on 31st March. On 7th March, the balance was 530 rupees. Sorry, $530 and $5,390. So this became opening balance on 8th March, that is $530 and $5,390. So this is how we have to balance. So this is done. column table to indicate whether or not the cost is fixed. The purchase of motor vehicle, total value item expenses is cost. And then we sold some goods for these capital expenses. So what is happening when we sell, what happens? Money comes into bank account. Bank account. So what is happening? Sales. Sales is the revenue. Sales is the revenue. Sales account is the profit. Okay. So then the payment of various goods money to customer for goods return. So goods return money to customer. So this sales the amount of customer your sales. The amount of customer for purchase and sales purchase. So we have to pay. And we go. Suppliers of the office business to the return of balance. Supplier receives refund. So supplier they are refunding. They return goods which have been purchased with us. Purchase of the office purchasing. The sales account is a normal account. So money is coming in back. The figure and fixed amount is a given. 400 account, bank account, what is it? So what is happening next process? Suppliers account are kept in nominal ledger. False. They are not kept in nominal. So now what we have to do? They are kept in. We have to specific suppliers account payable ledger. Repair ledger. The day-to-day cost of running the business. An example of this. Let us prepare user accounts, running ledger account, balance sheet account. So complete the following sentences by inserting the correct words into order. This. The sales account records the dash of the business as an example of dash sales. So always we have to write like this one and two. So complete the following sentences by inserting the correct words into order. The sales account records the revenue. So example of Anima started business by paying 14,000 into bank. So what is happening? Money is coming in. Bank account is debited or credited. Bank account is debited. Bank account is debited. So what we have to do? The purchase of goods by example of capital expenses. Bank account non-current. So this is the name. Bank account is debited. This is the name. So remember sir, bank account. Now what is going to do? When students remember, this something will be written here. Checking this is debited. No. This bank account is debited. So bank account is debited and which account is credited? Which account is credited? Capital account is credited. Capital account is credited means capital account. So capital account is credited. So capital account is credited. So this is the dash capital account is credited. For what actually the business was done. See, bank account is debited. Capital account is credited. So now here we have to write this. Why? How? Because of capital. So this is known as completion of the activity. So completion of the operations. Not dash is debited with capital account. Bank account is debited with capital account. Capital account is credited with bank. Capital account. This will connect this. Bank account is debited with capital. Okay. Very simple problem. So we wind it up and we'll continue the next class. So this is known as completion of the activity. Completion. There will come to short notes here. Okay. So when we write here, so today we'll be discussing. We write here trial run. So next, what is the next one here? Bank account debit to Krishna in 5,000. How to prepare a trial run? And what we have to write here. So go buy given credit details, they have given credit certificate. What will come in credit account? Say sales ledger is always credited, sales ledger is always credited, sales ledger is always credited, purchases always debit, purchases is always debit. So we have to understand this. Whenever you are going to exercise, know this important fact. So coming to the question again here.
It is according to the entries whatever entries
So
whatever.
remember one thing.
So
Before
this
defining organic,
first you have to write as
assets.
finished entries. So this is how it is. So the final amount.
And expenses
So comprising the total amount. The entries
are all debit balance.
and adjusting whether
Okay, assets,
the
real
entry
account assets like this.
you can write your
Uh,
so
bank
very
assets.
simple you know your bank
And so all these are assets. So all these and expenses. So purchases,
okay.
wages.
So like
All these are
it
expenses.
states in the
And
first
all
line
debit balance.
the
So
following.
it should all be debit. So this will always be debit balances and they should appear on the debit side.
Then capture the units plus payable
So remember this,
or
don't be bad. So this is very much simple, very basic foundation to for balancing. Then liabilities and expenses. Liabilities and revenue.
So,
All
dear friends, let's continue with activity 1.2. So, this is David Hopkins' latest book.
yeah,
This is from David Hopkins' latest book. Yes, this is
liabilities and revenues are all credit balances. So what are liabilities?
David
Liabilities
Hopkins'
are
latest
something
book.
new, right?
So,
So liabilities are
complete the
something
entries
new.
for the following table with information taken from the accounts of
So
a
internal
trader.
is capital.
So, name of accounts to debit, name of accounts to credit.
So
So,
external are
what you
liabilities.
do basically, you start with your own. I mean, you see the question and answer yourself. Then you can compare with the answers whether you understood or not.
External
Okay,
liabilities.
paid rent by check. So what is happening? Paid rent by check.
Yeah.
Money is going out. So money is going out means credit what goes out.
And
So
interest
credit what is given away.
always.
So it is bank. So money is given. So bank.
Unnecessarily don't
Bank.
exaggerate your a lot of things, answers and all.
So we have to write here bank.
Just remember this. You can do. You have to just identify whether the given particular item is debit or credit. So sales. Sales is a revenue. So it is an income. It is a credit balance. So sales is an sales is a revenue.
Paid rent. So rent is an expense,
Interest
right?
interest is a
So rent is an expense. Debit all expenses and losses.
interest
Rent
return.
account.
Interest return is again credit balance. Wages is again debit balance. Heating and lighting expense debit balance. Rent payable expense debit balance. Rent receivable income debit.
So postage and stationery paid by check. Again, money is going out of bank.
Debit balance.
So postage and stationery is an expense.
Food
So debit.
expense.
Postage and stationery only again. So
Discount
postage.
expense debit balance. Discount
So
receivable
here
income revenue credit balance.
why? Because money is given.
Expense debit
Credit
balance.
what goes.
Delivery value
Telephone bill paid from the bank account by
debit balance.
standing order.
Bank balance
So whatever it is, whether it is standing order or whether it is given whatever. So
assets.
money will go out from the bank itself. So bank.
Trade
So
credit.
here it will be telephone charges.
Liability debit balance. Drawings opposite of calculation. It is always debit balance. Drawings
So heating and lighting bill paid from the bank account by standing order.
but it is
So heating and lighting, heating
so
and
you
lighting.
put accordingly you
So
put
heating and lighting expense.
put it on the debit side and credit side and then you
Right.
can your totals are created the value.
Right.
So we'll just do it.
Paid wages by check. So what is happening?
You
Wages.
can prepare the trial balance.
Wages account by bank. Why? Because money is
Keep
going
the
out from bank. Rent received directly into the bank account. So what is happening? Your money is being received. So bank account will be debited because money is being
interest
received. Bank account will be debited. Rent received. So
so you
rent
can write down or take the
received.
written form or whatever or you
So
can
you
write
specify because rent can be paid. See here rent is paid. So it is rent is received. So or you
income account. So rent received also you can write, or rent paid account also you can write. But you have to specify, because rent paid is separate and rent received is different. So this is an expense. Rent paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify, because we cannot mess up. So that is what is disclosure concept, which says that we have to disclose everything in detail. So pay bank interest received into the bank account. So what is happening? We are receiving money in bank, and we are receiving interest. So interest received we can interest received. So again, interest can be received also and paid also. So that is why we have to specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening. Drawings. So money is going out from bank, right? But out of bank account. So then loan received from a friend B. So what is happening? You are receiving loan from a friend. So all the transactions are assumed they are to bank. So you write money is being received in bank account. So but who is giving it? It is Lee who is giving. So create the giver, create the account that gives. So it is the Lee who is giving. So Lee account. Bank account, Lee account. So money is coming in bank, and Lee is the person. Lee is the account that is giving. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank, and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When you repay the loan, Lee will receive. So Lee account will be debited, because debit the account that receives. Okay. So be specific, be clear which account will be debited, which account will be debited. You have to be very clear. So then purchases paid by debit card. So whether it is debit card or a check or whatever, always it is money will go out from bank. So purchases account debit to bank. Bank account, because money will go out when you pay out from bank. Debit card obviously money will go out from bank only, because unless you have money in bank, money cannot be debited by bank. Sold goods and bank that take. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a credit. So credit all incomes and gains. Revenue. Return goods to supplier and bank the refund. So you are returning the goods to supplier. So supplier is receiving. So you will debit supplier. And money will go out from bank, because money is given away to bank. So refunded money to customer by check. Oh, sorry. So see, return goods to supplier and bank the return goods to supplier. That's what is happening. You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit no? Yes, but return goods to supplier and bank the refund. And bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited. Bank account will be debited. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase returns. It is called purchase returns. Correct? No, it is purchase return, not supplier. Okay, so this is not relevant. It is purchase returns. Purchase returns. So refund money to customer by check for goods return. So it is, this is sales. So when we have sold the goods, but we have received back. So it is exactly reverse of sales. sales return. Sales return, and you will credit bank because money will go. So carriage inward will be check whether it is carriage inward or carriage outward. Money always will go from bank account. So carriage inward. We have to specify whether it is carriage inward or not. Carriage inward. So carriage outward. So carriage outward is also an expense. Whether it is carriage inward or outward, it is always an expense. So money will always go from bank. So the owner of the business has taken goods for her own use, but no entry has been made in the books to record this. So it has not been made. So what happens? What way will show the effect of this on the statement of financial position? So what happens? Inventory will be showing higher. Inventory will be showing higher. So here it will be refunded goods to supplier and bank debt. So we have received the money bank will be debited and purchase returns will be credited. Purchase returns are opposite of purchases. Purchases are debit right. So purchase returns are always credit. Okay, purchase returns. So this is how it is. So this is activity 1.2. So we'll continue in the next class. Students, so the following information has been extracted from the statement of financial welcome. So today we'll discuss practice questions from cash transactions. David Hopkins letter. So non-current assets, working capital. So what are the steps? You have to add non-current assets and working capital, right? So you have to add the non-current assets and working capital. So before seeing this complete video, what you can do is you can just have a look at. You can try solving this question on your own. So that should be 330,000. So which of the following financial transactions is most likely to require a debit entry? Net assets. What is debit entry in the bank book? What is being received? So what you will receive when you purchase, you will not receive. When you rent receivable, obviously you will receive. So it will debit it. Sales returns you don't receive. Wages you don't receive. So this is the thing you receive. So this is the answer. So if the concept is clear, you will not even think about these problems. You just straight away see this and you will select this. So that's why the concepts are very, very important. Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? So don't be in a hurry when you solve. Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? Conceptually perfect. So conceptually strong. So money will go. Obviously, money will go. Creates a bank account will be created. Money will not come in. So money will go out. So then, when you are selling, Amir got goods, bought goods. When you buy, you pay carriage advance. So see the. A trader takes money from the business bank account for personal use. Which entries record this in his books? Capital minus liability. Capital is also liability. This is also liability. They cannot be equal to us. So money from business bank account for personal use. Which entries record this in his books? So you can do this using the formula for personal use twice. So money will go out. So you know that, right? So assets is equal to revenues. So it cannot be we receive. When we receive, you do it bank. When we receive, you do it bank. So obviously, when this cannot be that. So drawings will be the correct. So these are practice questions. This is the first lesson that is David Hopkins. Accounting. So when you just so what you can do is you just have a look at the next problem. So below are the financial transactions or given as business, no money is necessary. Ledger accounts and post the following financial transaction returns.
Where are Cummins business bring 27 are not where are they not account for commission transactions. Purchase machinery, paid what goods. So paid carriage agreements, sold goods, paid for heating and lighting, received rent, bought more machinery, bought more goods. So what you can do is you can try working out this question on your own. And suppose you have any doubt, or if you are unable to do it, so you can leave a comment in the description, in the comment section of the video. So you can, I will just help you work out. So I will work out the problem and so till then, have a good day. Bye. Dear friends, welcome to Shahja's virtual classroom. So today we'll discuss activity 2.1. So this is David Hopkins' latest book, latest technique. So we'll start. So below are the financial transactions from Max Business, personal transactions to closing cost. All goods are bought and sold in credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash, cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So if you would have found one part, the other part would have been easy. But here, it looks somewhat it is somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So basically, we need to know the personal account. The personal account. So whether this account is receiving or giving. So we need to know this. So purchase goods from Tina that cost 2000. So when we purchase goods from Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working out this question on your own. So then you can compare with the answer. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account, return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Omar account. Because sales account is already there. Omar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali sold. Ali, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare one
3, 4, 5, 6, 7, 8 ledger accounts. Basically, we need to prepare 8 ledger. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be. So always date should come. Always date. Don't miss to put the date and the currency, date and the currency. Always. Okay, write always the heading. So which account you are preparing. So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember. So that the logistics will be clear. So how much, what is the worth of goods you have purchased, and it is on October 1st, 2000. October 1st, 2000. So purchases. So purchases account debited with 2000. This is how this is what it means. So a lot of students, what they get confused, So they write something here, no? So the thing if they have debited, then no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit, this side is always credit, always date. You have to write always date, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you written 2000, here also you written 2000. See, debit 2000, credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what should be debited, the other account will be credited. So this is very important. So next, coming to the next, sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account, Ali account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd, payment. October 2nd. So it is always credit. This side is always debit. So how much? 300. See, sales is a revenue. Sales is always created. Weight on incomes and gains. Sale is always created. Sale account is created by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So for sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in books. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing we should understand. So very important. Yeah, very important. So a lot of students they get confused with personal accounts. Rest of the accounts they do easily. Say nominal accounts expenses they write off as an expense. Income account they write off. A revenue account they also write. Asset account debit what comes in, credit what comes out. That also they write. But in personal account they miss. They get confused. They think from the point of view of max business, but they try to think what Max is doing, what Max is doing, whether Max is giving, Max is receiving or something like that. No, actually, you have to see what Tina, what position is in Tina. So Tina gives, Ali receives. So this is what this is very very important. Okay, now it has been clear to you. So now it is everything is easy. So then the entry is complete. Next. So sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost 200. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited to 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200. On what date? On 4th October. October 4th. So October 4th, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned the goods to her. So purchase returns. Purchase returns. So purchase returns. We have to open an account called purchase returns. This will be always debit. This will be always credit. Always in dollars. This in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? 200, right? 200. We have to credit. This is how we have to do. There are so many ways of remembering things. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns 200 with the debit to Tina 200. This is how you have to read and you have to understand. You have to understand accounts. Very important. So that the logical flow of concepts is very very clear. Okay. So very clear. Logical flow of concepts is very clear. Now next. Purchase goods from Lim that cost 2400. So Lim is another person. So again, what is Lim doing? When we purchase from Lim, obviously Lim gives. When we purchase from Lim gives. So that's why we have to credit Lim. We have to credit Lim. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there 2400. What date?
Date is very important. 8th. So, 8th. From whom? From leave, isn't it? Yes. So you have to leave. So purchase account is debited with lim. Purchase account is debited with into lim, and lim account will be credited. Which is lim account? We have to prepare lim account. Lim account. We have to so October. In 2400. So why are we crediting lim? Because we purchased from lim. Understood. This is how it is. This is how you have to understand the concepts. Very clear. Very clear. Now it should be crystal clear. Now let us move forward. So then, sold goods to Homer for 1100. Sold goods to Homer. So when we sell, obviously Homer will receive. So Homer is the receiver. Account Homer receives. Homer receives. So Homer receives. So Homer account will be debited. Debit to the account that receives, right? So Homer account will be debited and sales account will be credited. Sales account is already there. So we have to prepare Homer account and we have to get in sales account. So Homer account and sales account. Homer account. Homer account. So Homer account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Homer account is debited. Why? Because we have sold him. Sales. Sales. Homer account is debited with sales 1100. So now Homer account is debited. Sales account is already there. So in sales account we have to write now. We have to write it in sales. Homer account. October 8th. Homer account. 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have a return. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10th. Purchase returns Tina 100. Purchase returns Tina. Purchase returns Tina. Tina. Where is Tina? Purchase returns Tina. Why we have debited? Purchase returns. So next, all goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali
Ali gives us back. Ali gives. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali 11th, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit the giver. He is the giver of the goods. So October 11th. Why are we crediting? Because of sales returns. So now sales returns. One more account, sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly because of that. It is always a debit. So here the amount will be here and it is on 11th, October 11th. And what is the amount? Total rate. You have to rate. Ali 300, sales returns 300. So there is no more. So he has returned everything. So sales returns account 300. We have to debit. Sales return account will be debited with Ali's account 300. So this is how it is. Okay. So next, this is activity 2.1. So now what you can do, you can try working out activity 2.2. So below are the financial transactions for Ken's business. Post the transactions to the ledger account. All goods are bought and sold on credit. Bought goods from Ting that cost 5,000 less trade discount of 15%. So sold goods only for 1,000. So return goods costing 500 less discount to Ting. So purchase from B that cost 4,800 from trade discount before trade discount of 20%. Paid Ting all money owed. Paid B for goods bought on 15 November. Received full payment from B. So what you can do, you can try working out this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. Dear students, welcome back to Shastra's virtual classroom. So this is activity 2.2, credit transactions from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Penge or Pen, whatever. So business post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, pinch account, So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay.
So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 ka 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to tinge. So again you are returning the goods. This is return goods. So you are returning to tinge. So who is tinge? So it is is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is a 45. So 45. 515 is a 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct, no? 5, 15 is a 45. So 55. 55. Okay. So purchase goods from B. So again purchases. Purchase account is already there. So B. So cost 4,800 less trade discount of 20%. So this should be recorded at 4,800 minus 20%. So 4,800 minus 20% is so 48. $3,840. So 3,840. So you have to record it at 3,840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you are paid to Tinge. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from Lay. So that will also be recorded in bank account. So how many accounts should we open? 1, 2, 3, 4, 5, 6, 7. We have to open 7 accounts. So first you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 4,250, 4,250. Because purchases is an expense. So expense account is always debited 4,250. So date always you write the dollars. Amount you have to always write. Don't forget to write the dollars. And what is the date? November 1. And it is sold to, it is bought from Tinge. So November 1. So see purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So
prepare Hadley's income statement for the year 31st December 20.
so Tinge account will be created. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next, the entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be credited with purchases. So next, sold goods to Lee for 1,000. Sold goods to Lee. Sales and Lee. Sales account.
Name of the trader or Hadley's income statement for the year. So what are the 5 steps? First we have to record sales and sales figure. So sales minus sales figure. So first step. Sales
Lee account.
sales. What are the sales?
Sales account and Lee account. So how much is sales sold goods to Lee for 1,000 and November 5th. November 5th. November 5th. 1,000 credit to sales because sales is an income. So credit all incomes and gains. So 5th. So Lee, because Lee is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1,000. Why are we debiting Lee? Lee because we have sold him. Sales. So we have sold him. So debit, credit. Sales account will be created because it's an income. Lee account will be debited because he is the receiver of the goods. Okay. Then comes next. Next. Return goods costing 500 less discount to Tinge. So we are returning the goods worth 500, but after discount it is 455. So return goods means these are purchase returns. Tinge account is already there. Purchase returns, Tinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? we have written to tinge. We have written to tinge. So tinge. So what we have to do? We have to debit tinge. Now we have created purchase returns. Now we have to debit tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit tinge. 4 and always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V, and it is on 15th. 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 November 15th. Purchases account will be debited 3840. 3840. So purchase account will be debited 3840. We have purchased from where? V. Okay. So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open, if it is not there, we have to open V account. So when we purchase, we would have given us the goods. So November 15th. November 15th. So 3840. So why we are creating V? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3840. So now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid V for goods bought on 15th November. So we have bought only once. So we have to pay tinge. We have to pay V, and we have to receive from V. So received. 20th we have paid to tinge and V. 20th we have to pay. We have to pay to tinge and V. So bank account. Bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to tinge and V. Tinge. How much we have to pay to tinge? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to tinge. So we have paid 3795 to tinge. Complete the entry. Complete the entry. How we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to tinge. We have paid 3795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3840. So obviously we have to pay him 3840, and it is on November 20th. November 20th we have to pay him. So 3840 we have to pay. So What account will be debited? Bank account will be credited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away 3,840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1,000 from Lee. So we have received, by what date we have received? We have received on November 25th. November 25th, we have received 1,000. So obviously we would have received from bank account. So you can write bank or cash also. So by default, we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from Lee, right? Lee, Lee 1,000, 1,000 from Lee we have received. Over. That's all. So we have finished. What else is required? Below are the financial transactions for Penn's business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself. Then you can compare checking with the answer here so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account, we have paid everything. So there is no amount left over. Sales account is created. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be created. Sale account will be created. Dia account will be debited. Why? Because sale is an income, credit or incomes and gains, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods. Dia account will be debited. Buy machinery for use by business on credit from Joints Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases. And we have taken Allen is the giver of the goods, and that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recorded. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So purchases, these are all purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit, so we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods return. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So who will receive? Joint limited will receive. Receive full payment from DIA less cash discount. So we have received payment from DIA. Receive full payment from DIA. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DIA because she is the giver of money. So pay Alan for goods bought less cash discount. So here we have to pay Alan. Alan is the receiver of money, so Alan account will be debited. So we are paying. So money will go from bank, and discount received is again discount received. So the amount we are not going to pay because of discount. So that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is activity 2.3, David Hopkins, the latest book. So, okay. Dear friends, welcome back to Shasha's virtual classroom. This is practice questions from David Hopkins, lesson number 2, credit transactions. So which of the following transactions, so before attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with our solutions with the discussion. So always get back to me in case you have any doubts by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money doesn't go or come in. Payment to a customer. So when we pay, obviously money is paid, money is credited. So bank account is credited because payment by a customer. Sorry, see, this is payment by a customer. Payment by a customer means we will receive, will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So is a purchase. It is a purchase for Joe's, and it is Joe's books means it is purchase. In Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at cross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170. Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded. This will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold. Sales entry will be recorded. Sales entry will be recorded. Okay. So will be recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry, not this, not this, not this, not this. These are exam style questions, and this type of questions will come in AS 11. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books or books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 credit discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is 400. So then purchase goods from Prem 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And discount, cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you are sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded at 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Prem. So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase journal. They record all purchases, individual purchases, and purchase returns journal. Purchase returns journal. They record all purchase returns and cash book. Cash book. To record cash payments, cash payments and discount. So cash book for payments and discount, cash discount. So three books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of prime entry, three books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase return journal, purchase returns account. So then Cora account, Prem account, Prem account, discount received account. So these are the ledger accounts we need to prepare: 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future problems, I mean future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we will start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the selection here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase return journal. Okay. So let us first prepare purchase journal.
Just assumption, okay? So we are
Purchase journal.
this is the profit before discount. So this paper column.
So what all will come? Date will come.
Understanding is clear, so that we are sure what has happened and what should be, what is the effect method. Otherwise, don't try to
Name of the supplier,
do some
because we purchase from supplier.
calculations and
Name of the supplier.
ultimately, so whatever method you do, ultimately you have to get the correct answer. So
Invoice number.
what has been done? They have the actually this is the right one.
Amount.
This is the right one.
In dollars.
And this is
okay. So first, what is the date?
wrong one. What wrong one? They have.
So we have purchased on 1st November. November 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So it should be recorded at 8,000. See, remember always, paid discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from Prem. Again, purchase goods from Prem. So again, goods from Prem, that is on 2nd November. So 2nd November from Prem. So the amount is 14,000. Amount is 14,000. Next. Again, you have purchased goods from Cora for 16,000. So at a rate discount of 20%. Again from Cora. What date? It is on 5th November. You have purchased on 5th November from Cora. So how much? What is the amount? 12,800.
Garage invoice in a trial balance is 2,300. Garage involved in a trial balance is 2,300. It has been entered in trading section of the income statement. Again, trading section has 30.
So what is the total purchases? So 8 plus 14, 22, 22, 34, 800.
So again, we'll not just do it.
So these are the total purchases. This is purchase journal. Now we need to record, prepare purchase returns journal. Purchase returns
So again, income statement. So let's assume.
journal. So what is the date again here? You have to write the date. You have to write name of the supplier.
So what has been done? Garage involved in a
So
garage involved in 20.
and so what date? Return goods on 4th November. So November 4. So what is the amount? 320. So from to whom we have returned?
Motor expenses of 600 has been posted to the motor bank account. So motor expenses. Motor expense is a expense. So it should go
Cora.
to the profit. So motor expenses. Motor expenses.
Cora. 320. we received credit note.
But what they have done?
See, remember one thing. So when we are writing the purchase journal, we recording individual. Okay, so we are recording individual entries.
So now let us see. So what is the right thing of doing?
See, very important. Okay, so this way you will remember this again. When you will remember when you are preparing control accounts, when you are reconciling control accounts, at this time, at that time you may need this knowledge. So at that time you may need this knowledge because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. And so this is discount column. This is discount. This is cash. Cash column. So it is in dollars. So this is also in dollars. So here, next first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Cora and Frame. So we have paid to Cora and Frame. So we have paid to Cora and Frame. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora? Cora you have purchased, you have returned, again you have purchased, returned, purchased, returned. So 8,000 plus 12,800 minus how much you have returned? You have returned 320 worth 320. So this gives 8,000 plus 4,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount.
Yes, don't try to do the problem without understanding. Never do that. Okay, please never do any problem without understanding. Have a clear cut understanding of the concept and please do it. So that each and every
So discount 400.
please
But you already pay, you have returned goods worth
use my class
320. So what is the discount you will receive here in this case? In this case,
so let others also get help from this.
the the discount is
so we'll catch up in the next class. Basically, I will be starting the next one, that is statement of financial position in the next class.
so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is
Welcome to Sharper Software Classes. So today
4,800 and there is a return of 320. So
whatever we have
purchase, return. So net purchase is 20,480 and discount is 5%. So be careful. You have to see sometimes the rate of trade cash discount will be different. So in this case, here also it's 5% cash discount. Here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to frame, how much you have to pay? Frame, so the entire amount you have to pay. So frame is 14,000. Discount is 280. Discount is 280.
how to pass those entries. So that's all we have. So here
14,000. Frame 14,000.
accounts
Minus 280.
So when someone gives money and someone receives money, how to record it. And we have even learned
13,720.
how to record
So you have to pay 13,720.
when payment is being made. So all these things we have learned.
So this is the amount you have paid to frame. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November
Their amounts are not paid
So you have made the payment on November 9th. So this is the cashback. This is how you have to receive record. So discount column 1024, frame 280. So cash and this. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts.
when there is a transaction with personal account, when there is a transaction with expense account, income account, and
So what are the various ledger accounts we need to prepare?
all other stuff. So we have learned in credit transaction. How to record credit transaction? We have learned in second.
Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So
Please go
we have to
and then again
post all the transactions
books of payments.
at 10th November. So what we have to do 10th November. So
We have learned
November 10.
so what
So
are books of payment we
what is the date? What is the amount of purchases? Total purchases? We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. Purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you have to write 34,800.
sales return journal.
34,800. So purchase journal. See, this logistics is very important. So when you are doing control accounts at this time, you will come to know. So you have to reconcile. So it's a very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but when we enter it in purchases account, we record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10,
Are entered in sales journal. Purchase journal, all read purchases.
purchase returns journal.
Return journal, return.
So what is it?
Then customer return credits. Then what
320.
Purchase return journal, we record the purchases, we reject the material and return amount. It is given that. So that is what is purchase return journal. So that is written in purchase return journal. So in cash book we record amounts received.
So now we have to prepare other accounts, Cora account. So we have purchased from Cora, so Cora's account will be created. So always write the amount.
And even discount can
Always write the amount.
So we have done how to record
Cora account. So Cora account will be created. So what date when we have purchased?
general journal or journal.
So you can see from here itself.
Journal adjustment entries like outstanding expenses, prepaid expenses. So purchase of non-current
Cora we have purchased on 1st and 5th.
purchase of
1st and 5th.
So for non-current assets, entries related to non-current assets.
1st and 5th. So on 1st it is 8,000.
So basically,
On 5th it is
present from
12,800.
12,800.
12,800.
So that is
So this is purchases.
general journal or
Purchase.
so that is how it is.
This is purchase. Remember, you are writing purchase here, not purchase general. Okay. Purchase. Purchase 8,000. Purchase 12,800. So here this side. So it will be. So this is number one.
Division of classification of accounts. Division of
Because purchase journal, it is a journal. Okay. So purchase journal. So this is core ledger account. So now next, what is it? So what date you are written? You are written on 4th November. So how much? 320? Yes, 320.
how to prepare. All these things we are done with ledger account. So the division of classification of accounts. So what is the nominal business classification?
So next, frame account. So how much is frame account?
Balance of ledger account. Balance of ledger account. So that is how to
So frame account is
do the balancing of ledger account. And we have done comprehensive
14,000.
comprehensive
So frame account is 14,000.
comprehensive profit. Two.
So this is on what date?
All these aspects and
This is on
prepare ultimately
2nd November.
trial balance. So how to prepare trial balance? Prepare trial balance. What is trial balance? How to prepare trial balance? The format of trial balance, the procedures,
Purchases
structure of the design of trial balance.
14,000.
This we have done.
Okay. So now come to discount received. So again, discount received is again. So discount received is again. So it will be created. So individually you have to write. Or you can write the total. So,
The preparation of trial balance.
so discount received is 1304, 13,004. So we have to record that discount received 13,004.
So after this, the next step starts. So the next step is known as financial account.
13,004. So November 10th. So cash
The
book.
accountant does the financial accounting job. So he starts with financial accounting.
So you have to write it, that's all. So 13,304, not 13,004, 1,304. So that's also discount received. So what else is there? So
Here was all basic, but very very important for you to get understanding of accountancy. So now
so I told 6 ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and the book ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we have already prepared. So that's all. So that's the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important prerequisite for you to score good marks. So welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of in lease cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at my looking at this particular session, you can just try working out the problem on your own so that your understanding is clear. So always try to work out on your own and then compare the answers so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particular, you have to write this in a particular format or particular what do you say in a particular style. So you cannot write it as a however you want. So the style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between. So there should be one line. So again, similarly, this side also, there is one column, another column, date, one column. So this is date, one column, date. So details, particulars, then discount received, one column, cash, one column, bank, one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here, okay? So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit, this side is credit. So the date, whatever your particulars. So first you write this till here. So copy, you have to write as it is. This way you have to write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in lease cash book. April 1st, cash sales 1000. April 1st. April 1st. Okay, so one more thing. So whatever we receive, we have right here. So all that is received, we have right here. And whatever we pay, we have right here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account, so this is discount allowed. So this is discount allowed discount. So this is discount received. Sorry, this is received. So it's a credit. No, it is received. So this is discount allowed. Allowed discount. So allowed discount. So remember this is allowed. Okay. So this side, because when we pay, at the time we receive discount. No, we receive. So it's a credit. So but when we receive, at that time we allow discount. So it's a loss. So we write here. So cash account sales 1000. Sales account 1000. So we write here. So we receive cash upon sale, we write here. So all whatever we receive, you have to write here. Whatever we pay, you have to write here. Simple. This is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing this way. No, see, they are not writing whether it is received or paid. So here they are also discount received they are written. Okay. So discount allowed. So here they are not written whether it is received. So this is just for you to remember. So just for you so that you understand it is easy for you. Okay. So don't write this. So don't write. This is for you just you for you to remember. So don't write. Okay. So don't write. So receive cash. When we sell, we receive. So then what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is a, so cash account credit what goes out. So what date? So it is on second, April 2nd. So second. So credit what goes out. Electricity. How much? 100. Cash. Credit what goes out. Cash has gone out. Credit what goes out. So next. So we received, we have paid 100. So credit cash account will be created and electricity charges will be debited. So next, cash sales 800. So we are receiving cash again. So what date it is? It is on third 800. On third sales 800. We are receiving. When we sell, we receive. No, so receive. So 800. Next. Banked cash. So what do you mean by banked cash? We are taking out cash and putting into bank. So what is the entry when we bank cash? So very important. Okay, so this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay, so this is the easy way. Bank cash. Bank the cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So banked cash means we are depositing cash into bank. Cash is going out. Cash is going out, and money is coming in bank. Banked cash. So money is coming in bank. Banked. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Banked cash. So but cash is going out. Cash will go out. So cash will go out. What date? 4th. 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 Banked cash. So remember, always you have to write like this. Okay. So my banked cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Banked cash and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here. Contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go where nowhere, but only affected in the cash book and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column, here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful, okay? So a lot of students, they commit mistake, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in back. Simple, that's all, okay? So then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on 5th. 5th. Stationery. How much? 20 bucks. So 20. So we drew 900 from bank for cash float. So we are taking out money from bank. Okay, we drew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So we drew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank, and coming in cash. Cash, cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited, cash account will be debited, and bank account will be credited. So understand, this is very important. A lot of students commit mistake here also, so they get confused. Understand this. This is very very important. Withdrew 900 from bank for cash float. Cash float means to keep in office. To keep in office for cash expenses. So that is the meaning, okay? To keep in office for cash expenses. So we have to record rupees withdrew 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What date? 6th. On 6th, what is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money has gone out from bank. So this payment rate, so money has gone out from bank. So against this, here you have to write cash, and this is called contra again. So again this is where you have, here you have written in cash column. So here you have to write bank. So this is in cash column. In cash column. But you are here again this you have to write bank. So be careful. So again this you have to write again contra. Why? Because it is hitting cash on account and bank on another account. Same. So very careful. Okay. So lot of students commit mistake here. So this is very important. So this is very very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in AS level. So because it's very important, often asked. Okay. So very very important. So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out on this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay. So the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here So we are total here. So we total here. So whatever balance is there, balance carry down. So this side here cash bank. So balance carry down. So what is the balance? So here this side 1400. Here it is 900. So 1400 minus 900 is 500. So we write here 500. So here 1800. 1800 plus 900. So 19 plus 8, 27. 27 minus 27 minus 1520. 2700 minus 1520. Okay, so this will be 1800. So it will be 1180. So here it will be 1180. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. So crystal clear. Okay. So this is how it is. So 1180. If you add all this should be 10,700. So in other words, when you are balancing, so both the sides should be same. Okay. So here balance brought down. So balance brought down. Whatever is carried down here will be brought down here. So 1180. So this will be 500. So this is how it is. So end. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So I will be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul, which cost 14,000. This is very simple journal entry given. So what is there in this? So first one, so we'll just write here. So first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay. So very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to any of the subsidiary books, or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise. As a merchandise means for sale. Then this would have gone to purchase book. It would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal. So what are the various journals? Purchase journal, sales journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to Paul account. So you will debit motor vehicle and credit Paul. Why? Because debit, what comes in debit, asset is coming in, asset is coming in. So Paul is the giver. So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they are not mentioned about narratives. So if you want, you can write the narrative. So you can write the narrative being purchase of motor vehicle for use in the business. Okay. Next. Purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. Office furniture for the business costing had been debited to purchases account. So office furniture you are normally purchased to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account in error. Instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, you to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So how to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this, we have to credit, and to bring this we have to debit. So what is the entry? Furniture account debit. Debit furniture. Debit furniture account. Credit purchase account. So what happens when we credit purchase? The purchase which has been debited will cancel out. So it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next. A new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery. Equipment, furniture, stationery. Debit. Equipment. debit furniture, debit stationery. How much? So this is 6,000, 3,000, 1,000. 6,000, 3,000, 1,000. So we have to credit what? Credit capital. Credit capital 10,000. So because owner is the giver of all these things, so we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment 10,000. So that is why this will be credited. Next. Credit note number 34 for 170 received from B. Jones, a supplier, has been posted to C. Jones' account in error. So what is the right entry? Received from B. Jones. So we have received credit note. So we have to debit B. Jones. A supplier. Okay. So we have to debit B. Jones. What is the right entry? We have to debit B. Jones. So to understand this again, you have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry? So what is the wrong entry? Wrong entry is received from B. Jones. Okay. Received from B. Jones. So we have to credit B. Jones. Credit note. We have to credit B. Jones or debit B. Jones. We have received, no. So we have received means we have to debit B. Jones. We have to debit B. Jones. Debit B. Jones. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B. Jones. You have received from B. Jones. So you have received a credit note. So credit note means you are getting credit means you have to debit B. Jones. Understood? You are getting credit. So you have to give, you have to debit B. Jones. So what is the right entry? You have to debit B. Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B. Jones, you have debited C. Jones. You have debited C. Jones. So how do you rectify this? Obviously, you have to cancel this and you have to bring in this. So what you have to do? You have to debit B. Jones. So the entry has come in. So to cancel this out, you have to credit. So credit C. Jones. So when you pass this entry will be offset. We already debited C. Jones as a wrong entry. So when we credit C. Jones, this entry will offset. And to give credit, you have to debit. So we have to debit from B. Jones. So this is actually transfer entry, we can say. Okay. Transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. Which one? This is also transfer entry. So this is also transfer entry only. Because we are transferring from furniture purchases to furniture. Okay. That's all. So this is first one is error of principal. Second one is also error of principal. So this one is opening journal entry, and this is again error of principal. Instead of debiting one person, we have debited some other person. So this is activity 3.4. This is the end. So looks very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take a lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. Okay. So don't adopt for shortcut. Please practice, understand, remember, apply, do a lot of hard work. So never try to resort for any shortcuts. Never do that. So dear friends, welcome back. So this is practice questions from books of primentary. So the books of primentary. Okay. So books of primentary practice questions. So this is David Hopkins' latest book. So then we can just discuss this. So practice questions. So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross check with this, and you can compare, you can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know. We can discuss it. So and we can try to sort it out. Okay. So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at a net of, so 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment, not within the time of sales. So what amount should be entered in her sales journal? So our sales journal will not be recording this. We will be recording net of trade discount 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay. Then Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record this transaction at 1800. So what will be debited? Sai received an invoice means Sai has purchased. So Sai has purchased. Okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See, purchase journal. So what effect will it have on Sai's accounts? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account. Purchase account debit. Purchase account debit to Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit Jaya. Why? Because purchases is an expense. So Jaya is creditor. So supplier. So it should be credited. So we have not done this. So it is under added. So this is the correct answer. So simple it is. So if you understood the concept, it's very simple. Otherwise, it's complicated. So don't try to mess up. Take some time to understand the question. So then the concept is very clear. Then let us have a look. What is this? Deepak's transactions for May were as follows: bought goods, sold goods, bought goods, purchase, return goods, purchase. So basically, this is a books of question on books of primentary. So you have to write various books of primentary like purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely discuss this question once you let me know. Okay. So till then, have a good day. Good night.
Dear friends, welcome back to Shasha's virtual classroom. So this is the practice questions from balancing accounts. Balancing accounts. So we will discuss this. So before this, you can just try answering yourself and you can cross check with answer. Which of the following account is most likely to have credit balance? So capital account will have credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. Office equipment is an asset, so it is a debit balance. Rent is also an expense. So again, the question is whether the rent is payable or receivable. Since here it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, if it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance the following account at the end of September. So this is a nominal account, discount allowed. So discount allowed. So balance. So we have added 234. So that is balance. See, balance is 234. So it will be carried on, but it will be carried forward straight away. It can be straight away carried forward to trial balance. So here we just put the total and carry forward to trial balance. Discount received. Discount received account. So 110 plus 130, 130. So balance carried on. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. So this side there is total of 1340, and this side there is total of 740. So what we have to do? So 1340. So this side to make it 1340. So it is 740. So 700. So if you put 700 here, so that will be balance character. Balance character. So 700. So both the sides, the always total should match. So 1340. So if we write 700 here, so this will match. So it will become 700. So it will be 1340. Next, A and B limited. A and B limited account sales. So total sales. So we have sold to A and B limited, and we have not received any money from them. So just so 700 plus 450 is 1150. So 1150. So it will be balance carried on. So 1150 will be the balance carried on. So both the sides it should be 1150, 1150. So then this one, George account. So what is George account? So George account, we have sold for 2300 and we have received it, we have settled. So he has paid. So everything is clear. So 2300 is set, 2300 is set. So there is no question of balance income. Motor vehicle. So balance carried on same amount. So that both the sides it's the same. Cash account. So normally it will have debit balance. Debit balance means debit side will be heavier. So 800 plus 100 is 900. So 900. This side it is 200, 20, 45, 265. So 900 minus 265. Six 34. So balance carried on is 635. So the total, if you put balance, to be. So to actually practically do the problem how to balance, you can see cash book problem. So the previous question 4.1, activity 4.1, there we have I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is heavy. Since credit balance is heavy, see 5,300 and this side it is 3,500. So since it is credit balance is heavy, so it will be here this side balance carried on will be this side. So 5,300 minus 3,500. So 1,800. So balance carried on will be 1,800. So this side total it is 5,300. So this side also it becomes 5,300. So explain why trade receivables amount have debit balances, why trade payables have credit balances. So trade receivables is normally an asset, so from which accounts are receivable. So they are always show debit balances because they have received, they owe us money, so owe business money. So whereas trade payable are liabilities. Dear friends, welcome back to Shasha's Social Counseling. Today we will discuss activity 5.1. So before having a look at this solution, you can try working on the solution on your own and you can cross-check with the solution here so that you are confident whether you understood the concept or not. Complete the table ticking the boxes that describe the given the consequences of the business. The first one is completed for you. Daily vehicles is an asset. So what is before this? Let us discuss what is liability, what is revenue, what is expense. So asset is something we have. So it is a resource controlled by an enterprise from which future benefits are expected to something you own and you something that is owned to you is an asset. Okay. So what is liability? Liability is something you owe to some other person. So you have to pay to some other person. So that is known as liability. Revenue or the income is that part of those items which you keep getting and which you can use for your business running the business operation. So it is income for you. So you can it is generated regularly or it is the main source of your operations. So expenses the expenses which you incur like salary, rent, all those things. Okay. So rent is normally. So rent is let's assume it's an expense because since they are not specified. So if you see other line over here rent receivable, here rent receivable is there. So this is income. So let us assume on present things. So this is the rent. paid or payable. So this is an expense. Since nothing is specified, you see the amount here. So if this was not specified, you would have written it as expense also and income also. So it is doesn't make any difference. But normally it is taken as expense. So when nothing is specified, when it says rent, it is expense. Okay. So loan is a liability, is something which you have to pay back. So loan you have taken from someone, you have to pay back. So interest received is something which you get on your deposits. So you have got some money in bank, so you have earned interest on that, so that you can use it for your purpose. It is interest received. Interest paid is an expense, so it is an expense. So we have right here. So trade receivable is an asset. Why? Because we have put on credit and that person has to pay. So these are customers accounts. So rent and trade receivables is also known as debtors, trade debtors, receivables, bills receivables. All together is known as trade receivables. Trade receivables is something which is owed to you. So which is owed to you. Okay, so it is an asset. So inventory is also an asset because it is something you have held in your hand. So it has got value, you can sell and you can get money. So it is an asset again. So discount allowed is an expense because it's a loss. So once you allow a discount, you know you have to your money will be lost. You will not be getting anything. So that is allowed. It is an expense. Postage is also an expense because postage is the money spent on sending laterally postage to courier or all those things, you know. So then next postage is done. Bank account is an asset. So normally bank means it is bank balance. So normally bank means it is bank balance. So it is an asset. So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income which you keep getting. Trade payables. So trade payable is a liability because it has to be paid. So trade payables are liabilities. So they include creditors, they include bills payable. So all those money which are owed by you. So you have got on credit, you have to pay them back. So that is liability. Computers is an asset because it is something you have which you can use in business, which you are using in business. Wages is an expense. Discount received is a revenue or other income. So interest received is normally other income. So discount allowed is discount received is also other income because interest received is not main revenue from operations. Whatever is not from main revenue operations, it's considered as other income. Okay. So rent receivable also can be considered as other income. So all these are other income. So what are revenue, main revenue? So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is all revenue. So you have to be very careful with the revenue or other income. So that is the end of this is the exercise 5.1. Activity 5.1. I hope you have understood the concepts. So we can proceed further. So welcome back, dear friends. Let us discuss activity 5.2. So and we can okay. So activity 5.2. In which ledger would you execute the following accounts? The first one is completed to you. So in which ledger? Okay. So which ledger? So what are the different ledgers? So there is general ledger. So there is customers ledger. There is suppliers ledger. So okay. So those are the various ledgers. So let us have a look at the various ledgers that are possible. So see here, these are the list of ledgers. Division of the ledgers. Ledgers can be divided into sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature and all are recorded there, and cash book for the bank and cash accounts. We use cash. So sales ledger to record sales, purchase ledger to record purchases, general, other items other than cash and bank. So private ledger, so other than which is not recorded normally, which is a confidential nature, and cash book. Cash book is for the bank and cash cash accounts. That is whatever is received, whatever is paid, all those are bank accounts. Okay, so capital is general ledger again. So customer who buys goods on credit, customer who buys goods on credit. So it is we are selling and who is you are buying. So a customer who buys goods on credit. So when you are selling, seller, the other person is buying. So these are credit sales ledger. Supplier of office equipment. So whatever it is, whether he is a supplier of goods or supplier of office equipment, whoever it is purchase ledger. So but since it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful. You have to ask yourself whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, it is not a merchandise. It is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger. So it will not be recorded in purchases ledger because it is not purchase of merchandise. Be careful. Okay. So bank account will be recorded in bank ledger itself. Bank or cash book we will see. Okay. So bank or cash book. So wages is in general ledger because it is an expense. Sales will be recorded in nominal ledger. So that is okay. Once again, sales ledger for the accounts of customers that buy on credit. Only credit customers. These are accounts. Receivables. So these are customers that buy for the accounts of customers. Okay, it is not for sale. Sales, even though you mentioned sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit because customers and sales are related. So purchase ledger. So even though it is purchase ledger, for the accounts of suppliers, it is not for the account of purchasers, it is for suppliers. So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded here, other income. So other income is like interest, all those things, expenses. Expenses are again purchases. Okay, so all these things are recorded here. Private, so that is nothing but cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often asked in MCQs and all. So keep a note of this. So very important. Okay, so sales is general ledger. Okay, so general or nominal. It's called nominal. Nominal. So general or nominal. Why? Because it is revenue. Wages is an expense. Okay, so be careful. So this is how we have to understand the concepts, and so that the concepts are clear. See, as you proceed for A levels, if the concepts are not very clear, you will get hiccups. So you will struggle. So if you struggle in A levels, you will secure very good marks. So there is no shortcut. Please remember, there is no shortcut for success. You have to put in a lot of efforts. So you have to practice a lot, try to understand the concept. It's very important. Understanding the concept is very, very important. So this is the end of activity 5.2. So now let us continue with activity 5.3. So activity 5.3. So activity 5.3, complete the following sentences by inserting the correct word from the following list. So simple it is. So dash ledger contains the accounts of suppliers from whom the business buys on credit. So dash ledger contains the accounts of suppliers. Suppliers. Purchase ledger. Purchase ledger, no? Purchase ledger. Purchase is related to suppliers. Suppliers means those who supply material to you. Suppliers means those who supply material or goods or merchandise. Those who supply, okay, those who give on credit, okay, so on credit. So very important. So don't get confused with suppliers. Suppliers means whom you purchase, from whom you purchase, from whom you purchase. Purchase on credit. From whom you purchase on credit. Okay. So the heating and lighting account is stored in the dash ledger and is an example of dash. So heating and account is stored in the general ledger. General ledger or nominal ledger and is an example of nominal account. Expense account. Okay. So expense account is here. So expense. So goods bought on credit are recorded in the goods bought on credit. Goods bought on credit are recorded in the again where we record. It is non-current, expense, purchase, general, sales. So we have to choose from this, right? So purchase ledger contain the accounts of suppliers from whom the business buys credit, correct? So the heating and lighting account is stored in general ledger, correct? Example of expense account. This is also correct. This is lower. This is lower. Then again here, what else is there? Sales. Is there anything related to sales? Good bought on credit are recorded in the? No, it's not right. Not in sales. Not a sales. Non-current. No, non-current. So only three types of ledger are there. So only three ledgers. Okay. So when they say ledger, ledger. Okay. So then goods bought on credit are recorded in the general ledger. So then a dash is a set what we use in the business for a long use, so non-current. So we have chosen this, nothing is related to sales. Just see the dash ledger contains accounts of suppliers from the business based on credit. So purchase ledger. The heating and lighting account is stored in the general ledger and is an example of expense account. So goods bought on credit are recorded in the general ledger. Okay. So then dash is non-current. So this is again purchase ledger order. So general ledger. So a non-current asset is bought for use in the business for a long period of time. So it is non-current asset. So this is the end of activity 5.3. So very simple thing. So if I get confused, see again the concept should be very clear. Okay. So dear friends, welcome back to classes also class. So classification and division of ledger. So let us have a look at the practice questions today. So which amount is most likely to be kept in private ledger? So drawings, interest received, rents, what is very private? So obviously drawings is very private. So how should cash discounts be classified? So how should cash discounts be classified? Discount allowed is an asset. No, it is not an asset, it is an expense. So it is income, no, it is liability, no. Discount received is a liability, no. Discount received is an income, yes. Expense, no. Asset, no. So B. Explain why it can be useful to group accounts into different categories for the purpose of classification and presentation, and the account becomes easier. So discuss why a business will use more than one ledger. So again, for specialization, so we can have a group of people maintaining a specialized in particular group, and it will become easier also to verify and cross check and to keep theoretical accuracy. So this is the end of practical questions. So let us continue with the next class. Dear friends, welcome back to Shasha's virtual class. So today we will be discussing activity 6.1. So prepare a trial balance from the following balances that have been extracted from the books of small online retailer at 31st December. So they are given assets, liabilities, expenses, all these things. So based on this, we have to prepare trial balance. So before having a look at this session, I request you to try this problem on your own. So basically, it's very easy, a very simple topic. So I think you will be able to do it. So you can then cross check with the solution. So prepare a trial balance from the following balances. Okay. So how will we do it? Trial balance extracted from small online retailer as on 31st December. Small online retailer as 31st December. As on alright 31st December. So we have to write it in a specific format. So basically, we will have to write particulars or names of accounts. So here we will ledger folio. So debit, credit. So they will have two columns: debit column, credit column. So let us start. So before starting, so property. What is property? Property is an asset. Asset always show debit balance. Property always show debit balance. Motor vehicles. Motor vehicles is an asset. Always it shows debit balance. So office furniture. So remember one thing. What is that? So when you are learning trial balance at that time, you have to remember assets and expenses have debit balances. Normally have debit balances. Assets and expenses normally have debit balances. Similarly, liabilities and balances. By default, okay, by default, they are always assets and expenses. Assets and expenses are always debit balances. Liabilities and incomes are always credit balance by default. Okay. So office furniture is an asset debit balance. So computer is an asset debit balance. Sales is a revenue income credit balance. Sales written exactly reverse of sales, it is debit balance. Purchases is an expense debit balance. Purchase returns is exactly reverse of purchase returns, it is credit balance. Motor vehicle expense is debit balance because it is an expense. Advertising is an expense debit balance. Office expenses is an expense debit balance. Stationery is an expense debit balance. Cash is an asset debit balance. Bank credit. So it means it's a liability. So credit balance. So capital always a credit balance because it's a liability to the business. So drawings always debit balance because it is exactly reverse of capital. So now we can prepare the trial balance. So write down all the names of the accounts: property, motor vehicle, office furniture. Property, motor vehicle, office furniture. Property 100,000. So motor vehicle 18,000. Office furniture 14,000. Office furniture 14,000. Computer 2,000. Sales 40,000. Computer 2,000. Sales 40,000. Sales return 600. Purchases 6,000. Returns 500. Purchases 6,000. Return 500. Motor vehicle expenses 4,000. Advertising 1,600. Advertising 1,600. Office expenses 1,000. Office expenses 1,000. Stationery 400. Stationery 400. Cash 200. Cash 200. Bank 300 credit. Capital 110,000. Capital 110,000. Drawings 3,000. Drawings 3,000. So the total is, if you add both the sides, it is 150,800, 150,800. So it will match. So this is activity 6.1. So this is done. Okay, so this is over. So let's catch up in the next class. Till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. So let us discuss activity 6.2 today. State which of the type of errors each of the following represents. A customer's invoice has been omitted from the sales journal. So we need to mention the type of error. So we need to write the type of error here. So before this, let us have a recap of what type of errors and what are the different types of errors. So basically there are 6 types of errors that can occur when debit and credit totals in the trial balance agree. They are as follows. So type of error. Error of omission. What is error of omission? A financial transaction omitted completely from the books. So omit. Okay, omission is nothing but omit. Omission is nothing but omit. So the name itself suggests, okay. So omit. So omit. So omission. So omitting means leaving out. So financial transaction omitted completely from the books results in their being neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered, not at all entered. So not entered in the book of prime entry. So the entry itself is not recorded. Not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expense you have incurred, we have not recorded. So that is what example is $100 of equipment is bought for cash. The transaction is forgotten and not entered in the equipment or the cash. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are giving something more. So commit. Okay, you are giving something extra. So here it is omit. You are leaving out. Leaving out or skipping. So here it is. You are giving some extra. A financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected. You have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for stationery is posted to the advertising account. Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both class-based expenses. So same class. Okay, so this is very important. Same class. So expense or revenue or asset or liability, whatever. So it is the same class, but instead of posting to one account, you have posted to some other account. So that is extra you have put in some other. Error of principle. What is error of principle? So you can so you don't know the accounts. Suppose someone who doesn't know the accounting principles, ignore it. Ignore it. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he will record it as an asset or something. For example, a financial transaction is posted in the correct amount to the correct side of a wrong class. It is wrong class. For example, there you will see payment for fuel for a vehicle has been debited to the motor vehicle. So fuel for vehicle is a nominal account debited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure might have been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are treated classed as expenses by the motor vehicles are non-current assets. Okay, so it is wrong class. Ignore it. So what has happened? The person doesn't know where to record. Instead of recording in fuel per vehicle, he has recorded as motor vehicle expense. So that is wrong. So ignore it means he is not followed the accounting principle, has not followed the accounting rules. Rules are not followed. This is same class. Okay, next. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time, so wrong amount is entered in the book of prime entry. So what is book of prime entry? You record it for the first time. So there itself you have written it wrong. So wrong amount is entered in the book of prime entry for a financial transaction. The purchase invoice is entered on the purchase journal as step. See, yes, it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prime entry. So first time recording itself is wrong. So next, complete reversal. Complete reversal of entries. Complete reversal means instead of debiting, they are created. Instead of crediting, they are debited. Something like that. Okay. An account that should have been debited has been created, and the account that should have been credited has been debited. So a payment made to Sam is debited to the bank account and credited to Sam's account. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should be debited to Sam account because it is paid. It is paid. See here the accounting principles. So whatever we have learned in first lesson. So cash transactions and credit transactions you have to apply here. So if you are not understood there, here also you will not understand. So be careful. Okay, so your concept should be, it should be logical flow of concepts. It should be logical flow of concepts. So if you understand, if you have understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try to try shortcuts in learning. Never learn shortcuts. So a payment made to scan is debited to the bank account and exactly reverse, complete reverse. It is complete reverse. Okay, it is complete reverse. Instead of debiting, you have credited. Instead of crediting, you have debited. So compensating errors. So what happens sometimes? Errors will offset. So and then net off. So the compensating errors. So compensating means one will offset the other so that there is no proof at all. So compensate. They compensate one another. So two or more accounts that cancel each other out. An invoice of 100 in sales channel is posted to the customer account as 1000, and the same amount, the sales channel is underwritten to below by 200. The debit balance on the customer's account and the credit balance on the sales account will both be underwritten by 200. See what has happened? 1000, instead of adding 1000, instead of rating 1200, they have written as 1000. And what has happened? One place they have written as 200, and the other place they have not written. So because of that, they cancel out, and the net effect is nil. So the debit will be equal to credit. So ultimately, what they try, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out, and the error is not at all evident. Okay, error is not disclosed. Error not disclosed in trial balance. They offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other. Okay. So this is what you need to know. So first you need to understand this. Then only you should do that problem. So now having understood that, now we will discuss it. Okay, a customer's invoice has been omitted from the sales signal. Omitted. Error of omission. Simple. A purchase of goods for 100 has been entered in the purchase journal. So purchase journal, original entry, because first as soon as we purchase, we are recording purchase journal. So original entry, purchase of goods has been entered in the purchase journal. So it is error of original entry. Next, discount received from Mari has been debited to Maya's account. So what has happened? They have received the discount and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. Because you have given credit, you have given debit to Maya instead of Mari. So you have debited. So it is correct. You have debited to, instead of one person, you have debited to another person. You have just given more. Whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it should be debited or credited. It should be credited. It should not be debited. Correct? No? So because money will go from bank and credited to the advertising account. So it should be debited to advertising account. So it is complete reverse. Error of complete reverse. Entries were 100 too high over on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense
overhead means expense has increased. So sales account, income also sales account. So income also has increased, overhead. Okay, both are over. So expense is debit, sales is credit. So what will happen in this case? This is overhead. This is also. So debit is also increased. Credit is also increased. So it will offset. So it is compensating error. Compensating error. So next entries 250 were too high. Overhead on the heating and lighting. So expense. So overhead to the heating and lighting. So expense has increased debit. And 52 low under added. So expense, again it is expense. It has been under added. So it has under added and it is credit. That is also debit. So that is also debit. So this is also debit, that is also debit. Instead of increasing it, instead of adding it to heating and lighting, it has been added to rent payable. Both are expenses. So instead of adding one to another, it has added. So it is compensating because both are compensating. There is net effect is nil. Expense will increase, expense will come down. Instead of adding this amount, it has been added to this amount. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it should have been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principle. That's all. So this is the end of activity 6.2. So this is a very important topic. So we have to be very thorough in this concept because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be zero. So they have to do it. Dear friends, let's continue with activity 6.3. See, an inexperienced bookkeeper has extracted the trial balance at 31st December 2021. It is not balanced. Rewrite the trial balance, rewrite the correct trial balance, and correct the errors. So basically, we need to rewrite the trial balance. If anything, if there is any mistake, we have to do it. So you know, all expenses, all assets, and expenses are debits. All incomes, all liabilities, and revenue or incomes are credits. So they are credit balances. Okay, remember? So this is the basic rule for trial balance. Remember this. All expenses and all assets and expenses are debits by default. All liabilities and revenue incomes are credit by default. Okay, by default. Normally by default. Very important. So before learn this, by heart this whatever. So before starting this question, so try to answer yourself and then we can have it. So plant and machinery is a debit balance, so this is correct. Loan from David is a liability.
So it is a liability. It should not come here. It should come here. So office equipment is an asset, so it is debit. Wages is an expense. It is debit. So rent and rates are expenses. If they are not credit, it is wrong. So 3,000 rent and rates, you have to write here. So cash is normally a debit balance. It is an asset. So it is normally debit balance. It is never a credit balance because cash can never be overdraft. So general expenses debit because they are expenses. Normally they are debit balances. Sales, yes, they are always credit because they are all revenue. Purchases, expenses, correct. Discount allowed is always a debit balance because it is an expense, it's a loss. So not here, so it should come here. And discount received is a revenue, which is again other income. So it should not come here, it should come here. So bank, debit balance, normally trade receivables, asset, always debit balance. Trade payables, yes, credit balance is a liability. Purchase returns are exactly reverse of purchases. So purchases are debit, so purchase returns are always credits. So sales is always a credit. Sales returns is exactly reverse of that, it is always a debit. So rent receivable is an income, it is revenue, it's a gain. So it is always credit, it is not a debit. Capital is always a liability, always it is correct. And drawings is exactly reverse of capital. Exactly reverse of capital. Drawings will always come here. So now you read out the trial balance, cross check. So it should be perfect and it should be matched. So that's all. So this is a very simple question. So unless you have understood the concepts, if you understood the concept, is very simple, very simple, very simple. So just do it and enjoy. So let's. So this is activity 6.3. Let's continue in the next class. Till then, have a good day. Dear friends, welcome back. So this is practical questions from trial balance, lesson of trial balance. So let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here. An invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error. So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed account. Which effect this has on the trial balance? Discount received has been posted to the discount allowed, has been posted to the debit of the discount allowed account instead. So discount received is income. So discount received is income, but so it is credit balance. So what has happened? So it has been debited, has been posted to the debit of discounts allowed. Debit of discounts allowed. Discount allowed. So what effect has this on the trial balance? So too little debit. No, this is wrong. And 100 too much credit. This is wrong. 100 too much debit. Correct. So
So it can be 100 too much debit. Let us see 100 too much debit and 100 too little credit. Correct. So this can be the effect. No effect on the trial balance. No, this is the right answer. Because a credit has been affected as debit, so it will have too much debit because you have debited. Discount received is a credit, so you are debited. So it is debited, and you are not credited to discount received. So you are not done this. So it is too less credit. So this is correct. Next. Which of the following is not a reason to prepare a trial balance? To check that the total of debit balance is equal to total of credit balances. To help find errors in the accounts, which is not a reason. Okay. So this is the reason. This is the reason to increase the sales of a business. That's all. So it's not a reason. Okay. To prepare monthly reports for managers. So this is not a reason to increase sales. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from these books. So you can try working out this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So capital is the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is the credit. So it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset debit. So trade payables, liability credit. Loan from Ting, liability credit. Drawings is a debit. So balancing figure is, so capital. So basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay. So difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay. Have a good day. Till then, bye. Dear friends, welcome back to Shasha's virtual classroom. So today we'll be doing practice exercises from credit transactions. This is from David Hopkins. Suppose the following transactions in the books of the road. Okay, so if it helps, write down the names of accounts. So if it helps, write down the names. These are tips. Okay, so these are the tips. So write down the names of accounts you should debit or credit before you start posting the transactions to them. Work out the amounts of trade and cash discounts before you post them to their correct accounts. So first, let us calculate the amounts. So trade discount, purchase goods from car which cost $3,000 less trade discount of 10%. So 3,000 minus 10% is $2,700. So then sold goods to live $600, it will be like that only. So return goods which had cost around 200 less discount to car. So 200 less discount. So it was you had sold here, right? So car. So you had sold here. Now, so it is being returned. So 20,000 less, 200 less 10% is dollar 180. 200 minus 10% is 180. So purchase goods sum which cost 200 before trade discount of 10%. So before trade discount of 10% means so again it will be dollar 2800 minus 10%. 2800 minus 10% is minus 280. 2800 minus 10%, 2520. So it's 2520. So trade discount is never recorded. Remember that. So trade discount is never recorded. So it is 2520. Sold goods to chain for 1300. So no discount here. Law return goods which had cost him $200 less. So this is lie. We are sold for 600. Lie return goods which cost him $200 less discount. We didn't give lie any discount. So have we given any discount? I don't know. So then this will be as it is. So $200. So there is no discount. Not given. So not be given again. So it again it will never be given. So even though the question says give it, but we are not supposed to go suppose because here they are not mentioned whether we have given them any discount. Or it may be that there is a mistake, printing mistake. So if that is the case, then less, because everywhere it's 10% trade discount. So let us consider it's 10% trade discount. It will be $540. So here it will be lie item which it cost 200. So minus 10% will be $180. Then Gerard paid car and linked amount to them after deducting 5% cash discount. See, so many big calculations. Lie and Chin paid Gerard the amount they owed him after deducting 5% cash discount. So again you have to calculate. So how do you calculate? So wait, let us see how to calculate. So this is it. So Gerard. Okay, so Gerard. These are the books of Gerard, right? These are the books of Gerard. Gerard paid car. So we are paying to car. So remember whose books? Gerard books. Gerard will so car and okay, car how much we have to pay? Car we have sold 2700 minus we have returned. He has returned 27180. So 2700 minus 180 is equal to 2520 minus 5% cash discount. So this will be recorded. So this is cash discount. We recorded. So that will be how much? 239. What is
plus 186. Now 4 is over. So now lie. So it puts to lie 600. So it puts to lie. For and limb. So limb. For and limb here. So limb you right here. Lie right here. Lie 600. How much has been returned? 200. So 540 minus 100. It's 360 minus 5%. 5% is cash discounted. Cash. So that is equal to 360 minus 18. 18 is cash discount. So the net amount payable will be 340. Okay, then core and lie and chin paid their own. Lie and chin. Okay, so now limb. So limb, where is limb? Core over, lie over, core over, limb. Limb is 2800, that is 2520. So are we returning anything? Limb. Is limb returning anything? Are we returning anything to limb? No, we are not returning. So 2520 minus 5%. So that is equal to 2520 into 5%. 126. Minus 126, which is cash discount again. Cash discount. So that is equal to 239. So now chin. Where is chin? Chin is here. Sold goods to chin. So chin has not returned any goods. Okay, chin has not returned any goods. Only lie returned. Only there are purchase returns. We have returned to Mr. Gerard has returned to CA. Returned goods. Okay, so you can see.
goods which had cost Gerard rupees, Gerard $200. Lie return goods which had cost 200. Lie we are purchasing. Okay, so there is one sales return and one is purchase. Chill. There is no return by chill. Sold goods to chill. There is no return by chill. So 1300 minus 5%. So that is nothing but 1300 minus 5%. See, these are the calculations. So that is why it is advised that first you work out the trade and cash discounts before you post them to their correct amounts. So first these are so many calculations. See, so many different calculations are there. Though this looks simple, some students make mistakes even in calculating this. So be careful. So then now we will come to the main part. So which account will be debited by how much and which account will be debited by how much. So debit. Okay, so purchase goods from car which cost 300 less trade discount. So we are purchasing from car. So Gerard is purchasing from car. So purchases account will be debited. Account will be debited. Car account will be debited. Car account. So why car account will be debited? Because car is giving the goods. He is the person who is giving. Okay. So when Gerard purchased, car gave the goods. He is the person who is giving. This is the account that is giving the goods. Okay. So that's why his account will be debited. So amount will be 2700. Amount will be 2700. Same. Okay, same. So now sold goods to lie for $600 less 10% trade discount. So 540. So sold goods. So sales account. Sales is an income always. And who is receiving the goods? Lie is receiving the goods. So lie account, because he is receiving. Lie account will be receiving. So that is why his account will be debited and sales account will be credited. Sales account will be credited. Return goods which had cost Gerard 200 less discount to car. So return goods which had cost Gerard. So this is who is returning. Gerard is returning. So it is purchase return. So obviously when he returns, it will be purchase returns. So purchase returns will be exactly reverse of purchases. So purchase returns. Purchase returns. So how much? It is returned to car. So car is receiving the goods. When you are returning back the goods, car is receiving the goods. So he is receiving car account. Car account should be debited. So then purchase goods from link which had cost 2800 before trade discount of 10%. So purchase goods from link. So purchase goods from link means purchase again. Purchases always purchases. Purchases account. Purchases are always purchases. So purchase account. goods from limb. So who is giving the goods? So limb is giving the goods. So limb account is created because limb is giving the goods. Okay. Sold goods to Chin for $39. Sold goods to Chin for $39. Sold goods to Chin. So Chin is receiving the goods. Chin is receiving the goods. Chin account debited. Sales account credit. So lie returned goods which had cost you $200 less discount. Lie return means lie return. This is you are sold to lie. Just see that you are sold to lie and is returning the goods. Maybe they are delivered to. That's why lie is returned. So lie is giving. So you have to give, you have to credit whoever gives, right? So lie account will be credited. And it is sales return. Sales return is reverse of sales, so it is debit. Sales return account. So then this is also done. Then now so this is also over. So this is for this. Gerard paid Khor and Lim the amount due to them after deducting 5% cash discount. So when you are making when Gerard is making the payment, who will receive? Khor will receive. So Khor will receive Khor account, and Lim also will receive Lim account, Khor account, debit, and credit toward bank account. But one more thing is there. What is that? Discount account is also there. Gerard paid Khor. So when Gerard is paying Khor, he is not paying certain amount, so which is cash discount. So it is discount received. So it's an income. So discount received will be credited. For Khor it will be 126. Okay. Khor it will be 126. And Lim it will be, again here also discount will come. Discount received. So here also it's 126. Both for Khor and Lim, discount received is 126. So bank account will be how much? Bank account will be 2394. What will be the amount? 2520. 2520 here also. 2520 here also. Khor and Lim. Khor. For how much you have to do? Or you have to debit 2700. What is the discount? No, no. This is trade discount. Trade discount. Trade discount. So it will be recorded like this. This will be recorded like this. Then Lai and Chin paid. So Lai and Chin paid means obviously money will come into bank. Bank account will be debited. Bank account will be debited. So Lai pays how much? Lai pays 342. Lai pays 342. So Lai when we are receiving lesser than. So here there is no discount for limb. Limb. Line return. Future cost 100 less. To discount. Line. 342 years. So rank discount receipt. Discount received is it's not discount received, it's discount allowance expense. So when you pay short, it is expense. Discount allowed is 80. So here it is 360. So bank account. So here in this case it is 1235. So discount allowed is 65. Discount allowed is 65. So chill will be credited at this plus this. So that is 13. So now we have to prepare ledger accounts and close the accounts. Prepare ledger account and close the accounts. So start with this. So it's very simple. So we already done this. So we can do the rest of the part. So if required, we can do it in the next class. So dear friends, last class I had given this assignment to you. This is assignment from David Hopkins. So this is very challenging because in this your concept of books of accounts of particular person is very much. So accounts of one particular person. Suppose the foreign transaction books of both Brian and Ken. See what is if for Brian the transactions will be different. For Ken the transactions will be different. Because if he is buyer, he is the seller, and if he is a seller, he is. So here it has been asked name of accounts to be debited, name of accounts to be credited. So you should not get confused. You should not get wrong. So you are not so see, right? So, but here the question is, you have post the transaction in the books of both Brian and Ken. But here they have asked you to write name of account to be debited, name of account to be credited. But whose books? Is this whatever you are writing here, are these related to Brian or are these related to Ken? So, what is the best remedy? Let us for the time being, we will consider this as the books of Brian. And for Ken, we will write separately. Okay, books of Brian. So what is Brian doing? We have to see from the point of view. So Brian sold goods, he is selling the goods. So it is sales for him. For Brian it sales, and for Ken it is purchases. So when Brian sells, who will receive? Who is receiving? Ken is receiving. Ken is receiving. And when Ken is purchasing, who is giving? Brian is giving. So this concept should be very clear. Now, Ken sold goods to Brian. So sold goods to Brian. So sold goods to Brian means what is Brian doing? Brian is purchasing. Brian is purchasing. So it is purchases because these are the goods of Brian, right? So you have write it in the goods of Brian. So it is purchases for. So if Brian is purchasing, who is giving the goods? Ken is giving. If for Brian it is purchases, then for Ken it is sales. And the other side it is Brian. So the understanding should be very clear, crystal clear. So don't get confused. Don't get confused. Brian sold goods to Ken. Again, sales. Sales. So again it is Ken who is receiving. So if it is sales for him, it will purchases for this. So here then Ken sold goods to Brian means Brian has purchased. So then yeah, if it is purchases for him it will be sales. So if it is sales this side, then who is receiving Brian? Ken paid Brian for the goods he bought on. Ken paid Brian. So Brian is receiving money. Is receiving cash. And he is allowing discount because it is a loss. He is receiving less. Then who is giving? So obviously Ken is giving. When Brian is receiving, Ken is giving. So now Ken paid no, so cash. Cash is paid. And he is paying less. So if he pays less, it is discount received. So it is an income. And to whom? To Brian. Brian paid Ken for the goods he had bought on 2nd April, let's say cash. So now Ben is paying. Brian is paid. Brian has paid. Brian has paid. So cash. So he has paid less. Discount. So it is here. So here it will be here if it is discount received for it. Here cash and discount for it. And here it will be. So after doing this, you have to prepare the ledger accounts. Ledger accounts of Brian separately and Ken separately. So purchase account, how many ledger accounts is there? Purchase account, sales account, Ken account, discount received, cash account, all these accounts will come in this. And in this, so many accounts. So we'll prepare the ledger accounts. Shall we prepare the ledger accounts? I will give it as an assignment to you so you can try on your own. So let me see and I will discuss this in the next class. friends, last class we had discussed this problem. So you can see still on the screen. So it is what it is. So we will now enter the following, enter this prepare ledger accounts for disclose the following transaction. So we'll post the entries to ledger accounts plan. So how to do? So so books of brand. Okay, so books of brand. So first we'll complete books of brand. So can be debited in sales. First entry can be debited in sales. Can be debited in sales. Can be debited in sales. So sales can be debited in sales. So what is the amount? Can you see? So the amount is 50 and date is this. So now it's next one. Credit can with purchases. Credit can with purchases. Credit can with purchases. Purchases. So what is the amount? So the amount is 500 less trade discount of 200. So 500 plus 400. And there is an electricity. Electricity. So purchase debited. Okay. So now next. Brand can debit can with sales. So 800 less this one. So 600. Debit can with sales. Debit can with sales. So 600. So 100. Third. So can you adopt it? So what about sales? Sales also automatically credit sales.
next. Again, credit can purchase. Again, credit can purchase. Credit can purchase. What is the date? 920%. 6th. Purchases. Can be prior for the goods bought on first April less cash discount. So credit can with cash and discount. Credit can with cash and discount. Credit can cash. Cash and discount. So cash and discount. How much? For this you bought on first April. You bought for 1500. So we got a discount of 3%. So it is 45. So discount of this 45 and rest is good. Rest is good. Rest is so what it is it? Not 10. So cash is to come. Cash collected. And was paid. Okay. How much? discount the discount the discount the loss from the sale. Reacted can for the currency and not of second effect. So debit can be cash and discount. Debit can be cash and discount. Can be cash and discount. Cash. So what is the date? Okay. So so well, so now putting the amount is the negotiate amount, let's say cash discount on second effect. Second effect is 400 minus 5,000. 20. Discount received is 20. Balance is cash. Balance is cash. This is how it is. So these are the books of yeah. This is how you have to do it. Similarly, so now we can see how it is. So we can just now we can just have a look. So discount receipt. Discount receipt. Discount receipt. Cash. Cash also. So here we are coming there. So it will be so can complete the we have discount receipt. So 27. Is also same. Okay, so I would like to mention that all these things are very simple but very basic and very important. Unless these concepts are clear, going ahead you will get confused in a lot of other concepts. Lot of students they ignore these topics, they take it for granted, like it just afterwards they get some concepts. So teachers are not tools to teach you unnecessary things, redundant things. They are teaching with a purpose. The books are not written just to fill up the pages, but with a purpose. So please follow it strictly, do it sincerely, study sincerely. So now, books of Ken, I will leave it to you. If you want me to give that part, please make a comment in the comment section of the video. I will do it. Otherwise, I am not going to do that. It is a skill that you have missed you. So till then, bye bye. I will. Dear friends, welcome to Shasha's virtual classroom. So today we will look at problems from books of primary school. So in this lesson we will learn how we record books of primary, how to prepare books of primary. So this is a problem from David Hopkins. So Brunatide has the following transactions all on credit notes. So purchase goods from Decolo for $10,000 less trade discount of 20%, Decolo already 5% cash discount. Sold goods from Simon for $12,000 less trade discount of 10%, real of Simon 4% cash discount. Purchase goods from Walters with 8,000 less trade discount of 10%. Walters allowed motorgrade 5% cash discount. Sold goods to car for $1,200 less trade discount of 10%, real of 4% cash discount. Snyder return goods which had cost him $200. Return goods which had cost $400 to our portfolio. Purchase goods from Burger for 7,000 less trade discount of 5%. Burger allowed him cash discount of 4%. Sold goods to Corsair for $3,000 less trade discount of 10%. They are available for 2,000 cash discount. Purchase goods from Develop for $6,000 less trade discount of 20%. Equal allowed in reduction calculation. Card can return goods which are costing 300. Return to worker goods which are cost dollar 1000. Sold goods to Simon for dollar 1800 plus trade discount of 10%. Total allowed has Simon calculation calculation. Receipt checks from Simon car and goods respectively in municipal accounts. So accounts receivable are free and send checks to insurance settlement of the amount to people who workers and vendor. So then enter the transactions from March and limited books of primary and posting in good form to the proper amount. The transactions should be dated however for the purpose of activity. Ignore the dates and post the transactions to the correct books, the correct journal and therefore and the correct ledger. So we should record this in the books of primary. So where should we record this? So what are the books of primary? Purchase goods, purchase register, sold goods, sales register, purchase goods, purchase register. Sold goods, we have the recording sales register. Snyman return goods, so Snyman, who is Snyman? Obviously customer. So sales return. Return goods which are cost to Piccolo. So return goods to Piccolo, purchase return. Purchase goods from this is purchase goods. Purchase register. Sold goods to sales register. Purchase goods from Piccolo, purchase register. Car return goods which are costing 300. Car return. Who is car? Car is so obviously to the customer. So sales return. Return to worker. So purchase return. Sold goods to Simon, sales register. So receive checks from Simon, car and purchase. So we have to record in type for the payment and for the amount received and for the amount we have paid. So now we have to record it. So how do you record it? The first entry. So we'll record entry wise. So first entry, purchase goods from Piccolo for 10,000 less trade discount of 20%. So we don't record trade discounts, and we never record trade discount. We have to record the transaction at net amount, so that is at 80,000. So 10,000, 10,000, 20% is 2,000. 10,000 minus 2,000 is 8,000. 8,000 will be recorded in purchase register. So purchase register Piccolo 8,000. Purchase register Piccolo 8,000. Okay, so similarly, next, sold goods to Simon for 400 less trade discount of 10%. So sold goods to Simon, so we have to enter in sales register. So 200 trade discount of 10%. So sales register Simon. So date, particular it is Simon. Simon. So this was Simon for 1200 less than trade discount of 10%. So we have to record like this. So everything we have to record in each and every book respectively. So sales register will look like this. So Snyman 1080, card 2250, odds at 2700, Snyman 1620. So you can see. So it is Snyman sold goods to car, sold goods to Kodze, sold goods to Snyman again. So 4 sales entries are there. So we have to record it in this particular style here. So this is known as format or whatever. So we have to record in this particular way. So the transaction should be recorded in this particular format. So format is important. So then the next one we have to recording purchases. So we have done purchase so that's so purchases will look like this. So we have purchased from Piccolo, Walters, Burger, and again from Piccolo 4800. So we have to enter in purchase journal like this. So take some time to write down, write it. Then we have to enter in sales return register also. So sales return register, what will we write? So whatever sales we have returned, all these entries. So what is it? Let us see what is the sales return. So Snyman return. Snyman we had sold to Saturn. So Snyman return, which had cost him 200. Snow 200. So Snyman 200. So like this, similarly we have to record all the sales returns. Snyman return, car also return, car also return. So Snyman and car we have to enter. So the entries will look like this: Snyman 200, car 200. So similarly, purchases also we have to record. Purchase returns also we have to record. So what are the purchase returns? Purchase returns are returned goods which have cost 450 kola. 450 kola means obviously Ticola has given 20% trade discount. So which had cost him 400 means that is the net discount before discount, which had cost $450. So that is before discount. So we have to take after discount and we have to record it after discount. So returns, purchase returns we have to record after discount. So it's not 400. So it is $320 and burger is 1,000. So we have to record it net of discount. So we have to record in sales register, sales journal, purchase journal, sales return journal, purchase return journal. So we have to record in all the journals. Then ultimately we have to record in cash book for the payments made and received. So what are the payments that are made? So after doing all these entries we have passed. Purchase goods. So purchase goods from Piccolo we have passed. All these entries have been made. All these entries have been passed. So now last entry receipt from check. Receipt checks. So we have to consider the discount also. The discount part, everything we have to consider. So let us make the working. So here it is. So Snyman, we have sold to Snyman worth this one. These are the returns. Total. Again we have purchased. Again we have sold worth this one. So total amount is 2,500. So totally 2,500. He has given a discount of. We have allowed him discount of 5%. So the discount amount is 125. So the net amount 2375 we will be receiving. So I made all the amounts, list of amounts. So these are all sales or purchases. So these are all These are all sales. This is also sale. These are all sales returns. These are all purchases. These are all purchase returns. Again, these are purchases. These are the cash discount. This is cash discount. This is cash discount. So after this is percentage of cash discount and this is amount of cash discount. So the net amount ultimately received or paid is coming here. So we have to do like this. So first we calculate. So this is the amount, net amount. These are the amounts that are received, and these are the amounts that are discount. So we have to write it. So where do we write? So all these three guys have paid. Three guys have paid. So how much they have paid and what is the discount? We have allowed them a discount. This is the discount we have allowed. This is the amount we have received. So all these amounts we have received. And we have paid these three people. These three people we have paid. And we have got discount. These are the discount values. If we calculate, so ultimately the payment cash book will look like amounts we have received from accounts receivable, the discount we have allowed, the cash we have received, the discount we have received, the cash we have paid. So this is what is cash book, and cash book will look like this. So this we have to record, and that is also done. So now what all we did? So we entered, we recorded, we prepared sales register, we prepared sales register, we prepared purchase journal, we prepared sales journal or sales register, sales journal we prepared, we prepared purchase journal, we prepared sales return journal, we prepared purchase return journal, and we have prepared cash book also. We have prepared cash book also. So now what is that? So now we have to prepare ledger accounts. So what are the ledger accounts? We have to prepare all the ledger accounts of all the parties. So sales account. Sales account is always a trade balance. So we are not supposed to record each and every entry. We have to record the total. We have to record the totally sales account. So sales account we have to record the total. So first let us do the total. Sales, total of purchases, total of purchases, sales returns, purchase returns, sales returns. So how do we record? So the control ledger. So sales always is a trade balance by sales journal record here. So how much is it? Total accounts here. So then sales return. Sales return. Sales return is reverse of sales to sales return journal to sales return journal purchases return. Purchases is always debit. So two purchases journal This is the total amount we have to record here. So remember, we should never record individual entries in purchases account. So we have to record the total. Then purchase return. Purchase return is reverse. So general purchase return amount. So we have to record this. Now we have to record entries related to people. So how do we record entries related to people? So who is people? People is the customer. People is a supplier, is accounts payable. So we have to credit him. So purchase. Purchase you have to record. People. So how much? Equal to 8,000. So purchase return is also there. How much purchase return? Purchase return is paid when return. So purchase return is return. So then we have paid. So we have got some discount. Discount received. $24. So amount we have paid. Amount we have paid is cash. How much we have paid? So you can see the cash. 118,000. So we have to see here and then. So 118,000. Now let us just check. So now we have all this. So that will be okay. So finally we have paid everything. So this is how the each and every account will be made. So you have to do the posting. So then accordingly we have to prepare all the ledger. So now we'll prepare ledger accounts. So we have to see the transactions and then accordingly we have to prepare. So Piccolo we have purchased. We have purchased from Piccolo and there was purchase return of 320. and we have received a discount, and ultimately we have paid. So this is how we have to record, seeing the debit side, credit side very carefully. Then Piccolo's account is over. Now we have to prepare Snyman's account. So Snyman is a customer. We have sold goods to him. So we have sold. We have returned also. So we have received. We have allowed a discount, and we have paid. So what are the amounts? Sales, sales, sales return. So the discount allowed, cash. So Snyman's account is also done. So now uh, Walter's account. Walter is a supplier, is a accounts payable. We have purchased from him. So these are the purchases. We have received discount and we have paid cash also. So the discount we have received is 360 and cash we have paid is 6,840. So we can see from the cash book. Then uh, again burger also we have purchased from burger. So 5,550. So there are purchase items as well. So we have received, we have paid cash to burger. So what is the discount? Is there no discount? There is a discount. So we'll just see. Then let us just finish this. So remember burger account. There is we have to record purchases. So then cards, card. So we have sold goods to card. So we have to enter sales. We have to prepare card account. We have even made the sales return to him. So we are learning discount. So we have to record that. And we have paid, we have received cash. So even that we have to record. Then cards account. If the customer we have sold him. So 2,700 and we have allowed some discount and we have received the balance amount. So done. So what is left? Burger account. We didn't give discount. Let us check whether we didn't give discount. We received discount from burger or not. Burger, yes, 170. We paid him 400 each. Burger, we received discount of 170. We received discount of discount of 170. So 170. So cash we have paid. So this is the amount of cash we have paid. Further, then which account is left? We have to prepare discount allowed and discount received. We have to enter discount allowed and discount received. So discount allowed we have received. So let us see. Discount allowed. We have allowed discount to these three people. Receivables. We allow discount to account receivables only, right? So we allow discount to receivables only. So we allow discount to these three people. And discount allowed is always a loss expense. And what is the amount? Amount also we can just what is the amount? These are the amounts. These are discount that we have. So and we have received discount. from accounts payable, we have received discount, so we have to record here. So which is an income, so we will debit it. So who are the payables? Who are the accounts payables? These three are accounts payable: Nicolo, Walter, and Nicolo, Walter, and Bergerac. We are accounts payables. So we have received discount from them. So the amount is this. So the amount is this one. Okay. So this is how we have to see the chapter is very simple, that unless otherwise you won't do all these things, unless you do all these steps, your understanding will not be clear. Your understanding of the subject will not be clear, and ultimately will get stuck in accounts receivables, accounts payables, even the advanced entries, whatever are required. At that time, we get stuck. So they look very simple. So at least 1 or 2 problems you have to do. So kindly ensure that you do this problem without fail. So then this is done. So what I do is I will give this problem as a assignment to you. So this is also from David Hopkins. So you can just try this problem on your own. So then, if you have any doubt, you can let me know in the comments. I will help you work out. I think you can do it on your own. So I am 100% sure. So please try and finish it. So we can move on to the next lesson. So this is very simple. So 1 or 2 problems are more than sufficient. So if you want, you can do this. So if you let me know in the comment section, I will definitely do it. Otherwise, I will assume that you have understood and it's very simple. So we'll move on to the next lesson. So next lesson is how to balance the accounts. How to balance the accounts. That is what we are going to learn in the next lesson. So till then, bye bye. Dear friends, so we'll continue with the books of fragmentary. So this is another problem which is there in David Hopkins. So prepare journal entries with suitable narratives to record the following. So prepare journal entries only to ledger accounts, never to other books of prime entry. See here, journal entries with suitable narratives to prepare journal entries only to ledger accounts, never to other books of prime entry. Received from Mumtaz, invoice number 506, dated 3rd March 10,000. This was in respect of the purchase on a machine on credit. So this is the purchase of machine on credit. Okay, so it is purchase of machine. Machine is an asset. So it is not purchases. So it will not be recorded in purchases account because it is not purchase of merchandise. So it will be recorded in journal. So the entry will be recorded as machine upon debit to Mumtaz. Why? Because we are purchasing from Mumtaz. Okay, we are purchasing machine from Mumtaz. So the entry will be machine upon debit to Mumtaz. Credit. So the amount will be, so what is the date? Date there was mentioned. So they will mention just A. Okay, invoice number 506. Purchase of machine of credit. What is the amount? Amount is 10,000. 10,000. What else? 10,000. So you have tried the narrations. Most maybe purchased and credit. Void invoice invoice number 5 years. That's all. So we have to record it. So it will not go to purchase account. So no subsidiary. Books of prime entry, book of prime entry. So we have to record it in journal form. So next, invoice number 495 dated 6th month, sold to when? Oops. Sold to when the invoice has been entered twice in the sales check. So has been entered twice, has already been entered, but it is entered twice. So we have to pass rectification entry. So what is the entry when we make the sale? When we make the sale, the entry will be when to sales. So now you have to reverse the entry. When to sales. Now it will be sales account. So the amount is 675. Sales recorded twice. Now reversed and rectified. So this is also done. Next. So then we'll see what is the next entry. Invoice number 998 dated 7th March 2015 respect of delivery van purchased on grade from US and paid by check. So delivery van purchased on grade from US. So 40 to 50. 4,000. 4,000. But you see, what is the entry? What is the question? Invoice number 998 dated 7 March 2002 purchase of grade from units and paid for by check. So there is a check payment also, but we should never record check payment because check payment will be recorded in cash. So only first part, which is purchase on grade from units, only that will be recorded. So remember, if you write payment entry, then it is wrong. So never do it. So accordingly, you have to be very careful when writing the entries. So all these entries, which never come in any of the other books, will always come in journal proper or general journal. So this is general journal where we are recording, because none of these entries are capable of being recorded in any of the prime, neither in the sales book nor in purchase book, neither in sales return nor in purchase return nor in cash. So other than that, whatever is there, that should be recorded in journal form. So next, credit note number 103 dated 10th March 1 for $190 sent to Brownie but omitted from the sales return journal. So you have given credit note but you have not recorded in sales return journal. Now you record it. That's all. So sales return journal. So how do you record it? So what will be the entry? The entry will be, you have to write down in sales return journal, and then the next step is you have to write down the journal entry, that is like you have to record the entry. So how do you record? Sales return account debit to Brownie account debit. So you have to credit Brownie. Sales return account debit. Debit to Brownie account. What is the amount? 190. Yes, 190. So you can write the NPFE narration. So 190. So it's narrative. So you can write down full narrative. Sales returns. Now recorded. Sales returns. Now recorded. Sales returns. Next. Invoice number 854 dated 15th March 1300 for goods purchased from Sandra. The invoice has been posted to Gita's account in error. So what has happened? It has been posted to Gita's account. It is entered in purchases account, but the posting has been done wrong. The posting is wrong. So instead of posting to Sandra, the posting has been made to Gita. So it is purchased from Sandra. So you should have credited Sandra. Instead of crediting Sandra, you have credited Gita. So what you have to do? You have to credit Sandra and debit Gita. So the entry will be Sandra account debit to Gita account debit. So the entry will be Gita account debit to Sandra account debit. Gita account debit. Done. Amount it should be the no debit. So now rectification. So this is how you have to pass the rectification entries. So here you can write. So it should be in debit column. This should be in credit column. Machine account debit, Mumtaz account credit, sales account debit, finance account credit, delivery van account debit, Yunus account credit, sales returns account debit, Ravni account credit, Geeta's account debit, Sandra's account credit. What is the amount? So the amount is 1300. So all these are rectification entries. So if you observe, all these are rectification entries. None of these entries will come either in the neither of the books of primary, neither in sales register, sales this one journal, nor in purchase journal, nor in sales return journal, nor in purchase return journal, nor in cash book. Neither of the books that will come in the residual book, that is journal copy. So carefully you have to do this. So this is how we have to record. So this very important aspect. So entire chapter is based on this suspense account, rectification, suspense account. Lot of questions are asked in AS level. IGCSE also a lot of questions have been asked. So you have to be very thorough in this aspect. The debit and credit aspect you have to be very. So we'll catch up in the next class. Till then. Yes, friends. This is these are exam practice questions from books of primary. So this is again from David Hopkins. So let us discuss. So exam practice question. So this is basically number one. Panium purchase goods for 1000 less 25% trade discount. So trade discount is never recorded but should be considered. So that is 1000 minus 25% is 250. She was allowed a cash discount of 10%. So cash discount will be considered at the time of payment. So entry will also be passed. What amount should she enter in as purchase journal? Purchase journal she has to record 750. So discount is never recorded at the time of purchase entry. Trade discount is recorded. Trade discount is recorded, but cash discount is not recorded at the time of in the purchase journal. It is not recorded in purchase journal. Next, Lara purchased goods costing 1800 less trade discount of 30%. So 1800 minus 30%. So that is equal to minus 30%. 160, 1260. So that is 1260. Okay, so she was allowed a discharge discount of 5%. She was allowed a cash discount of 5%. She has to pay less. So how much she has to pay less? She has to pay 63 less 5%, no? 5% of this. So 63 less. So this one. This should be how much should Lara have to pay for the goods? It is 1194. So when we subtract this and this, it is 1194. exam style questions. So similar questions have been asked in the AS level examination. So these are not A level exam, A level questions, but AS level. So, but IGCSE also, they have been asked. So then coming to this, Cora sent an invoice to Maria for 2000 less 20% trade discount. So Cora sent an invoice to Maria for 2000 less 20% trade discount. So okay, so 20,000, 2000 less 20% trade discount is 2 to the 4, 1600. So 1600. So trade discount will be considered, but never recorded. So we have to take the net amount. So 1600 it should be recorded with 1600. Cora has omitted to enter. She has omitted. So Cora has sent an invoice means she has sold. To enter in a sales entry. She has not entered in a sales entry. So obviously what will happen? Sales account will be understated by 1600, not 2000, because trade discount will be recorded. So even Maria's account also will be understated by 1600. The answer is, so then come this one. Shivam has received a check of $1540 from Rajan to settlement of credit of 1700. How should this be recorded in Shivan's account? So what has happened? Shivam has received a check. So he has received a check of 1540 from Rajan to settlement of 1700. So it is a discount factor. There is a discount factor of 1700 minus 1540 is 160. So this should be recorded. Discount allowed should be recorded, and it should be recorded. How should this be recorded in Zoom? So nowhere this should be recorded. Bank account this should be recorded, and this should be recorded. We have to consider as if we have received full money from this. So entry will be this one will be recorded. So accordingly, the debit and credit aspect should be very very clear. So practice these questions again and again. Often more and more questions you have to practice. So maybe a lot of MCQs we can discuss in the meantime, but before that, let us go through the entire syllabus so that the concepts are clear. Otherwise, just by solving the question papers or just by working out the question papers near the exam is not sufficient. Remember, slow and steady wins the race. So never ever think of shortcuts. Never resort to shortcuts. Start studying from day one. So start studying from the day one. So let's catch up in the next class. Basically, the next class is how to balance the account. Till then, dear friends, welcome back to Sharsha Virtual Classroom. So this is balancing of account. So this is a question from David Hopkins. So basically, it's a very small question. So, but in this lesson, we'll learn how to balance an account. So balancing is nothing but totaling of all the values and then finding the difference and putting it on the right place. So that is what is balancing of account. So this is the last step before preparation of trial balance. After this, we will be preparing trial balance. So before that, we should know how to balance the ledger accounts. Trial balance is prepared on the basis of balances of ledger balance. Salary is the present. So in this question, this is a small question. So first, let us make a list of debits and credits so that our writing ledger entries will become easier. So let's classify and write which account will be debited, which account will be credited in which case. So paid into savings, paid is savings into business bank account. So bank account, money is coming in bank account and capital. So bought goods for resale on credit from Joe. Bought goods. So purchases on Joe. Paid rent of a shop by check. Rent. Sold goods to Barney on credit. Sales. Barney. Sales. Made cash sales of goods. The money was used to set up cash flow. Made cash sales of goods. Cash sales. Return faulty goods to Joe. Returns. So return to Joe. Joe paid by check for the goods he had bought after deducting a cash discount. So Joe has paid means paid Joe by check. So we have paid to Joe and we will receive a cash discount. So this is discount received. So then by check means obviously it's bank. Then paid for postage by cash. So postage. So now we have to prepare all these accounts. Bank account, capital account, purchases account, Joe account. So ledger accounts, prepare necessary ledger accounts. The column cash. The column cash book. Record the transaction. So most of the entries will come in cash book also. So and some entries will come in ledger account. So then balance the accounts at 31st March and bring down the balance. So we have to balance out. So then what we'll do? So we'll start preparing all the accounts one by one. Okay. So capital account, purchases account, Joe account, rent account, Barney account, postage account, sales account, purchase returns account, and discount received account. So all these accounts we have to open. So now, what is the first entry? Paid is savings into bank, business bank account, 10,000. So that is on March 1st. So March 1st, bank account should be debited with capital and capital account should be credited with bank account 10,000. March 1st. Capital account should be debited with than 10,000. So then credited capital account will be credited. So capital account will be credited on March 1st. March 1st. So bank account. Then first entry is completed. Bought goods for resale on credit from Joe. Bought goods for resale on credit from Joe. So that is on March 2nd. Purchases to Joe. March 2nd. Purchases. Purchases account. And Joe's account should be credited. Purchases. So what is the amount? Amount is 4,000. Then, what is the next entry? Paid rent of shop by check. Paid rent of shop by check on the same day. Paid rent of shop by check. So March 2nd. Account. So March 2nd. By check means bank account. What is the amount? The amount is 1,000. So the entry is complete. So now come to the next. Sold goods to Barney on credit. Sold goods to Barney on credit. So sold goods to Barney on credit. Sold goods to Barney on credit. Barney. What date? So it's on 3rd March. On 3rd March. 3rd March. know why it is debited, why it is credited, right? So these all these aspects are clearly explained in chapter 1 and chapter 2. So if you have any doubts, you can just revert back to chapter 1 and 2 to see which accounts will be debited and why and all those things, so that the concept is clear. So don't assume, presume without with half knowledge. Don't try to do the problem. So be sure, 100% sure before passing the end phase. So don't commit any mistakes, so that the concepts are clear. So if the concepts are not clear now, then everything will go wrong. So the amount is 2,000. So everything will go wrong. So be careful. Then, so the entry is complete. Sales entry is also complete. Made cash sales of goods. The money was used to set up cash cash flow. So you are receiving cash on selling of goods, cash sales. So cash sales are happening. So sales are always sales, whether they are cash sales or credit sales, or if you want, you can write it separately, credit sales and cash sales separately. So this since this is simple problem, it's okay. You can write both merged together. So cash you are receiving. How much you are receiving cash? It's 550 bucks. So 550 you are receiving cash. So when is it? It is on 3rd March. 3rd March. So March 3rd. So cash. So otherwise you can write CS also. It's not an issue. It is not wrong to write sales. And in cash column you write. So what is the meaning of cash note? To keep it handy. To keep it handy. Cash to keep it handy. They have sold some goods and they have kept money. So sales, the same date, cash account 550. Okay, now coming to the next part. Returned faulty goods to Joe. Return faulty goods to Joe means from Joe we had purchased, now we are returning. So it is purchase returns 200. Fifth, on fifth there is purchase returns. On fifth there is purchase returns to Joe. How much? 200. 200. Don't forget to mention the currency. So to whom we are returned? Joe we are returned. Where is Joe's account? Joe's account is here. So March 5th. What is the value? 200. 200. 200. So final entry is complete. So now come to paid Joe by check the goods we had bought after deducting 5% cash discount. So cash discount. So we have to calculate how much you are paying. So 4,000 is the purchase and 200 is the return. So 3,800. 3,800 you have to pay 5% cash discount. You have to deduct and pay 3,800 minus 5%. 3,800 minus 5%. You have to deduct and pay. $190 is the discount. 190 is the discount. 190 is the discount. So you are paying Joe. Discount. So 190 is the discount. So how much you are paying? 3610. 3610. You are paying. So when you are paying this, you are paying this on 7th. So you are paying this on 7th. So you are paying this on March 1. What is the amount of rent you are paying? Rent you have paid 1,000. Rent you have paid 1,000 and you paid it by check. So this is also done. Now cash discount. Paid for postage by cash 20. Paid for postage by cash 20. So paid for postage by cash what date? 7th. Postage. Postage account. By cash. So postage account you have to enter in postage account also. So you have to enter in postage account. Cash 27th March. March 7th. So Joe you have paid, right? Very gently related to Joe's bill. You have paid to Joe. How much you have paid to Joe? You have received cash discount picture of the discount received and you have paid money to bank account. So bank account is 3610. find the discount received. So discount received also should be entered. Discount received is again. So Joe has Joe discount. So 190. So the entries are over. So all the entries have been made. So please cross check whether all the entries have been done. So you can cross check, I am sure, but you also cross check. Then now prepare the necessary ledger accounts and 3-column cash book. So we have prepared 3-column cash book. Balance the accounts at 7th March and write down the balance. Now we have to balance.